एवरीवन, गुड मॉर्निंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव सेशन। फिलहाल स्टार्ट करें क्रूड ऑयल और नेशनल गैस को। देखोगे क्रूड ऑयल कल यूएस मार्केट क्लोज था, फ्लैट ही क्लोज हुआ है। अभी फ्लैट ओपन हुआ है, लेट्स सी कुछ ट्रेड बनता है तो देखते हैं। नेशनल गैस में कल तो कंप्लीट बुलिश था मार्केट। एक तो रेजिस्टेंस था, ब्रेकआउट कर दिया था। दूसरा रेजिस्टेंस था, वहां से थोड़ी बहुत सेलिंग आई थी। दैट सेलिंग इज कंटिन्यू। नीचे कल का जो रेजिस्टेंस एरिया ब्रेकआउट हुआ था उसी एरिया पे वापस पहुंच गया है, तो देखते हैं यहाँ से एक वापस बाइंग उसी एरिया के आसपास अभी एक्चुअली ओपन हुआ है। बट देखना पड़ेगा क्योंकि वो ऑलरेडी एक ब्रेकआउट कल कर गया था, रिटेस्ट नहीं किया था, तो मोस्ट प्रॉब्ली वहां से एक सपोर्ट फिर से लेने की कोशिश करेगा। निफ्टी मॉर्निंग पे ओपन हुआ, बड़ी कैंडल बनाई 15 मिनट की। मैंने कल ही बताया था, कल भी कोई ट्रेड नहीं था, आज भी कोई ट्रेड नहीं। कल भी एक रेंज के अंदर ही चल रहा था, अभी भी या तो अब रेजिस्टेंस पे जाए या फिर नीचे थोड़ा और आए सपोर्ट एरिया के आसपास, तभी कहीं ट्राई करेंगे। अदरवाइज आई डोंट सी एनी गुड ट्रेड लाइक जहां पर कंटिन्यूअसली मोमेंटम मिले इन ऑप्शन बाइंग और सेलिंग। वो मुझे नजर नहीं आ रहा है, तो फिलहाल के लिए देयर इज नो ट्रेड इन निफ्टी फ्यूचर एज वेल एज इन बैंक निफ्टी फ्यूचर। ठीक है, रेजिस्टेंस से परसों से मैंने पहले ही बताया था 16 के आसपास, 16 को रेजिस्टेंस पे आया था, वहां से सेलिंग कंटिन्यू ही है। और नीचे सपोर्ट अभी काफी दूर है। लेट्स सी, अगर वही 25,150 के अप्रॉक्सीमेटली प्राइस अगर आता है तो देखेंगे। अदरवाइज कोई नया सपोर्ट बनेगा तभी ट्राई करेंगे बाइंग का। अदरवाइज देयर इज नो ट्रेड राइट नाउ इन 15 मिनट एटलीस्ट इन निफ्टी। कोई सपोर्ट वगैरह अगर फ्रेश बनता है तो देखते हैं, और कुछ नहीं है। बाकी गोल्ड एंड सिल्वर कंटिन्यूसली बुलिश है। गोल्ड अर्ली मॉर्निंग पे ओपन हुआ था, थोड़ी बहुत प्रॉफिट बुकिंग आई थी आज फॉरेक्स में अर्ली मॉर्निंग ओपनिंग होने के बाद, बट अगेन नया ऑल टाइम हाई टच कर दिया ऑलमोस्ट अभी कुछ देर पहले। सेम फॉर सिल्वर, कल कंप्लीटली बुलिश ही था। हाई लेवल से थोड़ी बहुत प्रॉफिट बुकिंग फॉरेक्स मार्केट में फिर से देखने के लिए मिली अर्ली मॉर्निंग। अभी अपने ऑल टाइम हाई से थोड़ा सा फिर से दूर है, बट या ओवरऑल बुलिश ही लग रहा है फिलहाल के लिए, साइडवेज टू बुलिश। कहीं से भी कुछ ऐसा साइन नहीं है कि मार्केट विल पुल बैक फ्रॉम दोज एरियाज। एक बार लेवल अपडेट कर देते कि कल का ही जोन है, अभी भी रेजिस्टेंस है, दैट इज स्टिल अ रेजिस्टेंस एरिया। वापस ऊपर आएगा तो इसी लेवल से वापस एक सेलिंग का प्लान रख सकते हैं, अभी भी रेजिस्टेंस इंटैक्ट ही है।
News when you want it with Bloomberg News Now. I'm Doug Krisner. Some European leaders are taking a stand against President Trump's threat of new tariffs. Now, Trump announced a new 10% levy on 8 EU countries opposed to his plans to seize Greenland. In response, French President Emmanuel Macron intends to request the activation of the EU's strongest trade countermeasure. However, German Chancellor Friedrich Merz is trying to persuade Macron to tone down his response. At the same time, UK Prime Minister Keir Starmer criticized Trump's move.
Alliances endure because they're built on respect and partnership, not pressure. That is why I said the use of tariffs against allies is completely wrong. It is not the right way to resolve differences within an alliance.
That is British Prime Minister Keir Starmer. Meantime, the managing director of the IMF, Kristalina Georgieva, says it's too early to assess the impact of a potential new trade war between Europe and the U.S.
Too early to say what exactly the impacts of new trade tensions is, but we know that when we have more uncertainty, bad for business, bad for households. The best way forward, find a path to agreement. And that is going to be good for everybody, everywhere.
Kristalina Georgieva, the managing director of the IMF, speaking to Bloomberg from the sidelines of the World Economic Forum in Davos. We go to Spain next, where more than 36 people were killed when a high-speed train derailed and hit another train coming from the opposite direction. Prime Minister Pedro Sanchez declared 3 days of mourning and canceled his trip to Davos due to this accident.
I want to express to the victims, to the relatives, that from the central government, in coordination with all the other administrations, we're going to protect them. We're going to assist them in whatever they need.
That is Spanish Prime Minister Pedro Sanchez speaking through an interpreter. Now, Spain has one of the world's largest high-speed train networks. Services have come under pressure recently, given a surge in demand. Tomorrow will be the third opportunity of the year for the Supreme Court to issue its ruling on the legality of President Trump's trade policy. Bloomberg's Nathan Hager has more from Washington.
The High Court has gone through 2 opinion days this year without ruling on President Trump's emergency tariffs. Investors will see whether the 3rd day is the one. The justices have set this Tuesday as their next opinion day. As usual, the High Court never says which cases it will decide on until the justices return to the bench. If a tariff ruling doesn't come this week, it could be a while. The Supreme Court's scheduled for a month-long break starting after this Wednesday. In Washington, I'm Nathan Hager, Bloomberg Radio.
Wall Street returns from a 3-day holiday weekend with a focus on earnings. More from Bloomberg's Charlie Pellet.
So far, we've heard from about 30 of the S&P 500 companies as investors show a newfound affinity for firms that benefit most from an accelerating economy. Cameron Dawson is Chief Investment Officer at New Edge Wealth.
Now that we're in 4Q, you have seen earnings estimates get raised over the course of the last 6 months, and that is also the same for 2026. 2026 earnings estimates have been getting ratcheted higher over the last 6 months, and they're now sitting at $310 a share.
This week, we hear from Capital One, Netflix, Intel, United Airlines, 3M, and Johnson & Johnson. In New York, Charlie Pellet, Bloomberg Radio.
MLK Day celebrations took place around the U.S. today to honor the life and legacy of Dr. Martin Luther King Jr. Today, King's youngest daughter, Bernice, gave an address in observance of the national holiday.
We are living in a moral crisis, not symbolic, but so deep. Our humanity is at stake.
That is Bernice King. The Justice Department is reportedly considering loosening gun regulations as a way of gaining support from gun advocates for the Second Amendment. The Washington Post reports the DOJ is considering easing restrictions on private gun sales and loosening regulations around shipping firearms. These changes will also address the types of firearms that can be imported. Now, gun rights groups have previously criticized Attorney General Pam Bondi for not being aggressive enough in easing firearm restrictions. In sports, the Indiana Hoosiers have won the college football playoff national championship, beating the Miami Hurricanes 27-21. And that is news when you want it. With Bloomberg News Now, I'm Doug Krisner, and this is Bloomberg.
Donald Trump is threatening to use tariffs to get his way over Greenland, and that is threatening a new trade war between Europe and the US. The president announced a 10% levy on goods from 8 European countries starting on the 1st of February, then rising to 25% in June, unless there was a deal reached for the US to purchase Greenland. Now, these tariffs are targeted at the countries who said they'll take part in token NATO military exercises in Greenland, which presently is an autonomous territory and part of the Kingdom of Denmark. So after these words of warning from the president, the question very quickly became, what can the European Union do? Well, the bloc has already approved $108 billion in retaliatory tariffs on US products, but has paused their implementation while a diplomatic solution is sought. President Trump has repeated his claim that the US needs to own Greenland for security reasons, even insisting that it would strengthen NATO. But there may be other reasons at play here. In a letter to the Norwegian Prime Minister, President Trump expressed his grievances at not being nominated for the Nobel Peace Prize. That prize is awarded not by the government of Norway, but by an independent committee. If President Trump follows through with a full 25% tariff threat, it could cut the targeted country's US exports by as much as 50%. And all of this could prove an unwelcome interruption into the rally of European equities. They have outperformed their US peers for the last 12 months.
Momentum in this EM rally?
Momentum. I'd just be remiss to not mention that Clearbridge is part of the Franklin Templeton family. So thank you for mentioning that fund. There is momentum like we haven't seen in a long time. When we talked last year, I had recommended for our global investors to, while we were very positive in the United States, to be overweight emerging markets and to be overweight international stocks. I think that that momentum is continuing. I haven't been in a situation where two different things are going on. As you've seen with so many interviews of the different strategists from different places, there's probably more enthusiasm about 2025. There aren't very many strategists out there that are actually negative. But we're still in a situation where most, certainly American investors, but also global investors, are heavily underweight outside of the United States, overweight in the United States, and they're very underweight emerging markets. My history has been as a global investor, and it's somewhat been disappointing to me the last few years. Everybody wants to talk to me about the United States, but now there's much more interest in emerging markets, and particularly Asia.
Might we see a broadening? A lot of the conversation has been around AI and tech, even in EMs. I'm just wondering, with a weaker dollar, with healthier valuations, in fact, cheap valuations, could we see a broadening in 26?
So our major theme is broadening within 2026. It was somewhat our theme in 2025 as well. So within the United States, we think we're still positive on AI stocks, but we think that what we're starting to see is AI get into the economy, get into the broader companies and increase productivity. So we see the investment opportunities broadening within the United States. So we're recommending more broadening, smaller caps, a wider set. Now, we move that further to other markets outside of the United States, and we continue that theme. So we're banging the table, as we did last year, for global investors to increase their exposure, because as I said, I think they're underweight outside of the United States, and our best ideas are Japan and emerging markets at this point. And within emerging markets, we are positive on emerging markets, both in terms of from a fixed income perspective. Last year, emerging market fixed income was a great outperformer as well. That's that's a sign of broadening too, right? That the currencies are quite broad. Emerging markets have been much more responsible in some ways with their economies than the developed markets, particularly this last couple of years. And that's a broadening theme too. So we're looking at emerging markets from a very broad perspective. Yes, we have funds like the ClearBridge Fund that really focuses more on the AI and have had great performance, but overall, we're quite positive on emerging markets as a broad investment theme.
You're banging the table. We sure hope people are listening. Do you buy the dip? What indicators are you looking at to suggest a good entry point?
Well, it's tough, and that's why there's so much cash sitting on the sideline, especially with AI stocks. I think that first of all, people might want to look at reallocating their investments from probably being overweight the United States, probably being over AI. It's not that we don't think AI is going to do well. It's just that it's a risk of concentration. And it's a reason we think that people should move more to emerging markets. And then, yes, we're positive on the year ahead, couple years ahead, but it's going to be a rocky road. We're not going to be surprised if we see a pullback of 10%. In fact, we almost always see that in election years, in between presidential election years in the United States. Almost all the time, the market goes down during that year and then ends the year positive. So certainly entry points are any correction. But for most investors, they've been sitting on the sidelines waiting for the market to correct. And that's probably the wrong approach. Probably consistent, what sometimes is called dollar cost averaging, and just working your way into the market is probably best, because my guess for most investors is they're underweight outside the United States and particularly underweight emerging markets.
How closely are you watching central bank policies? Expectations are that the dollar will remain weak. Expectations are that the Fed will cut, whether it's 1, 2, or 3 times. And we're talking about that policy divergence. How are you looking at that? How do you play that best?
So we're playing that both on the fixed income side and the equity side. I think that unfortunately, the United States Federal Reserve and monetary system has lost some absolute credibility, but also relative credibility. And that's why there's been a flight to hard assets, gold particularly being an example of that. There's more uncertainty in the United States. I sometimes in the past have expressed some uncertainty about emerging markets or China. But right now, those countries on a relative basis are more responsible than the United States. We don't know for certain what's going to happen in the United States with monetary policy. Certainly the situation with Chairman Powell this last week, having an unprecedented attack on him, but making an unprecedented response to that is something we really have to look at. And it creates an uncertainty. Last year, we thought the dollar would fall. It didn't fall as much as we thought. This year, we don't have such a strong view on the dollar. We don't think it'll rise, but we're not really looking for a big fall in the dollar. And we think the markets can outperform without that. Now, if there is going to be relative performance versus the dollar, we think that'll be in emerging markets. So we're still very positive on emerging market debt.
Emerging market is looking attractive, but you say the U.S. is still the place to be. I just want to quote what you said, that they have superb fundamentals, superior profitability, options unmatched anywhere in the world. So when you talk about this rotation, we've seen this rotation from the U.S. to elsewhere in the world, especially in the U.S., from the U.S. to Asia to EMs. Are they wrong in doing that if the U.S. remains a place to be?
Well, it's not just earnings and economic growth. It's actually pricing as well. And the United States is still expensive relative to other markets, including emerging markets. And we actually think that emerging markets are going to have really strong growth this coming year. And I keep reemphasizing this point, but there's been a dramatic increase in overweight in the U.S. When I first started managing global funds, the U.S. was 40% of the global benchmark. Now it's close to 65%. I just don't see that relative growth happening. And I think there are just a lot of opportunities outside the United States. And I would just encourage investors to think of risk-adjusted return, and that there's probably less risk diversifying your portfolio outside the United States. I think you have Mark Mobius talking after me, and one of the great things Mark did for emerging markets is really show that investing in emerging markets can reduce the risk of your overall portfolio, and that's what we believe as well.
So the theme has been rotation from the U.S. to Asia, somewhat also rotation out of big tech, mega stocks to small caps. I'm just wondering what your thoughts are on this, because small cap stocks also seem to be highly leveraged. Therein lies the risk.
Yeah, small cap stocks are a place that you really have to differentiate the stocks. I don't think as a category you want to just go into small caps. At least in the United States, half the small cap stocks are not even profitable. So which half of that benchmark does well is very much dependent on a risk and risk off trade, and very much dependent on stock picking. That said, we do think that there's a lot of tailwinds in the economy, particularly the U.S. economy, but really globally, and that is going to be that broad upswing for the economy is going to be popular for small cap stocks, which have dramatically underperformed bigger stocks for quite a period of time over the last 5 or 10 years. So there's a lot of catch up there that can do with those smaller cap stocks. So we think that's a place, once again, most people are underinvested. There's a lot of opportunity. That's a stock picker's market.
Stephen, I want to focus on China a little bit. It's gone from uninvestable to an outperformer. In fact, Goldman says it sees a 20% upside for China this year. Are you as upbeat, and what's fundamentally changed? Is it just about valuations, or have China's fundamentals really made a shift?
Well, I always thought it was a very crazy question. I've been at China, I've been in China now over 30 years, every year. And I've always just thought, China uninvestable was sort of a silly thing to say. That said, I think there's a higher risk premium in China, particularly for foreign investors. But that whole idea about China being uninvestable and the money fleeing of that, a lot of it not because of investment decisions, but more because of political decisions, created a great undervaluation and an underappreciation for China. So I think certainly in the short term, that's why China's performed so well. A combination of China doing a bit better than expected, but mostly because investors had abandoned China. So we're not probably the biggest interest we have in emerging market funds are emerging market ex-China, or at least emerging markets ex-China, except for the AI companies. We're still positive with select companies in China. We're just cautious. We think there's a greater risk premium there.
And Goldman says that the rally in China will be pretty much driven by earnings. Do you share that view?
Yes, we do share that view. And, earnings surprise on the upside. I think if you were really to look at the risk around AI for Western companies, is the hubris that the Western companies are really leading AI. And I think we've seen that a little bit over the last couple of years. But I think China has a different model for how it's approaching and implementing AI. But I think it's a real competitor, and I think it could inflate. It is one of the risks, and it could inflate the Western model of how, the very expensive Western model of approaching how AI modeling is done.
Is there anything else that investors should be looking at in China that's been, I guess, underappreciated?
Well, we've always thought the other area that's underappreciated in China, and it hasn't had the growth that we expected, but I think there's still a lot of opportunity, is the consumer. And ultimately, China is going to need to turn towards a model to increase consumption. China now has world-class consumer companies, that are incredibly competitive in China, especially China consumption growth, but are competitive globally. And I think that those companies in that area is probably underappreciated.
The thing is, China has struggled to reverse that consumption story. It's gone on for quite some time. It is understandable why people are reluctant to buy into the consumption story in China.
It's very understandable, but like you said before, it's also a very undervalued area. So it doesn't have to perform very well. I think that's, the model when we look at the United States. Yes, it looks like the U.S. is going to grow. Yes, it looks like those AI companies are going to do well, but they're priced for that as well. Whereas, there's no love affair with China right now. It's up, but there's not a lot of flow going into China. So it doesn't take much for China, or if you want, we could talk about India right now. It doesn't take much for them to perform very well because there's not the expectation that they will. That's what happened with Europe.
Let's talk about India. It's been a laggard. India has been a laggard, yet many investors are still optimistic about the longer-term prospects of this market. How long do you wait, and what's really holding it back?
Well, I was just in India last month, and boy, long-term and structurally, I'm just a real India bull. I've been an India bull for probably 20 or 25 years. But India's always been expensive. And, kind of a bad joke is that India gets in its own way. So I think India last year was just kind of deflated. It didn't have the growth that was expected. It didn't have the capital investment that was expected. But we're not looking for a real strong year in India. India hasn't gotten off to a very good start so far. But particularly if there's any fiscal stimulus, we think India will do better. India is starting to have some more capital expenditure. If that happens, India will do better. And India is just structurally, with the support of the government, structurally, I think, going to be able to have an awful lot of growth. I think the exciting thing for me, having been in emerging markets for quite a while, let's say 30 years or so, and watching the difference in growth between India and China, is that China's done such a phenomenal job on its economic growth, and India has a lot of catching up to do, and it has the possibility for greater growth over the next 5 or 10 years. That say I don't think China does, because China's already done that.
So, Stephen, if you believe in India's long-term story, its long-term potential, can you justify the premium that India commands today? Would you be a buyer at current levels, or would you be waiting?
We would be a selective buyer of some industries within or some industries and companies with India. One of the most exciting things to me about India is that for a very long period of time, it's still a market where stock pickers can outperform. And that's just, it's just not so true in terms of the efficient markets like the United States. And so that's, I think, where there's an opportunity. I wouldn't be really underweight India in an emerging markets portfolio, because it is going to outperform over the longer term. And we tend to have a longer term outlook. And it's times like this. I mean, when I look back 25 years, there's maybe, 4 different times where people aren't very positive on India. And if you got into India in any of those times, you did really well the next few years. And this may be that many times. I mean, I don't know how many people you've talked to, but I don't think strategists are really enthusiastic about India right now. And to me, that means it's probably a little bit of an opportunity.
So if you take a look at your EM portfolio, how should India factor in? I mean, we know that when it comes to Mark Mobius, he's talking about 20%. He's looking at getting to 30%. How much should India be factoring into that portfolio?
30% of the portfolio. We're probably not as high as that in terms of percentage of the portfolio. You have to realize Franklin Templeton now is so big, and we have a lot of different emerging market managers have different views. So the ClearBridge fund that you just mentioned is looking at emerging markets in India really from a AI perspective. But for me, and the view that I take, kind of looking at a very broad set of investment opportunities. I think there's a lot of opportunities even in fixed income in India. I think there's opportunities in private investments in India. Private debt in India has a lot of opportunities. There's a huge spread there. But the real opportunity in India, as I mentioned, is I think it's an inefficient market. So I think there's still opportunities there for investors who are willing to do the work and really make picks. And then if you do that in an emerging markets portfolio, I would at least, I'd at least equal weighted, if not overweighted. I am overweight India personally.
Are there reforms, policy changes, and steps that the government and authorities can take to make the Indian market more attractive? We know that foreign funds have been making exit, but that's mainly to do with the weakness in the Indian currency.
Well, foreign funds, perhaps, yeah, and that's a currency issue. But I think the Indians could make it still a more friendly investment environment for foreigners. There's still work to do on that. I think that probably rightly, the Indian government has been hesitant to do a lot of fiscal stimulus, but I think it probably needs to do a bit more fiscal stimulus at this point. And it just needs to be more friendly towards capital investment. I think that there's a lot of interest, of course, in AI right now, but there's also interest in just general other investment opportunities. And I'm guessing over the course of the next year or two, there's going to be a real surge for opportunities outside of AI. And I think that's an area where India, because it has such huge infrastructure needs and such huge growth potential, I think that India can be a diversifier investment opportunity for those who are global investors.
Stephen, I want to zoom out right now. You're a global investor. You have a global footprint. If you take a look at the macro environment with rising geopolitical tensions spanning the Middle East, Venezuela, even here in Asia, I'm just wondering, are investors underpricing risk right now, shrugging off all the various developments when we're seeing new headlines every single day, taking, the markets by surprise, but even then, that's not enough to move, their risk appetite?
That's a great and in some ways a little bit of a profound question in my view, because as a mostly long-term equity person, I was mostly focused on companies, and I think most equity investors are mostly focused on companies and what we call bottom up, and then maybe some top-down economic, but not particularly interested in geopolitics. Perhaps it's because of this role I have now, but I noticed that there's been a dramatic increase in the need to know what's going on within geopolitics and how that's moving markets. So I think the way that investors have to look at the world has to be through geopolitics. Now, here's the really bad news. The really bad news is investors have no way of knowing how to price in geopolitical events. They just have a terrible track record. And that's the concern. And if you were to look at the headlines, you would not say the market is performing in the way that it is. It doesn't make sense. It doesn't. There's a mismatch there, and I think that's a risk. But it's unfortunately a risk that's very difficult to price into valuation models.
Could under oil. I'm really watching what happens vis-a-vis Iran, where things, as Jumana said, have been cooling down from a U.S. perspective and since the last week. How much new supplies come on from Venezuela? And maybe more realistically, as the market digests the losses from Kazakhstan. which are really a function of Ukrainian drone attacks. So overall, to the extent that there is consolidation of government forces in Syria, and Syria could begin to welcome some more investment in production, that, in my mind, is a good thing, but it's a long-term play. And it may be more important for both regional stability and economic outcomes in the region than necessarily the oil market.
Your analysis is always valued. Rachel Ziemba, founder of Ziemba Insights, joining us there from Dubai. Thank you so much, Rachel, as always, for joining us. Now, coming up, we turn to the region here. Zambia becomes the first African country to let Chinese mining companies pay taxes in yuan. We'll bring you that story next. This is Bloomberg.
Bloomberg Invest, where intelligence meets capital. In the heart of the financial district, powered by Bloomberg's award-winning journalists, bringing together the market's most influential minds.
A big part of our job thematically is understanding the risk environment we're in.
We are facing a once-in-a-generation technological disruption.
We will continue to have a convergence in credit markets. Liquidity at moments in time when there's a lot of volatility is challenging.
Bloomberg Invest, March 3rd and 4th in New York.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next?
On this episode,
there's a need to update our regulation on the gambling industry. The current situation cannot stay as it is for long. It's unsustainable for the industry as a whole.
Premieres January 23rd, only on Bloomberg.
Investcorp's executive chairman sees an improving outlook for IPOs in Gulf markets. Speaking to us in Davos, Mohamed Alardi says he believes the region offers a very compelling long-term investment market.
The IPO market is improving in the Gulf for sure. I mean, Oman, for instance, was one of the high growth markets last year. But I think even globally, we see an improvement in IPO's markets.
Now let's pivot to the region. Zambia has become the first African country to allow Chinese mining companies to pay taxes in yuan. The move highlights Beijing's broader push to reduce reliance on the dollar and expand the Chinese currency's role across Africa. For more, we're joined by Bloomberg's Matthew Hill in Cape Town. Matt, you've dug into this quite a bit in your own reporting. How significant is this latest move?
Hi, Jen. Well, for Beijing, it's a noteworthy move in President Xi Jinping's move to internationalize the UN. And just to look at how the mechanics of this work in Zambia, it all starts with copper. Zambia is Africa's second biggest producer of copper. China is the world's biggest consumer of copper. And China also happens to be Zambia's biggest bilateral creditor. So what this means is that Chinese mining companies in Zambia can sell their copper to buyers in China, and receive yuan, take that yuan and pay their royalties and taxes to the Zambian government, which then will use that same currency to service its debts to China. So it effectively cuts out the middleman of the dollar, reducing transaction costs, etc. So it basically slowly but surely chips away at the use of the dollar.
And Matt, if we just take a zoom out of just Zambia and take a look at across the continent, the potential for this, given the yuan's limited convertibility, it's still only less than 2% of global reserves. I mean, how much could the continent really contribute to China's influence with the yuan?
Well, Jen, this is just the latest move in a growing trend that we've seen in Africa, where governments are showing increasing interest in using the renminbi. Last year, we saw Kenya swap its dollar debt to China into yuan. We saw Ethiopia saying that it started talks to do the same. And Forex, the African Export-Import Bank, also last year sold its first Panda bond. Zambia itself is talking about a currency swap with China. We've seen a number of other African countries doing the same. And when you consider that China's Belt and Road Initiative reached a record $213.5 billion last year, with Africa being the biggest part of that engagement, it's no wonder that we are seeing a growing engagement and integration between the Chinese and African economies, including currencies.
Yeah. Right. And Matthew, you noted that President Hakainde Hichilema, his advisor, is saying that potentially the yuan can help insulate the nation from U.S. policy shocks. Interesting reporting there. Bloomberg's Matthew Hill, thanks so much for your reporting. Let's just take a quick look at where markets are. Risk off, as we mentioned, as continuing trade tensions between the U.S. and Europe play out. The U.S. is back online today after a holiday. And as you can see on the board there, futures looking negative to start Tuesday. That is it for Horizons Middle East and Africa, though. I'm Jennifer Zapasanja in Johannesburg. Stick with us for Daybreak Europe. This is Bloomberg.
Guys, ये crude oil में ध्यान रखना. Crude oil में ये resistance है. This is the resistance area. बट ये मल्टीपल टाइम टेस्ट हो गया और यहाँ पर देखोगे ना मार्केट काफी देर से कंसोलिडेशन कर रहा है, तो एक चांसेस है कि ब्रेकआउट हो सकता है. अभी हुआ नहीं है, तो अगर यहाँ पर एक सेलिंग की पोजीशन बनाते हैं, दैट विल बी रिस्की. दैट्स व्हाई आई एम सेइंग इट इज अ मल्टीपल टाइम टेस्टेड रेजिस्टेंस जोन. सो रिमेंबर, इसके ऊपर अगर निकल जाता तो बेटर था प्राइस. हम नेक्स्ट फिर ये एक मेजर रेजिस्टेंस जोन है ऊपर 5550-60 के अराउंड, और नीचे आता है तो फिर वो परसों का लो 5000. ये काफी बड़ा सपोर्ट जोन है, अभी भी इंटैक्ट ही है. बट या दिस इज द रेजिस्टेंस इन क्रूड ऑयल बट मल्टीपल टाइम टेस्टेड. तो यहाँ पर सेलिंग थोड़ा सा काइंड ऑफ कह सकते हो रिस्की है, रिस्की रहेगी. थोड़ा सा अगर सेल करोगे भी तो क्योंकि यहाँ पर अगर कंसोलिडेशन नहीं होता तो बेटर था प्राइस नीचे आ जाता कल की तरह. कल क्लोजिंग होते होते कंसोलिडेशन हो गया, आज अर्ली मॉर्निंग से कंसोलिडेशन पर ही है प्राइस इस रेजिस्टेंस जोन पे.
We begin this Tuesday in markets. Treasuries joining a global bond sell-off after Donald Trump's tariff threats linked to Greenland reignited trade tensions. The president's targeting of several European allies and the UK is raising questions about how the dispute could affect demand for US assets. For more, let's bring in Bloomberg Markets Live executive editor Mark Cudmore. Mark, there is a lot happening in markets this morning. The dollar's slide continues. US futures are pointing lower. Treasuries are selling off, along with JGBs, by the way. But is this the Sell America theme reignited, or, Mark, is it something else?
I don't think it's the Sell America theme reignited. I think, we've had a little bit of a catalyst for risk aversion coming from Greenland. So far, markets aren't reacting extraordinarily to that because we've seen so much this idea of TACO, Trump always chickens out, that theme, and they expect there'll be a backtrack. People don't expect the tariffs to be imposed. They don't expect there'll be a military war over Greenland. At the moment, they feel there's noise around this. They're going to price increasing risk aversion as a result of this theme, ongoing theme, which is unlikely to be resolved quickly. But it's almost being overshadowed by what's happening out of Japan today. JGB 30-year yields up 25 basis points, and that's what's now feeding into global bond markets, and will feed in much more later. You've got to remember this is the context of the US holiday yesterday. So we'll see yields in the European session jump higher. We'll then see that feed through to the US. It's really quite extraordinary what's happening out of Japan. And in many ways, that's becoming the bigger driver of risk aversion than what's happening out from Trump on Greenland. So I would say he's not catalyzed Sell America. He's catalyzed risk aversion with an overlay of wanting to diversify away from the dollar. And it's that kind of extra tangent which gives it a little flavor of maybe US assets underperforming in some ways the margin, but not in bond markets.
OK, we're looking at gold at a fresh record, silver up as well by a touch, Mark. Where else do you see the risk aversion showing up?
As I said, I really think that by far the most exciting thing happening today is in the Japanese bond market. And I think that's going to feed through globally because, this is a very large bond market. But also, it's not just that. It's the fact is that Japan owns assets all over the rest of the world. As those yields at home get more attractive, now bear in mind, 30-year yields are up 40 basis points, or I think it's 38 or 39 basis points, but about 40 basis points since Friday. So it's quite extraordinary moves. Now, once those yields go high enough, Japanese investors are going to start kind of returning home to their domestic market. And that means pulling out of assets around the world. And it also blows up the yen-funded carry trade. So this is a potentially massive kind of dynamic that is going on at the moment. And it's going to play out slowly because at the moment, there's no reason to go back into the JGB market just yet. There's no floor in that market. And given that we're going to election, we're expected to increase the debt profile in Japan. So that's the most kind of extraordinary dynamic in the very short term. And certainly the Japan election is going to stay dominant at the moment. You're right to talk about precious metals. They are certainly the beneficiaries of this demand to kind of diversify away from fiat currencies. You've got the governments behind the world's two biggest fiat currencies, the dollar and the euro, at increasing tensions, and people want to diversify away from those, and they want to go into real assets, and precious metals win on both fronts. As they gain from geopolitics, they're real assets. They're seen as a store of wealth away from fiat currencies. I'm a little bit worried about that dynamic. As risk aversion increases, and especially as you see bond markets sell off driven by what's happening in JGBs, then at some point the dynamic in precious metals could turn negative very quickly. Now, we're not at that point yet, but it's one of those markets where the positioning is very large. They've seen extraordinary gains that if there was a sudden pullback, it could become self-driving very quickly, and it could be very sharp.
Mark, thank you so much. That's Mark Cudmore, Bloomberg Markets Live executive editor. We'll dive into Asia markets in just a moment, but diving into the Greenland story, US President Donald Trump renewing his push for Greenland, claiming that he doesn't think that the European Union will push back too much. Speaking in Miami, Trump called the island a national security necessity to counter Russian and Chinese influence, claiming that Denmark lacks defensive capability.
Well, I don't think they're going to push back too much. Look, we have to have it. They have to have this done. They can protect it. Denmark, they're wonderful people. And I know the leaders, they're very good people, but they don't even go there. And, because the boat went there 500 years ago and then left, that doesn't give you title to property.
Bloomberg's chief Europe correspondent Oliver Crook joins me now for more. Ollie, we've just had Trump posting on Truth Social his exchange with the French President Emmanuel Macron. What do we know?
Yeah, Lizzie, I came here prepared to talk about the trade negotiations, but now about 19 minutes ago, Trump has come out on Truth Social and posted what appears to be a text message chain with the French president, Emmanuel Macron. This is what it seems Macron has written to the president. Again, all we know is that this is what Trump has posted. It says, from President Macron to President Trump, "My friend, we are totally in line on Syria. We can do great things on Iran. I do not understand what you are doing on Greenland. Let us try to build great things. One, I can set up a G7 meeting after Davos in Paris on Thursday afternoon. I can invite the Ukrainians, the Danish, the Syrians, the Russians in the margins." That's a sort of interesting note there. Two, let us have dinner together in Paris and together on Thursday before you go back to the U.S., Emmanuel. So this appears to be what Emmanuel Macron has written to Donald Trump, to an appeal to basically try to get more conversation and dialogue between the President of the United States and Emmanuel Macron and other G7 allies in the midst of what has been a very sort of chaotic few days here ever since Saturday night, when Trump has effectively announced those 10% tariffs that will be effective on February the 1st because of Europe's resistance of letting the United States annex Greenland. I do think it's interesting that Macron here is talking openly, he's talking to the President of the United States. It is now being shared openly to the public about including the Russians at the margins of some of this dialogue potentially on Thursday. So, you know, Lizzie, this is a very fast evolving story. It's changing very rapidly. Again, what we go into this Davos with is the President of the United States continuously reiterating the need to get Greenland, and now we're seeing potentially, a G7 meeting in Paris that's hosted by Emmanuel Macron on Thursday, and of course there's the emergency EU leaders meeting that'll be on Thursday evening here in Brussels. So we'll see how all this evolves.
So, Ollie, that's the transatlantic relationship. We've also got the German Chancellor Friedrich Merz and the French President Emmanuel Macron taking different views on how to approach the Greenland issue. What's likely, or what's looking likely, to be the European response to Trump's threats?
Yeah, we're going to have to wait for Thursday for that European leaders meeting to get that real exchange of views from all of these leaders. I mean, I think what we should say is that from the very beginning, even in the first trade war that we had last year, Emmanuel Macron is one that tends to come out swinging much more than Friedrich Merz. And there's a very obvious reason for that. The German economy is much more dependent on exporting goods to the United States than are the French. Friedrich Merz, basically in the first trade war with the United States, said that we'd rather get a fast deal than the perfect deal, trying to get things rolling, get things over the line. But I think that what will be very interesting, Lizzie, what I'll be watching for on Thursday is what the other countries of the European Union have to say. What does Italy have to say? How do they feel about it? They were not targeted by the tariffs. They sort of had a message of solidarity for the other Europeans. But what about the Eastern European countries? What about Poland? What about the Baltics? They're much more concerned of the United States abandoning the issue of Ukraine than they are potentially on Greenland. So we'll see what that debate sort of unfurls on Thursday here in Brussels.
OK, Bloomberg's Chief Europe correspondent Oliver Crook, we thank you so much. Now, let's get to the market that's already trading. Mark Cudmore flagged those outsized moves when it comes to JGB yields. Winnie Xu joins us from Hong Kong with an update on Asia markets. Winnie, that bond sell-off in full effect in Japan, but perhaps for more localised reasons?
Yes, exactly, Lizzie. As you mentioned, it is those concerns when it comes to fiscal budget and the government spending that's weighing on Japanese bonds, specifically after Prime Minister Takaichi confirmed her snap election to come next month. And here we're talking about, for example, the 40-year yield passing or hitting that 4% level, which is the highest level since debuting around 2007. And also, we did have a very weak bond auction when it comes to the 20-year JGBs. We're talking about the weakest demand since more than a decade ago, and now the yields here are up 20 basis points to its highest level since the 2000. Now, also when it comes to the Japanese stocks, the Nikkei here is down about 1%, losing for a fourth session. And yes, we did have that profit taking when it comes to the Takaichi trade rally, but also some concerns around how the spending might not have very clear sources in terms of its funding. Now, the Japanese yen here is still hovering around that 158 level against the dollar. When it comes to the broader Asia market, yes, that's still risk-off sentiment weighing on the overall market. However, we are seeing the Chinese market also losing a bit of momentum when it comes to kind of these pressure from the regulators to cool the market rally. And Kospi actually down 0.4% here after having risen for 12th session already. When it comes to the commodities space also red across the board. There is a bit of concerns when it comes to the demand in China after prices, for example, for copper has surged to records. Back to you, Lizzie.
Winnie, thank you so much. Great stuff. That's Winnie Xu in Hong Kong. Well, still to come, it's day 2 of Davos. We'll be speaking to the Egyptian Minister of Investment and Trade about plans to attract more foreign money into the country. That interview coming at 6:30 a.m. UK time. But first, we're going to be speaking to State Street CEO Ron O'Hanley as Trump's tariff threats test market confidence. That's next. This is Bloomberg. Good morning.
Bloomberg Invest, where intelligence meets capital. In the heart of the financial district, powered by Bloomberg's award-winning journalists, bringing together the market's most influential minds.
A big part of our job thematically is understanding the risk environment we're in. We are facing a once-in-a-generation technological disruption.
We will continue to have a convergence in credit markets. Liquidity at moments in time when there's a lot of volatility is challenging.
Bloomberg Invest, March 3rd and 4th in New York. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Welcome to the world of decentralized finance. Bloomberg is covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. It's just coming up to 6:15 a.m. here in London, and President Trump's posturing on Greenland, threatening to steal the spotlight ahead of day 2 of the World Economic Forum in Switzerland. Let's go live to Davos now, and we can bring in Bloomberg's Jomana Basecci with a special guest. Jomana.
Yeah, that is true. So geoeconomic uncertainty, geoeconomic confrontation even, and a lot of buildup ahead of that President Trump speech tomorrow. Really happy to bring in our next guest, Ron O'Hanley, State Street CEO. Really good to have you here with us.
It's good to be here.
Let's talk about the uncertainty that seems to be dominating so far into what is the very early weeks of 2026. And again, the landscape seems uncertain geopolitically, even economically as well. How is that shaping up some of the discussions you're having with clients?
Well, it's certainly been an abrupt change because we ended the year with, it seemed like uncertainty becoming less and less of a factor. There had been a lot of talk about tariffs and things like that through 2025, and I think the tariff landscape was more or less known. It might not be liked, but it was known.
Yeah.
And so we went into the year, I think most investors thinking 2026 is going to be a pretty good year, and we can talk about that.
Yeah.
But obviously, it's geopolitics that really have changed things. We saw what happened in Venezuela, which surprised people, and now Greenland.
Yeah, what impact do the geopolitics actually have on capital markets? I mean, because it seems to be a case a lot of the times where it dominates a lot of the news, but actually in reality, very short-lived impact on markets.
That's right. And I think that's what's playing out now, although certainly we're in territory as it relates to Greenland that we've never really seen before. So we'll see how it plays out. The next few days are actually going to be quite important.
Yeah. Do you see signs? I mean, perhaps it's a little bit early, but earlier on, my colleagues were talking about the potential for the Sell America trade to come back again. You know, last year there was a similar episode where people tested this thesis of U.S. exceptionalism. Are you beginning to see signs of that happening, or at least discussions?
Not really. I mean, there's certainly discussions around it, but it's not yet showing up in the numbers. And as you know, last year there was that same narrative, and we saw a little bit of it. But certainly by mid-year last year, that was basically over. And not only did we see a reversion back to the U.S., but also an over-indexing on equities.
Okay, so would you say people are actually overweight right now, U.S. assets? You know?
They would be overweight assets, and then they're also at an equity level that we haven't seen in over 15 years.
Okay.
So there's a lot of optimism, obviously, about the economy.
Okay, so let's circle back to what you were saying at the beginning, which is a couple of weeks ago, before the geopolitical storms, various geopolitical storms that have hit, most sentiment was pretty positive going into 2026.
And it remains positive.
Okay, and why? Why is that the case?
I think that if you think about it, there's a lot of factors that are setting up the economy to be quite good, led by the U.S. So if you think about it, there's the big, beautiful bill, which the real impacts of that in terms of business investment, in terms of the tax breaks, you've got tips. The average American is actually going to be taxed less, so that'll drive some consumer spending. But you've got a lot of other factors out there. I think tariffs had, again, up until recently, had been more or less factored in, and so now we know how to operate under those. You've got the dollar depreciation, which should help exports. Even things like the World Cup coming to the U.S. and North America broadly will drive a lot of spending. So the tailwinds in the U.S. are quite strong.
Yeah, I forgot about the World Cup. That's actually a good point.
Yeah.
How much of a swing factor is the Fed going to be? I mean, the market is pricing in about 2 rate cuts for 2026, and certainly the data recently has actually been quite robust.
Yes.
But you're going to get a changing of the guards. So how do you see that playing out and its impact on markets?
So I think you're going to get a change in the guard. Certainly a new Fed leader will have a lot of impact on direction. But over time, less so than I think people think. I mean, there's a lot of, if you will, safeguards in the system. I mean, the governors themselves have 14-year terms. The chair has a 4-year term. So you'll see some change for sure. But whether it'll be a departure from the way the Fed operates, which is very data-driven and what's actually going on. And right now, the Fed's facing, on the one hand, declining inflation, on the other hand, a pretty robust economy, and what's uncertain really is unemployment.
Yeah. Do you worry about the challenges to Fed independence?
I don't think it's good when there's a perception that the Fed is not independent. I actually believe what I just said, that there's a lot of institutional safeguards. But one of the reasons the U.S. has the position it does in the reserve economy is there's a lot of faith in that, and we need to make sure that the faith in that system is maintained.
Yeah. One of the big topics of discussion last year was private credit. I'm curious to see what State Street is doing in that part of the market.
So we operate in 2 areas in that. The largest area is we service
I just want to start with your key takeaways from that earnings result. 7% net profit decline, that was worse than expected, but how much of that was due to one-off restructuring costs, also charges linked to the new labour laws?
Yeah, if you look at it, we took a charge of about 302 crores rupees in our P&L as a one-off provision. Whatever we had to take has been taken. There is absolutely no impact on an ongoing basis. And adjusted for this, our net profits actually grew sequentially over around 4%, and it was flat year on year. So yeah, that was a significant charge that we had to take. Apart from that, we also took a charge towards restructuring of few of our associates in largely the European geographies. And that was also about $35 million or so. So, these both are non-recurring in nature. And when you adjust for that, our net profits actually grew quite well. On the back of our operating margins, actually, our operating margins have shown consistent improvement and came in significantly higher at about 17.6%. Most of this is operational, no one-offs. And we are hoping to sustain this in a narrow band going forward. Yeah, tell us a bit more about your operating margins. They did jump despite some pretty soft growth. So do you feel like that's the new normal, or is this margin protection in a soft market? We've been on this journey for the last 8 quarters, Paul. We've been improving our operating margins consistently over the last 8 quarters, and all through in the backdrop of a very weak revenue environment. Goes back to just operational rigor and resilience. We are very, very focused on making sure we are deploying AI in all our fixed price programs, so fixed price productivity, maintaining an optimal level of utilization, and optimizing your overheads, including SG&A. So I guess all of that has played out, execution rigor throughout. And that's something we are very happy with the band we are at. 17 to 17.5% was the band we had called today. We are perhaps at 17.6, which is a recent high in last several years. So we're quite happy with the margin performance. I think that leaves us some room for investments. We have acquired a Harman DTS, which has 1 month, was consolidated in Q3, and we're expecting 2 months of incremental revenues to flow in Q4. And so we are continuing to invest for our growth. Talk to us a little bit about IT services revenue as well. It grew just 1.4% sequentially in constant currency basis. Do you see the strengthening, or where is it still weak? If you look at it, our 1.4% sequential growth in constant currency, 0.6% of that was organic in a very seasonally weak quarter. Q3 typically many of our clients have furloughs. So I think 0.6% sequential growth is fairly strong, and the growth was very secular. If you look at it, 3 out of our 4 market units grew sequentially, and similarly, 4 out of our 5 industry verticals grew. So it was a fairly secular growth, organic, and I do think that we are building back strength relative to where we started about a few quarters ago. So we've been progressing. We are having more and more market units which are showing sequential growth and year-on-year growth, and we're making progress. Your fourth quarter guidance for IT services is also quite weak, 0 to 2% for IT services business. That does seem a bit conservative. Why is that? What's the logic? I think we always guide based on the visibility we have at the start of the quarter. There are 2 factors playing into it. One is certainly, the furloughs typically come back in Q4, adding a nice bounce to the revenues. But this time, the number of working days is fewer. So that's almost offsetting the furloughs that typically come back in Q4. So lower working days is one. And some of the large deals that we had won earlier this year are taking a little longer to ramp up. Those are the two reasons why our guidance for Q4 appears softer as those deals ramp up.
Total bookings are also a bit weak, 5.7% on year. Large deals are also under $1 billion. Can you talk to us about what's happening here? Is this a pipeline issue, or are investors sort of slow walking, signing to completion?
No, actually neither. If you look at it, typically large deals are binary in nature, and they do take a little longer to close, and some of them just tend to lump up. So if you look at our bookings performance outside of the large deals, it's fairly good. It just appears like, because we had 2 very good quarters of large deal bookings with like 4 mega deal wins in the first half. So when you look at the performance sequentially or a year on year, it may appear softer because of the lower large deals. But if you look at it just year to date, and that's what counts, and that's what will drive the performance in the next few quarters. Our bookings have grown year on year quite well. Our large deals booking have grown over 70% year to date, and overall bookings is also growing north of 20%, 20-25% year on year. So that's a healthy growth.
We need to talk about the AI story as well. It's central to your pitch. Do you feel, to what degree is this driving new spending, or are you moving around existing budgets?
Actually, AI is leading to newer spends. And if you look at it, our clients are very, very focused on spending on AI. It is certainly right up there on the mandate. It's a board mandate. A lot of business and CEOs have their attention on this. Typically, the way we've seen this play out is 2 ways. One, clients continue to focus on cost optimization and creating to invest in AI. So it's a two-pronged approach. So drive efficiency in your core, create that headspace, and put that investment back into new AI spends. We see both trends play out quite well. If we've always said for the last 3 or 4 quarters that the pipeline is dominated by deals where clients are looking at vendor consolidation, cost takeout, efficiency, and a lot of all the dollars that get saved gets put back into AI, and those spends are happening as well. So we've got opportunities on both ends. When it comes to cost takeout and optimization and efficiency, it's a huge opportunity for us. And similarly on the new AI spends.
You don't disclose AI-specific revenues, though, which does beg the question, why not? Are the numbers not exciting enough to talk about yet?
It's not about we're quite fairly regulated, and we want to be very careful about what we call as AI. There is no one industry definition. The way we look at it is AI is fairly pervasive. Like every deal, I spoke about how cost takeout and efficiency, we do bring in newer ways of delivery. We've got 2 delivery platforms, Wings and Vega, under the entire Wipro Intelligence umbrella, which basically includes all our AI initiatives. It has delivery platforms called Wings and Vega, which are embedded into every deal that we are contesting in the pipeline, whether it's a renewal or whether it's a net new, right? Because if it is about support, maintenance, managed services, we've got Wings. So about development, transformation, the software development life cycle, we've got Vega. So it is embedded in every opportunity that we are chasing today. So it's very difficult to differentiate that this is pure AI and this is infused AI, and then, lack of a standardized industry definition just keeps us out. But we do track those numbers very carefully. We look at the work orders that have AI infused in it. We look at people training as to how many of our associates are, it all started off with the basic AI training, then the advanced, and now how many of them are completed masters. And we are making sure that most of our delivery people are completing. So there are various ways to measure this, and it's very pervasive. That's why we're not calling out one number.
Okay. Aparna, before we let you go, we've got about a minute left. I'm just wondering if you can tell us about the impact on costs from US visa restrictions, because fees for H-1B visas are higher. Have you had appointment disruptions? Can you tell us about what's going on there?
So far, so good. As far as our own operations are concerned, we've been fairly localized, and our H-1B dependence has been coming down year on year for the last 10 years. So we were pretty well prepared, even as there was a change in the law. And we're not really seeing a big disruption. There is some, increased scrutiny, but that's right now manageable. And we're not seeing any big impact, neither operationally nor on our financials.
Gong Ying, she's of course the founder of Yidu Tag. Ying, good to have you with us.
Thank you.
How do you weigh in on this debate? Is China leading in terms of health tech, or is it the US?
Well, I am not comparing those two countries. I can share with you my 2025. So last year when I was in Davos, there was the DeepSeek moment. And before the DeepSeek moments, Yidu was actually building our own healthcare foundational model. And at the time, we actually thought it's going to take us another 3 years, billions of RMB investments, so we can use our own foundational model to create Dr. Copilot. But luckily, we had our DeepSeek moments. And this year, we've been so busy deploying, DeepSeek, Qianwen, together with our knowledge graph, and also our own healthcare model. And one use case we have is the doctor's agents. So we provided the AI agent factory to the hospital. And then we create agents with the top hospitals' doctors. And now that, just after a year, some of the hospitals, maybe more than 50% of the doctors would be very, very comfortable to have 3 to 5 agents working for them. Some does tumor staging, some does patient education, some does sorting out their disease data set, doing timelines and sorting out the EMR records for very long NCD diseases patients. So it's been a very busy year. I guess
the question is, where do you go from here? Can AI replace doctors, and how far away are we from that?
I have a point. I think AI will never replace doctors, and for a few reasons. One is, it's too early to hand over the wheel to a person that we don't know who is driving the car, right? There's a lot of, this debates on AI safety, and also compliant ethics. And also we need to train, we need to give opportunities to the younger doctor to grow with the AI. And so I don't, for that reasons. And number two is, I think that there's a lot AI can learn from the top physicians, and also real life, everyday clinical, studies.
We're seeing the health tech space in China really booming. What's behind that? Is it regulation? I mean, how are regulations versus the US?
So in China, I think there's we have been very lucky that we have a very, very big market. When Yidu launch our products, and we go to our clients, hospitals in Beijing, and they look at our product and they probably don't like it. But then we take the same product, so okay, maybe we'll sell it to Chongqing. And then if we get very unlucky that the Chongqing hospital don't like it, okay, we'll go to Shenzhen, and someone would like them and say, okay, maybe let's modify, let's work together. And then we change our products, and then, and then we're able to sell to the entire country.
But is the regulatory environment supportive?
Yes, very supportive. The government has launched a lot of policies supporting AI+, and healthcare is one very big sector. And also we have an aging population problem, and also 2030 Healthy Together policy. So those policies are encouraging entrepreneurs to do business in this field.
And I know that Yidu Tag was actually founded to address the issues of the aging population targeted for 2030. What do you think? What illnesses can AI solve in an aging population like China?
So when I started the company in 2014, before 2014, I did a 2 years field study in Japan, Israel, the US. And I realized medical big data and AI technology is the answer to solve the productivity of healthcare industry. So if you look at all the sectors that EDU is focused on, the first one is the data infrastructure for hospitals and also CT regulators. And then you have a lot of agents for people to work very efficiently on top of that. And then you have the AI CROs. And the reason that we started this AI CRO is because we want to solve the problem of 10 years, $1 billion, or multiple $1 billion of cost. And a lot of the rare diseases drugs are so expensive. It's because of the way that we develop those drugs can be more efficient. And also we can apply it to a bigger market. And then we have the AI insurance solutions that we've launched, the inclusive supplementary insurance in multiple cities. And in some of the cities, it takes 1.2 seconds to get your claims back.
I'm just wondering whether there are two different approaches to how the US and perhaps China approach AI. Is it about cost, essentially, for China, and for the US, it is about always in pursuit of cutting-edge technology? Is that a fair way of looking at the two ways of building AI?
Well, at least that's not the way I'm looking at it. And I really think that healthcare is a sector that humans still have understand very little, like less than 5% of all diseases around the world. And there are so many rare diseases, maybe that just, even if we understand them, and it's not commercially viable to develop drugs to cure them. And so we need a bigger market to have those drugs being developed. And also, the climate change, and there are lots of different diseases that we don't understand, right? So even in those areas, we've EDU launched about 400 different specific disease data sets. And for those disease data sets, we use our AI to do a lot of research on, rare diseases and diseases that we don't understand. And the PIs around the world are working for solutions for them. So a lot of time when you publish those papers and doing those research is not just about the cost. It's also about, the right thing. Yeah.
I'm just wondering what you're most excited about over the next 12, 24 months. What should we be looking out for when it comes to EDU Tech?
I think for our company, I think it's just within one hospital, you're seeing doctors getting very comfortable with agents, and then you're seeing multi-agent tasking, agents working with each other, and then you're seeing agents working with the medical operating system, and then that medical operating system is going to embed more data and more intelligence around the world. So you're really seeing the change of workflow of a healthcare system, and over the next maybe 12 to 36 months. And also, there will be more and more drugs being developed within our AI CRO. So those will be exciting moments for me.
Than a de facto ending the independence of the Fed. And we all know what that does to markets worldwide. I will block any effort to name any member of the Fed board until this matter is resolved. To move on would almost validate that this is a way that you can actually get the Fed under heel.
Bill Dudley is former president of the New York Fed and now a Bloomberg contributor.
There was a lot of reaction to the news that there was a grand jury subpoena against the Federal Reserve and Chair Powell. A lot of reaction by politicians, by the news media. There wasn't as much reaction actually in the markets. So is one of them right and one of them wrong?
Well, time will tell. But I think the market view is, look, they issued a subpoena. It's a long way from issuing a subpoena to actually having the grand jury indictment, a trial. and that's going to take so long. Powell is already no longer going to be chair. So I think the market view is this is sort of a lot of noise.
So it may not have the effects in the real world, but Chair Powell, who had repeatedly just sloughed off criticism of the White House, had an entirely different reaction. It was a very, I thought, forceful statement that he taped.
Oh, very much so. And the contrast with how he behaved previously, where he was basically, I'm not going to engage, I'm not going to engage. And this time he said, no, you crossed the line. You're accusing me of malfeasance, and I'm not going to take it. And so I think because he was so measured before, this made it even more effective.
So you've been in the room, and whenever we ask somebody who's on the Fed, they say, oh, no, we pay no attention to politics at all. Absolutely not. It doesn't affect us. But you are human beings. I mean, it must play in the back of your mind somewhere, even if it's not discussed in the meeting.
Look at the Federal Reserve transcripts of all the FOMC meetings released with a lag of 5 years, and you won't see any discussion about political considerations. So I think that's actually true. But you're certainly right in the sense that if the administration is putting tremendous pressure on the Fed to do something, that makes it a little bit more difficult for the Fed to deliver what the administration actually wants, because it creates the idea of are they doing it because they think this is appropriate for the economy, or are they caving to the administration's pressure? So I think that's why it's actually counterproductive what they're doing. I can imagine Powell thinking, should I do one more rate cut or not? Boy, now if I do a rate cut, it looks like I'm bending to this pressure. Maybe I better hold off. So it's actually making it more difficult for the Fed to cut rates, frankly.
As you say, Chair Powell's term will be up in May. There will be a new Fed chair. How much difference will the chair make in himself?
I think the chair is certainly important because, one, they control the agenda. The Board of Governors staff works mainly for the chairman. So that's a lot of authority. But at the end of the day, in terms of the votes on the Federal Open Market Committee, the chair only has one vote. And so I think the influence of the chair really depends in part on how credible that person is in terms of making the case for the monetary policy that he wants to see implemented. So if someone comes in and says we should cut 100 basis points and the economy doesn't suggest that that's appropriate, the committee is going to say, well, that's what you think, but we're going to dissent against that. And that's really, that would actually be quite bad for the chairman if the chairman sort of lost a vote to the rest of the committee. So I think there's quite a few guardrails there. I think the broader question is, can the Trump administration put enough loyalists into the Federal Reserve so it's not just the chairman, it's a majority of voting members of the Federal Open Market Committee. And that's why the Lisa Cook case is so important. Because if Lisa Cook can be dismissed for cause, well, then maybe other people can be dismissed for cause, and then you get a much more rapid turnover of the Board of Governors. Board of Governors had 7 votes on the FOMC. The presidents have 5. So if you could take over the Board of Governors, you could actually start to get the monetary policy you wanted.
From the outside, the job of chair of the Federal Reserve looks pretty hard for anyone, anytime. Is President Trump making it harder for the next chair with what he's saying and doing, including his grand jury subpoena?
Yeah, I think he is, because I think it's when the new chair comes in, people are going to be wondering, so are you President Trump's lackey, or are you going to be on the side of independent monetary policy based on what the economy calls for in terms of inflation and employment? What interest rate path should we follow? And so there's going to be a question about, are you supporting the idea of an independent central bank or not? And so the new incoming chair is caught in a very difficult place, frankly. I mean, it's almost like they're going to get someone mad at them if they side on the side of let's independence of monetary policy, let's set the right monetary policy. That might run into conflict with the president. And obviously, if he tries to push the president's agenda and the FOMC thinks that's inappropriate, then he's going to get on the wrong side of the FOMC. So I wouldn't want to be the new chair, frankly.
It strikes me when it comes to the Supreme Court, the president typically goes out of his way to say, I didn't ask, for example, how they would vote on this particular issue. I didn't ask that question in advance. I'm not sure President Trump would have the same reticence with the next Fed chair of not asking them specifically, what are you going to do?
I wouldn't be surprised if he asked them what to do. And I think if I was the Fed chair, I'd say it depends on the incoming economic data and what's warranted to keep the economy on a smooth glide path. I mean, look, I think President Trump, is coming at it from a real estate developer perspective, and which is lower rates are always good. But the reality is lower rates aren't always good, because if you set rates too low, the economy will overheat and you'll have an inflation problem. It's sort of ironic in an environment where people are worried about affordability that inflation is the thing that really resonates with voters, that you're pressing so hard for lower interest rates, which would actually probably make inflation worse.
President Trump has said repeatedly, I have the right to express my views. I think I'm pretty smart on this, and there is a First Amendment right, even for the President of the United States, to express your views. Is there a point where that expression of views actually starts to do long-term damage to the institution?
I think it depends on how you're expressing the point of view. You could say, my view is that the Federal Reserve should interest rates more. Fine, that's just an impression of view. Powell is an idiot. He better lower interest rates by 100 basis points or I'll fire him. That's a totally different expression of a point of view. One is saying what I think interest rates should be. The other is saying, not only what do I think interest rates should be, this just should be the consequence of my decision. So I think there are two different things. So I don't think anyone quarrels with the president having a view on interest rates.
The latter is what the president has done.
Yes.
Which would imply there is some damage being done. How long lasting is that? I mean, there will be a new president at some point, and let's assume a new president comes in and says, no, I'm not going to criticize the Fed anymore. Does it restore the credibility, or is there lingering damage?
I mean, I think it depends on how the Federal Reserve behaves over the next couple of years. You know, if the Federal Reserve basically sticks to its knitting, conducts monetary policy in an independent way, keeps the economy on a smooth trajectory, no lasting damage. The President Trump was thwarted in his attempts to take over the Fed. But if President Trump is somehow successful in taking over the Fed and getting a very accommodative monetary policy as a consequence that's not appropriate for the economic outlook, then of course there'll be more lasting damage to the Fed.
Take us inside the room when the FOMC meets, because historically it's sort of been like secret. We don't know what's going on.
Well, you have the transcripts, and I think the transcripts are pretty accurate about what the meetings are like. You know, basically what happens at a meeting is typically you have a briefing from the system open account manager about what's going on in markets. Then you have a briefing on the economy from the staff, and then a briefing on international staff. And then you have a go-around, and everyone talks about their views on the economic outlook. It's a pretty collegial place. I mean, you know, people want to understand the views of others. People aren't yelling and screaming and arguing, you know, vociferously. It's very respectful. And, you know, people spend, you know, quite a bit of time, you know, when the meeting's not in place, actually, you know, talking in the halls at coffee, you know, having a cup of coffee on the break or at the breakfast or lunch. So I would say, you know, I find it to be quite collegial, you know, I think that makes the institution function better.
A collegial place where one in Lisa Cook and now two in the chair, Jay Powell, are under very public attack, personal attack.
And I think people are feeling they're, you know, that could be me. So I think, you know, there's quite a bit of sympathy for what those two people are going through. So I think, yeah, I think the Federal Reserve leadership, you know, including, you know, all the FOMC participants are pretty, you know, are very sympathetic to where Powell's coming from, and I think they feel really good about what he did and had to say in his video message this past weekend.
Up next, competition in the Gulf between Saudi Arabia and the UAE.
That means we have to rely on each other for success. If you could have the Asian grid to connect rain power from Vietnam's wind farm, Thailand's solar farm, to geothermal in Indonesia, it will flow surplus renewables from one country to another. If it's good for the planet and good for business, it's worth supporting.
This is a story about transforming a brand. The Kingdom of Saudi Arabia has long been associated with the Muslim holy cities of Mecca and Medina, and perhaps even more so with oil. But the country's rulers have been trying to diversify. What if it could become a favorite vacation spot as well? Our colleague Jumana Bersecci brings us the story.
Many countries seek to transform their economies, but few do it with such a centralized approach and such vast amounts of capital. Through its Vision 2030, Saudi Arabia wants to shed its image as just an oil nation and modernize its economy. It's a goal that comes from the very top, with the Crown Prince meeting President Trump and foreign business leaders in the United States at the end of 2025. More than 40% of Saudi Arabia's GDP comes from oil, but by 2030, the kingdom wants that number to be closer to 35%, with around two-thirds of GDP coming from non-oil sources. Just this month, the country started opening its property market to foreign investors and announced plans to do the same with its equity markets after a year of poor returns. In 2025, Saudi Arabia's benchmark index dropped 13%, despite strong stock performance in much of the rest of the world. Stephen Cook is a senior fellow for Middle East and Africa Studies at the Council on Foreign Relations.
The Saudi economy has been a commercial economy, but it hasn't really had genuine institutions of a market economy. Independent courts, which he hasn't even tackled yet, but rational investment laws and the things that investors really, really need in order to operate outside of the hydrocarbon industry.
You know, with the Vision 2030, His Royal Highness the Crown Prince said we have to diversify the economy. We don't want to continue relying on one source of income, which is the oil. In a time where we have vast number of other things like mining, natural resources, phosphate, gold, and nature. We can do a lot in the sport, culture, and entertainment and tourism.
His Excellency Ahmed Al Khatib has been serving as Saudi Arabia's Minister of Tourism since 2020.
Tourism was one of the main pillars of Vision 2030, and since then we have been working to modernize the country, build new destinations, new airlines, Riyadh Airlines, new airports including King Salman Airport, and new hotels.
Leisure tourism might be relatively new to Saudi Arabia, but for centuries, millions of Muslims have come to Mecca and Medina for the Hajj religious pilgrimage.
We are blessed to have the two holy cities. They used to represent 60% of our international arrivals back in 2019, and last year they dropped to 46%, and the leisure increased, and therefore we will continue pushing and promoting travel for leisure to Saudi Arabia, travel to enjoy your holidays in Saudi Arabia, and in the same time, the religious tourism will grow to a much bigger number than what we are having today.
But now Saudi Arabia wants to put a new foot forward. It might look like the Maldives, but that's the Shibara Resort, Saudi Arabia, on the Red Sea.
Well, we were born out of Vision 2030. Vision 2030 is trying to accomplish a number of different things for the country, amongst which, obviously, creating a vibrant society, opening up the kingdom, and diversifying the economy.
John Pagano is CEO of Red Sea Global, a real estate development company founded by the Crown Prince himself to create the real estate that will become part of Saudi Arabia's tourism offerings.
We have a beautiful, pristine environment, which in the world today doesn't exist. I mean, we've exploited our nature and our environments globally. When I first came to Saudi Arabia, I was shocked at how beautiful and pristine this environment was. We had beautiful islands, a coastline that was largely untouched.
Pagano's shock is exactly the image that the kingdom wants to change. Stephen Cook said there's a long road ahead.
I was there before the opening up of Saudi Arabia, and it was extraordinary because nobody had been there. But in terms of tourism, I think that, yes, there'll be tourism from, major Muslim countries, Indonesia, Malaysia, India, which has the second largest Muslim population in the world, even though it's not a Muslim country. But also, I think there is a genuine interest in attracting people from the West, Americans and Europeans, and not just the kind of, adventure tourism that they may have seen so far.
Beach resorts attract wealthy tourists, but the kingdom is also leaning into its rich history to combine luxury and culture for what it hopes will be a unique experience.
Al Ula is an incredible place, a place like no other. It's a region in northwest Saudi Arabia with incredible natural and cultural significance. It's located on the ancient incense route, and many civilization has passed through for thousands of years.
Abir Al-Akil is the CEO of the Royal Commission for Al-Ula, which means glory in Arabic. The city is one of 8 UNESCO World Heritage Sites in Saudi Arabia, and the kingdom has big plans to make the destination a central part of its tourism initiative.
Al-Ula is not just a historical site. Al-Ula is a home. Many families has lived there for generations, and I would say that an example would be Al-Ula Old Town, where it was inhabited by the families starting from the 12th century until late 1980s. Now, if you bring all of this together, the ancient past, the incredible nature, protected nature, and the living culture and living community, this basically gets you a complete picture of Al Ula. It's important to say that Al Ula is Saudi Arabia's treasure, but it's also the gift for the world.
Which year did Al Ula open for international tourists?
We started our efforts back in 2019. Today, we have received around 300,000 guests, visitors to Al Ula, 30% of which are international visitation. So we're targeting around 2 million visitors by 2035.
If Al Ula's plan to bring in 2 million visitors by 2035 sounds ambitious when it attracted only 15% of that last year, that's because it is. It echoes the kingdom's big target of getting 50 million foreign visitors a year by the end of the decade, in addition to 100 million local tourists. It's a goal that is even more stunning, considering the kingdom only opened its borders to leisure tourists in 2019.
Do you feel like you're on track to get there?
I'm very comfortable. The 50 million will put Saudi Arabia among the top 10 most visited countries around the world.
And how much of a draw are those big mega events? The World Expo, potentially FIFA World Cup. How much of a draw is that going to be in terms of bringing in those international tourists? And where does it fit in to your broader plan?
It is very important for us to repeat the visitors who will come again and again to spend their holidays in Saudi Arabia, not to come only for business or to visit their families and friends.
Adding leisure tourism to its offerings requires a big capital outlay. The government plans to spend almost $1 trillion in all to transform its tourism industry. Private investment in tourism rose to $3.8 billion in 2024, and about 40% of that comes from foreign capital.
How important is it to get private sector involvement with all of these events and projects that you're putting together?
It's very important. It is part of Vision 2030. We want the private sector to drive. We are a regulator. When we opened this sector, the government started to stimulate the sector. But down the road, this sector has to be run by the private sector. The private sector in the tourism build the hotel, build the shopping mall, and build the restaurants, etc. And they operate it. They are the investor. They are the operator. But they have to. The private sector in Saudi Arabia is contributing heavily in building new destinations and the new experiences. We cannot do it alone. The private sector role is very vital to the success of this sector.
The Kingdom of Saudi Arabia also has stiff competition from its neighbor, the United Arab Emirates, and beach destinations in Africa and Asia.
This is a dynamic throughout the region. There is competition among all of these countries and cities, actually, and even within them. There's a competition between Abu Dhabi and Dubai, even though they're both in the UAE. And I think that the Saudis always looked at themselves as the big dog in the region, but they'd lagged behind in terms of the kind of ability to attract businesses and firms and build these gleaming cities.
International visitors account for almost 80% of the UAE's tourism expenditure. And right now, Dubai offers tourists something that much of the rest of Saudi Arabia doesn't: alcohol. But even that is changing.
Well, you can get alcohol in the diplomatic corps. You could always get it through diplomatic pouch, but now there's actually a shop. And so Saudis proclaim, not officially, but they would say, this is a precursor. This is the first step towards legalizing alcohol in the kingdom. I don't think anybody knows when that's going to happen. And from, I think, the Saudi perspective, that's not make or break. People will want to come to Saudi Arabia. They'll want to see Jeddah and Riyadh and Al Ula and other places, and it won't deter them if they can't get a glass of wine. But it certainly would be a nice addition if they could.
A growing tourism industry is also changing things at home.
Look, I think the transformation has been breathtaking. I first came to Saudi Arabia for the very first time in 2017. And, the changes in society, simple things like cinemas and music, women driving, and, you're walking around today in a Western business suit, which back then you probably didn't see.
The local community are basically the heart of our vision. Since the beginning, we ensured that we have set in place an approach that ensures empowering our local community through education, stewardship, and opportunities.
Is Saudi infrastructure ready to accommodate this potential influx of future tourists?
Oh, yes. We're ready today. We have catered for 116 without any issue. But definitely we're building new destinations, new experiences. I believe we are ready to cater for with the projects in the pipeline under construction, whether Riyadh Airlines or King Salman Airport that will happen, and many other airports like Abha Airport, Asir Airport, which is important, and the hotel rooms that are under constructions in Dir'iyah and many other destination or location. We will be absolutely fine. I don't think we will have a challenge to achieve the 150 billion.
The irony is that to change the world's impression of Saudi Arabia, it needs foreigners to come see what it is. But it's also foreign capital that will help fund the success of its new image.
Coming up, amid signs that the ceasefire in Gaza may be more fragile than ever, we go to Israel to see what the fighting has done to the tech industry on which the country depends. This is a story.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
About success born of adversity. Israel is known as the startup nation because of all the successful tech companies it has hatched, accounting for more than 1/2 of the country's annual exports.
There are more Israeli companies listed on the NASDAQ than any country in the world outside of China and the United States and maybe Japan.
One might have thought that the Israeli tech juggernaut would slow down during the nation's war against Hamas, but it turns out that it's done the opposite. Since the war began in 2023, Israeli high-tech companies have raised more money than ever, some $15.6 billion in 2025, up from $12.2 billion in 2024.
The entire tech sector, despite war, has actually grown considerably. Record number of exits this year. For instance, Google made its largest acquisition, not just of an Israeli company, but its largest private acquisition of any company in its history for over $30 billion, where it bought the cloud security company Wiz in the middle of this post-October 7th attack on Israel.
Dan Senor is the author of Startup Nation and The Genius of Israel, and hosts the Call Me Back podcast.
Israel's number of exits from the tech sector in 2025 will be about 300% higher than 2024. In the defense tech sector, which is an area of considerable growth, there were some fewer than 300 defense tech startups on October 6th, 2023. In terms of the number of startups, the amount of private funding coming into Israel, and then the number of exits, it's all kind of multiples higher than we've seen in a couple of years.
Israel's tech sector has become one of the largest in the world, accounting for 17% of the country's GDP, compared to 13% for South Korea, 10% for the United States, and less than 5% for the EU.
So for some time now, Israel has been punching above its weight, highest density of multinationals that have set up operations in Israel. Countries that, don't set up R&D shops outside of the United States anywhere in the world, and they're setting them up, many tech companies in Israel. So for some time now, Israel has been what we call the startup nation, this innovation ecosystem that much of the world is depending on. The big changes, most recently, is more and more cooperation with the Gulf states, some in very public ways like the UAE and Bahrain, some in not so public ways like Saudi Arabia, where you're seeing more and more investment from these countries into the Israeli tech ecosystem because they realize to really thrive, they need to co-innovate with another tech ecosystem.
There's 450 multinationals that have set up shop in Israel,
So when you talk about the maturity, it's not just the companies, it's the overall ecosystem has become so powerful because we've all been working together and figuring out how to develop things that benefit Israel and the world through this ecosystem.
Eli Raisin is the Chief Strategic Officer at Our Crowd, an online investment platform based in Israel that connects investors from around the world.
We've set up at Our Crowd a super interesting fund, which is a three-part fund, or what we call the Trepont Fund, between the U.S., Israel, and Korea for not just developing or designing deep tech, but being able to produce it in partnership with strong partners in Korea and in the U.S.
And why Korea particularly?
So Korea is a super energetic, highly technologized ecosystem and economy to begin with. It's less well known because it's somewhat insular. At the same time, though, the U.S. looks at Korea as an incredibly strategic ally. There's all sorts of crossovers for our goals and our capabilities among the three countries where we really see that union as being incredibly powerful.
Israel is a good partner for the Korean startup ecosystem because they are very known for the startup nations.
Hyun-Jun Kim is the CEO of NH Ventures, a subsidiary of Nong Hiep Financial Group. In July, NH joined forces with Our Crowd to create an $80 million fund to invest in Israeli startups.
In Korea, we have a lot of interest about the technology in Israel, but we don't have a lot of chance to visit each other and how to communicate each other. Fortunately, we can establish the venture fund between Israel, Our Crowd, and NH. That makes a lot of information flow from Israel to Korea and Korea to Israel. We think Israel can be the good partner to support, expand the Korean startup, go to the U.S. market. Israel also, they can find a good partner to manufacturing. Korea can provide good quality and reasonable price.
Israeli tech startups run the gamut, from defense to cybersecurity to biotech to AI. But whatever the technology, it often traces back to Israel's mandatory military service.
The military is sort of a bedrock of all Israeli innovation because of a couple of things. One is there are many really fascinating technologies that are both defense in nature but also civilian in nature that are brought up through the military. And the other, less spoken about but highly impactful, is the incredible development of leadership and teamwork that happens in the military. And those teams and those leaders transition into roles leading civilian companies. We invest in defense companies, certainly, and cyber, but most of our investments are not. Most of our investments are in things that are commercial or civilian use.
Has that line between civilian and defense become blurred as we talk about dual use?
Absolutely. So we see that all the time now, both because some inventions are inherently dual use and because many of the entrepreneurs are seeing a real opportunity now to serve the incredibly impactful defense needs that are experienced not only in Israel but all around the world for the reasons that we all understand.
So perhaps it should come as no surprise that the onset of the war also opened a new front for startup technologies, including those that may have been developed for civilian or dual use.
From day one, we wanted to bring innovation to the battery sector, the battery industry. We wanted to integrate our technology into every battery in the world. That's still our vision. But I think the vision is now even bigger as we see the potential in other markets.
Adionics CEO Moshiel Biton saw a clear potential for growth for his battery parts company once the Israel-Hamas war started.
It's not where we wanted to deploy our technology, or if you'll ask me what were our vision or dream, is not to be on the defense sector. But we understand now that this is also on obligations, this is our service. That's one of the things that actually shifted and changed during October 7.
War is never a good thing, and the Israel-Hamas war has been particularly horrific, starting with the attacks on Israeli civilians and followed by the devastation of much of Gaza.
Most of the investors, they were they empathy and lot of supports and asked how we actually manage, and when we ask if we need anything. Of course, there were investors that were silent, and some investors even asked direct questions about the situation, the war, And sometimes it felt a bit awkward when, some foreigners blaming you on things that are not in your control. A private company, business company, are not part or represent any government, and they are blaming you.
The war definitely had impact in terms of which companies essentially were newly created, or like we discussed, where they leaned into in terms of their customer base or defense use cases. We also did see through the war investors sort of, in some cases, take a little bit of a step back mostly because of optics, not because of anything substantive. And now that the war's over, I'll tell you that we've seen this huge pickup in foreign investor interest in Israel. So in the last few weeks, I personally have hosted Japanese, Korean, and I'm about to host a Taiwanese delegation. Minutes before you and I joined this call, hosted a large group of Canadian entrepreneurs here in our office. So what we're seeing is a real pickup in foreign investor comfort with investing in Israel.
Out of adversity has come at least some success for the startup nation. Success involving businesses from halfway across the world.
I think most important thing is Israel always try to go global because their domestic market is not so big. In Korea also need to expand their market horizon to the global market. But they have their own strength point. We try to combine those strength points. We can raise the global success. It's a very physically separated, but our idea with the NH investments and our crowd is making same thing. So that is very important thing. Israel and Korea also have a very good relationship with the U.S.
We need to be opening up cooperation with Israel. So that was already starting to happen before October 7th. And then obviously since October 7th, you've seen this incredible flourishing in ways that were completely unexpected in areas related to defense tech and cybersecurity that has just gone to another level. So many of those same players, the Gulf states in particular, want to piggyback onto Israel's strength in these areas even more because they've seen how successful Israel has been. And then this startup nation that was buzzing long before October 7th, 2023 continues to do so.
Up next, skiing is more popular than ever, despite the lack of snow in some of America's top ski areas. We take a look at the ups and downs of big ski. This is a story about what you gain.
Bloomberg Invest, where intelligence meets capital. In the heart of the financial district, powered by Bloomberg's award-winning journalists, bringing together the market's most influential minds.
A big part of our job thematically is understanding the risk environment we're in.
We are facing a once-in-a-generation technological disruption.
We will continue to have a convergence in credit markets.
Liquidity at moments in time when there's a lot of volatility is challenging.
Bloomberg Invest, March 3rd and 4th in New York.
From joining a team and what you lose when you stop flying solo. In the last 20 years, two major players came to dominate the ski industry, turning the sport from a local pastime into a global portfolio. Scarlett Fu brings us the story.
This is the view up at Winter Park. I mean, we are in desperate need of snow. You can see how thin that snowpack is.
In the past year, skiers have dealt with record high prices, record low snow, and disruption on the slopes caused by strikes. Despite the challenges, the industry is booming, with the number of skiers rising almost 17% from 2016. And for the 60 million plus skiers visiting U.S. resorts each winter, there is a choice to make. Buy a Mega Pass before the season starts that gives you access to up to 80 mountains around the world, but leaves you at the mercy of seasonal conditions.
Our job is really to have a long-term relationship with our guests, and so that they feel like they're making a commitment to us year in and year out, good weather, bad weather.
Or go old school. Buy a less expensive pass at your favorite resort, preserving that hometown feel.
It's been a great thing, I think, for our industry because it's a challenging industry that we have.
Ski mountains have to make a similar decision. Are they in with the Mega Pass or are they out?
The one thing that hasn't changed is you get people to come here, they get out on the hill, they go skiing, they have a great time, and they want to come back.
Whatever they decide, they have Vail Resorts to thank or blame. CEO Rob Katz introduced the Epic Pass 18 years ago, offering a deal to skiers and shaking up the business of skiing in the process.
So it was a massive discount when we offered it at, $579. But the thinking was that we could, at that low price point, we could put many more people in the product. And all of a sudden that would start to create more of a subscription model to the ski business rather than just this kind of daily feast or famine model, which was the lift ticket business.
Katz's relationship with Vail Resorts, now the largest ski resort operator in the world, goes back to the 1990s when he oversaw a deal that rescued what was then Vail Associates. Katz joined the board and became CEO in 2006. He left the company in 2021 and returned in 2025. During his first go-round, he grew the company from 5 resorts to a portfolio of 37.
I think initially the pitch was just, hey, we thought that there was an opportunity for us to really apply better management techniques to these other resorts that we bought. And 2 resorts that we bought initially were Keystone and Breckenridge, which were right down the road from Vail and Beaver Creek. And so the thought was also we could start actually managing them and doing it more efficiently. We could also offer some things so people could go to these different resorts and market to that in a more unified way.
Vail initially targeted other neighboring resorts in Colorado.
The first group of founders at Arapahoe Basin hung on to the place till 72. Another independent guy owned it till 1978. And then in the late 90s, what was called Ralston Resort, which was Arapahoe Basin, Keystone, and Breckenridge, merged with Vail Associates, forming Vail Resorts.
It wasn't long before Vail controlled roughly 43% of Colorado's ski areas by count. In 1997, the U.S. Department of Justice forced a sale on Arapahoe Basin, citing Vail's excessive market concentration. Still, A-Basin, as locals call it, chose to continue partnering with Vail, which meant it was included in the first iteration of the Epic Pass.
The view at that point was that the company's multiple was well below a lot of other travel companies. And there was a real sense that the ski industry was really a feast or famine business, where if it snowed, you did well. If it didn't snow, you didn't do well. And actually, ski resorts had been declining in the United States from 720 ski resorts, I think in the late 70s, to 550 ski resorts. So the business was really struggling, and the focus was that there was not the stability and the confidence in the future of the industry because of the ups and downs of weather. So the thinking was, how could we stabilize that? And so what we came up with was really offering an incredible value to our guests by giving them a huge discount on this season pass and trading with them, right? Essentially giving them this great discount, this great value, but then also our guests taking some of the risk of weather for the rest of the season.
Before Epic was introduced in 2008, a season pass at Vail Resort would cost you around $1,800. With an Epic Pass today, an adult skier has unlimited access to 42 Vail-owned or partner mountains around the world for just over $1,000. How did this pass model change how you plan capital expenditures, how you assess risk overall?
It made a big difference. So, historically in the ski industry, you would wait to see how the ski season was. And if it snowed and you had a good year, then you'd make commitments for the following year for capital. But as we started to do well with our season pass business, we all of a sudden started to move back when we were willing to commit. So we started saying, hey, wait, we can commit to things in December or in September or in March the year before.
Then came competition. In 2018, Alterra brought together Mammoth Resorts and Squaw Valley, now known as Palisades Tahoe in California, and Deer Valley in Utah. Soon, Alterra launched the Icon Pass, its version of the Epic Pass. Here's Jared Smith, CEO of Alterra.
The premise or the thesis for the business was really that there was some space in the industry for another large player. The introduction of Epic Pass by Vail was a game changer for the industry, no doubt about it. It's one of those unique products that is truly win-win. What we were able to do at Icon Pass was take that core model, which was for Vail of its owned and operated resorts largely, and take that and put together a network of people that didn't have to be owned by the same corporation to enjoy those same benefits. And in turn, to give consumers the opportunity to have that same exposure and that same cost-benefit analysis across a whole variety of other resorts.
The 2 dominant megapasses ushered in a new demographic of skiers.
The new mega passes, really what it did initially was drive the prices down. It's just that there are ski areas out there are companies out there that do want to drive guests to that mega resort pass or that multi-resort pass, and in doing so, they're trying to entice you with that great price point.
It's kind of a membership, right? So I think people historically said the only kind of person who could buy a season pass has to be a local. So the fact that we made the product price competitive for the destination skier, somebody coming from New York or Florida or Texas, all of a sudden they started to feel like they were a local as well.
For resorts, climate unpredictability reinforced the case for the megapass, as the industry depends more heavily on capital-intensive snowmaking equipment.
As we started to acquire resorts in different regions, all of a sudden the pass provided access to different regions who all have different weather patterns. And so that made the pass even more attractive.
Where we're able to make some of the investment in the physical plants here, combined with the technology advancements that you've seen in the quality of things like snowmaking, which uses less energy and uses less water to produce actually more yield and what we're able to put on the hill.
But as demand for the Epic Pass grew, it became kind of a victim of its own success. 2 seasons ago, Vail sold a record number of passes. It's too early to tally up this season's pass sales, but Vail said the total number of skiers is down 20% from the same time last year.
The locals don't love the whole Epic situation because of the crowds, because of the prices, because of the concentration on just finances and money.
I think there's no doubt that anytime you make something more accessible and more affordable, there's an opportunity that you have too much of a good thing, right? And you have some people who come, or lots of people who come as a result of that affordability, and they want to come at the peak times. So I think there are lots of examples in the ski industry of, you know, peak windows on high holidays with great snow conditions where lots of people want to come out and do the thing that they love that can lead to longer lines.
In 2019, A-Basin ended its partnership with Vail, cutting off ties with the Epic Pass.
Arapahoe Basin opened early. It was one of the first resorts in the country, and the concept of ski resorts was very different back then. How's the skiing?
Alan Hensroth is president and COO of A-Basin.
By 2019, 2018, we felt we could really do this better not being part of Vail. Vail was a great company for us in a lot of ways, but we kind of outgrown that, and we're looking for something different. We just thought we needed more control over our passes, more control of people coming here, more control of the actual experience that all our guests were having. And Vail was such a big, successful company, they brought really more people here than we could handle at one time. So we made a change in our past relationships.
In 2024, A-Basin completed its journey from being an independent resort to a partner of Vail, to independent again, to now a partner of Alterra. For a ski area that's passed through the hands of companies big and small, A-Basin is hoping for the best of both worlds, an independent feel on a megapass.
You know, of course, when the sale went down, you know, and it was almost a year leading to the closing of the sale, people were concerned. But as last year went on and they realized we weren't turning into a bunch of monsters, I think more and more people are accepting that A-Basin's going to be okay. And we're going to do just fine. You know, the one thing about being part of a family of more resorts is, you know, there are some people that are committed skiers and they want to buy a season pass to one place, and they're satisfied with that. But I think there's another group of people that like some diversity. They want to try different resorts. They want to ski at different resorts. They want to have choices. And, you know, when we decided to leave Vail, we could have been independent, but we thought people really wanted choices. And we thought we'd have the best future when there were opportunities for people to take advantage of those choices.
Today, you know, we have, I think it's roughly 2/3 of our resorts fall into that independent category. Like last year, independent resorts did see an uptick in visitation, which was great to see. And we saw a little bit of a decline in some of our large or extra large resorts. You know, it's just the way the pendulum swings, is that if you're not happy in one aspect of the sport, maybe you're going to go find something a little bit different.
While A-Basin joins a new team and navigates another chapter, there's still the choice to ski the old-fashioned way at smaller independent resorts like Mad River Glen in Waitsfield, Vermont, which runs on a skier-owned co-op model and is the last remaining slope in the continental U.S. to operate a single chairlift.
We really are known for our black trails.
Matt Lillard is the general manager.
The co-op has 3,000 shares, but there can only be 2,500 owners of those shares. So everybody that has a share gets a vote. You can only own a maximum of 4 shares, but that's still only 1 vote. So that's one of the key things about a cooperative is you can't have somebody come in, buy up a bunch of shares, and have an outweighted say like you would a normal corporation.
What problems did the co-op ownership structure solve that traditional ownership did not?
I think what it did is it was able to pool the passion that the skiers have for the mountain into an entity that can take care of it. So it enabled those people to have a say in what was going on here and support it both financially and with their visits. The shareholders have a bigger say in a cooperative than they will, at a publicly traded place like Vail Resorts or something private like Alterra. So they get to say that we want low skier density, and that's one of their primary goals. It's written into the bylaws, it's written into the articles of incorporation. And so that's basically saying that when you're on the mountain, they don't want it to be crowded. They want to be able to ski, they don't want people whizzing by them.
He says the co-op sold out of shares this year, even if that means bringing skiers up 1 share at a time. So I sit down?
Yep, so you'll sit down, and then once you get going, you'll close the safety bar.
And that's it?
That's it.
Oh.
Up next, competition in the Gulf between Saudi Arabia and the UAE. When Crown Prince Mohammed bin Salman came to Washington late last year, he was competing for time, attention, and for capital. And one of his main competitors is his neighbor, the UAE. Pasalina's Deborah Lair has seen the race from the inside.
Give us a sense of where we are in that competition between the UAE and Saudi Arabia.
Well, certainly there is competition as both are trying to diversify their economies and to attract new technologies. But they both are really, I think, focusing on what their own competitive advantage is. In the case of the kingdom, it's scale. They have a large land mass, a larger population. When it comes to the UAE, they're more agile. They have a more mature economy. They're much more integrated into the global system. But really, there's room for both of them. There's plenty of room in the Middle East, and increased competition results in better standards, better services, and I think increased opportunities for both of them.
Is the UAE ahead, or is it just not on the same track?
It's interesting. It just depends on how you measure it. Certainly, the kingdom is a maturing economy where the UAE is a matured economy, but they are going to be competitors when it comes to technology and who can attract more. For the kingdom, they have the landmass to be able to put in place a lot of the AI infrastructure that's necessary for technological growth. But for the UAE, they're much more integrated and sophisticated when it comes to the financial system and financial networks. So there's room for them to be competitive, but also to have their own competitive advantage in different sectors.
When it comes to technology, there's a big rivalry going on globally between the United States and China on standards, on technology, on chips, on all sorts of things. Does Saudi Arabia, does the UAE have to make a choice between U.S. and China?
Well, for both Saudi Arabia and the UAE, China is their largest trading partner, and not just by a small amount, by a significant amount. But I would argue that the United States is probably a more strategic partner for both of them, and they have to make a decision when it comes to technology of what they want their infrastructure to be based on. For the U.S., it's not just about technological competition, it's also about national security. And there will be concerns, given the relationships that Saudi Arabia and the UAE have with China, if the United States is going to approve sending of our latest semiconductors, our latest other kinds of technology, like concerns have been voiced over the sale of the F-35, that China might get access to some of the stealth technologies. We would want to know that if we're going to provide those kinds of technologies to the kingdom and to the UAE, that they're going to put the appropriate safeguards in place to protect them.
What about the geopolitics of the area? I mean, we had the Abraham Accords. It doesn't look like we're going to have an equivalent with Saudi Arabia anytime soon. President Trump hopes it will happen sooner or later. But how stable are the geopolitics of the area in terms of investment?
Well, certainly the kingdom's in a tough neighborhood. There's no question about that. But so far, there's been stability, and certainly as they look ahead, they're hoping that one of their selling points is going to be government stability in Saudi Arabia, and they're trying to position themselves as one of the geopolitical leaders, not just in the region, but globally. For investment, then part of what they have to do is work out some of the issues with their neighbors. And certainly it's not going to be on this trip that we see some big announcements on that. But hopefully what we see are steps that lead towards resolution of some of the big conflicts that they're facing in the region. They have to worry about the relationship that they have ongoing with Iran. There are concerns about what's happening in Sudan. They need to work out what the ongoing relationship is going to be with Israel. So these are many of the issues that will be on the agenda with the president today, but these are issues that are going to take time to resolve. In the meantime, hopefully, and this is going to be a lot of what the discussion will also be about this week, is what does the investment environment look like and how can we use economics to create a more stable relationship between the United States and Saudi Arabia. And that business-to-business partnership is going to be a very important part of that overall strategic relationship.
The Crown Prince is a young man, relatively young man. He, in all likelihood, has a very long tenure in front of him. We change our presidents every 4 years or 8 years. President Trump seems to be a pretty good president for Saudi Arabia right now. But how do they plan out their future when there may be changes coming in policy down the road?
Well, I thought the Crown Prince was very diplomatic in his discussions with President Trump today at the White House, and he was talking about Saudi Arabia needing to get along with all administrations, and that's going to be a critical part of his path and his mission as he looks ahead to a very long reign and having to work through many different presidents. But certainly President Trump has gotten the bilateral relationship back on track.
The Crown Prince, as you say, set out a very ambitious agenda for 2030. Do they have enough of a track record yet to know whether they're on track for where they need to get to?
You're right, 2030 really was sort of an all-of-nation transformation plan. And looking at some of the early results, you can see that they're making progress. It may not be across every one of the metrics, but if you take one of the really important ones, women in the workplace, they're already way ahead of schedule. They had planned by 2030 to have 30% of the workforce be female. They've already hit that target, and they're much likely to be on track to closer to 50% by 2030.
You mentioned women in the workplace. What about women just in society? There was a time not too long ago that I think a lot of Western women were reluctant to go to the kingdom because of head coverings, because of various restrictions they may understand, may not understand. How much of that has changed?
That it really is very interesting because when I first went to the kingdom about 10 years ago, you're right, we had to wear an arabia and to cover our heads. And today, we can wear any of our Western clothes. Of course, we're usually respectful of their customs, but it's not a requirement for any foreign woman. And we often see even many of the Saudi women now who choose to wear perhaps a jacket as opposed to wearing a full-length arabia. And so these customs have changed significantly, and you see women in the workplace, you see women out at restaurants dining by themselves, which never used to happen, and you see them out with friends, even driving around the city, which again didn't happen. And so there's been significant change. In some areas there can be more, certainly, but it does seem to be on the right track.
If I'm a Western investor and I'm interested in investing in Saudi Arabia, what are the best real estate prospects for me? Where should I be looking?
There are huge opportunities still in building homes in some of the major cities. There isn't enough housing there. There's requirements, too, for commercial office space. The cities are just growing so quickly, and there's such demand that just supply can't keep up with demand. And it's not just real estate. It's looking at everything that a consumer is going to want. So there are opportunities around retail, opportunities around wellness that are growing. As I mentioned earlier, tourism is growing very rapidly, and there's a big push to encourage more people to come visit the kingdom. It was closed for so long that there's really a curiosity about being there, and the kingdom wants to make sure that that experience isn't just a one-time visit, but they're creating the whole infrastructure that it will be a destination over time, that people are going for whether it's their heritage tourism, sports tourism as they build out the sports infrastructure and try to become a sports capital in the region, but also medical tourism and many other types.
That does it for us here at Wall Street Week. I'm David Weston. See you next week for more stories of capitalism.
Bringing them back. I'm not going to comment.
Scott Bessent there, the Treasury Secretary, of course, taking questions on growth in the United States, tariff policy, the market reaction to that, urging everybody to keep calm, to show some restraint, talking about CPI PTSD in the United States being the cause of perhaps everybody not feeling fabulous about where the US economy is right now, according to Scott Bessent. Now, sticking with Davos, tariff talk and Greenland are dominating the conversation. Bloomberg's Lisa Abramowitz is in conversation with the Canadian Minister of Foreign Affairs, Anita Anand. Let's listen in.
What did he mean by New World Order?
So if I could just take that question in two parts. The first is, what did we do with China? What occasioned the Prime Minister to make a statement like that? And first and foremost, we have begun a new era of relations with China. We struck a deal which reduces tariffs on canola and seafood products, and we made sure that we're on a track for a strategic partnership covering numerous areas, including clean and conventional energy, including trade and economic relations, including safety and security, and multilateralism. So the work that we are doing bilaterally and multilaterally with China is in a new era. At the same time, Prime Minister Carney was referring to the complete rewiring and volatility that is underpinning the trade relationships and the WTO among countries. And he was clear to say, as we believe, that we have not reached that new world order. It is not defined at this moment. We are in a process of volatility where we see a reordering of international relationships and a pragmatic approach to global conflict. We see that in terms of Ukraine with the coalition of the willing and security guarantees as a prime example.
So how much is this the rest of the world moving away from the United States?
This is, as I said, a pragmatic approach to international relationships, that it is one and the same time self-interested. That is why Canada is diversifying its trade relationships. We need to ensure that we bolster and grow the domestic economy. At the same time, we will not retreat from our multilateral relationships. Canada stands for certain values, the upholding of international law, the assurance that multilaterally we are cooperative and collaborative, and at the same time pursuing the ever-important growth of the domestic economy in areas where Canada is a superpower, energy being the prime example.
The deal with China included reducing tariffs on electric vehicles coming into Canada from China, and China reducing tariffs on agricultural goods going to China from Canada. How far do you expect this alliance to go? Is there more to come with respect to tariffs being pared back, closer alliances commercially?
Well, as I said, this is a new era in Canada-China relations. And what that means is that there will be growth and advancement in the relationship as we continue to pursue the strategic partnership, the new strategic partnership, I should add, that Prime Minister Carney and President Xi agreed to just a few days ago. What that means is that you are going to see continued symbiosis across issues, especially in the economic area. But let me take it back to energy. Canada's an energy superpower in both clean and conventional energy. The first shipment of LNG left Canada's west coast of British Columbia just last summer, and everywhere I go, countries are asking, how can we have more of Canada?
So much of discussions here at Davos this year have been concerning Greenland. That was not my bingo card coming into this. I'm just wondering, from your perspective, how much that sucked the oxygen out of the room for issues like Ukraine, for other types of geopolitical discussions?
Well, I was the Minister of National Defence between 2021 and 2023 in Canada. And at that time, the Arctic, and indeed Arctic security and sovereignty, was very much on our radar, and it continues to be the case with the Russian illegal invasion of Ukraine, for example, and Russian infrastructure moving further and further north. We, as an Arctic country, 70% of our coastline is interfacing with the Arctic, 40% of our territory. We have no choice but to ensure that we are bolstering our Arctic presence. We are doubling indeed our troop work and deployment nationally and internationally. We're going to make sure that we increase our defense spending to 5% of GDP, as NATO allies are doing. This is our promise. $80 billion was in our last budget for defense spending.
Are troops from NATO going to Greenland and going to Arctic regions in order to protect against possible incursions from China and from Russia or from the United States?
So the question of troops in Greenland seems to be so prevalent. Let me just say, NATO allies routinely do exercises, military exercises together. That's a fact. The point that I've been raising with Mark Rutte, the Secretary General of NATO, is historically NATO's gaze has been eastward, on the eastern flank. Canada's largest military operation is Operation Reassurance in Latvia, for example. But what I've been saying to Mark Rutte, including before the attention has been focused on Greenland, is that NATO is the North Atlantic Treaty Organization. NATO needs to have a northern and western focus. This is clear. It is one of the primary reasons that NATO was founded, in my view. Canada's a founding member of NATO, and we deeply encourage a greater focus on the Arctic. And finally, I'll say I'm headed to Greenland, a trip that was planned long before the past couple of weeks' events took place. I'll be going with my Danish and, of course, Greenlandic counterparts to open formally the Canadian consulate there during the first week of February.
Are we watching the NATO alliance collapse?
Not at all.
OK, we're going to leave that conversation that is happening currently at Bloomberg House and take you back over to USA House, down the street in Davos, to continue to catch up with what we are hearing from the US Treasury Secretary Scott Bessent. Speaking in the last couple of minutes, he's warning against hysteria, quote, over Greenland. He says European countries will continue to hold treasuries. That's been something that's been floating around, the possibility of European countries dumping treasuries. He is calling that a false narrative. Let's listen back in to the US Treasury Secretary.
But that does not mean that we cannot have disagreements on the future of Greenland.
Yeah, but if there's a protracted trade war between the U.S. and Europe,
but again,
what price are you prepared to
you
pay?
say if there's a protracted trade war, why are we jumping there? Why are you taking it to the worst case? Calm down the hysteria. Take a deep breath. This is where we were last year. I'm sure you would have asked me the same question if we were here on April 2nd. And you know what? It all worked out. The economies are fine. We have a very good trade agreement. And I think our relations have never been closer. If anyone in this room wants to go back and study history, has anyone done that? What happened in post-World War II? It was not a straight line. Konrad Adenauer did not always agree with the U.S. presidents. Charles de Gaulle certainly did not agree with the U.S. positions, but that did not mean that we were not strong allies against the Soviet Union, did it? You want to answer that? Did it?
So what's your message to European business leaders then who are now hesitating about the financial relation they have with the U.S.?
That it's been 48 hours. As I said, sit back, relax. I am confident that the leaders will not escalate and that this will work out in a manner that ends up in a very good place for all, for national security, for the U.S. and for Europe. Thanks.
Thanks, everybody. That's going to be the last question for today. We have to restage this room. Thank you, Mr. Secretary.
Thanks.
What I will again remind you all, there is another press briefing. Everyone who is here today is invited tomorrow. I would project that during tomorrow's press briefing.
Okay. You have been listening in to the Treasury Secretary, Scott Bessent, the U.S. Treasury Secretary, briefing at Davos House, USA House in Davos, basically trying to downplay the message surrounding the recent tariff escalation delivered by President Trump. Sit back and relax.
Sit back and relax is his advice to European leaders. President Trump saying overnight that he is confident that Europe won't push this too far, and Scott Bessent saying that he is confident that this will not end up in escalation. I mean, we've talked many times about the realpolitik of security arrangements that mean maybe Europe is limited on the extent to which it can push back. But I think you got a sense of some of the anger in Europe just from some of the questions from the journalists. They were quite pointed in places, and I think that reflects the mood.
And the Treasury Secretary trying to parcel off Greenland as a separate issue that can be worked out, that should not be impacting that US-EU trade deal, saying this is a good deal, he expects it to remain. And he kept going back to April the 2nd, the huge sell-off, all the anxiety, and saying, look, it worked out, it's going to work out again.
But why did it work out? I mean, didn't they step back from the edge in the end?
Yes, and it was interesting that he referenced China as an example. If you push back on the US, then we will retaliate. Do not push back on the US. Well, of course, many people's interpretation was that China played a blinder in terms of putting rare earths on the table and actually got the US to back down. But nonetheless, he was using an example, do not retaliate against the US. That was his warning to Europe.
They seem to want to position the Greenland trade just as a transaction.
Well, it's real estate. He said over the weekend, we need title. This is the language of real estate, isn't it? This is the way that maybe this administration views this conversation. It's certainly not the way it is viewed in Europe, and that's awkward.
It's quite hard to tease apart what we're seeing in terms of the market reaction to all of this morning. You've obviously got the Japanese situation that is evolving fairly quickly, a big move in the bond market there. Gold has moved on the back of that as well. Can I separate out what we are seeing vis-a-vis what is going on surrounding Greenland? The Supreme Court potentially a little bit later on. It's a day littered with risk events.
Yes, I mean, long end JGB yield going up on the Japanese story. The long end of the Treasury curve also elevated then. Yields up now 7 basis points at the 30-year end. No doubt something on Scott Bessent's
Is the
mind.
equity market the Greenland story and the bond market the Japan story? I mean, there are interlinkages as well.
And
in terms of
FX was very much a Greenland story yesterday, wasn't it? Although the Japan story getting in there as well now with the yen question.
It's really hard to deal with, and you get more and more commentary coming through from President Trump over the next 24, 48 hours. He's got this obviously big series of meetings in Davos. Who knows what are going to come out of that? It is personal the interactions become very personal very quickly, as we're seeing with Emmanuel Macron. So what happens next? Let's try and get a sense of that and how it's likely to evolve over the next few hours. Bloomberg's chief Europe correspondent, Oliver Crook, joins us now. Ollie, what do you make of that? So how have things evolved in your mind this morning vis-a-vis Greenland and Europe's response? The Treasury Secretary, Scott Bessent, a couple of moments ago, saying Europe just needs to sit back and relax. Just watch this play out. Is that how Europe is treating it this morning? Is that how we should expect things to evolve?
I don't think necessarily that that's how things are going to evolve this time, Guy. I mean, I think that there were definitely some lessons learned in Europe from the first trade war last year, and I think again the sort of overarching theme here is that yesterday it was about the trade deficit, today it's about Greenland, and tomorrow it can be about something else. So appeasement may not be the route forward for Europeans. There's some disagreement among European leaders about exactly how to proceed. It hasn't been really spilling out into the open, into the public yet. We know that Macron has spoken very sort of aggressively about the anti-coercion instrument. That's something that Macron has really spoken about really from the beginning and even in the trade war of last year, because the French are not quite as exposed to the American exports as, say, the Germans. So this is going to be a very lively debate for European leaders as they meet here in Brussels on Thursday evening. We should say that there might also be a G7 meeting we're hearing in Paris on Thursday afternoon. We got those text messages that President Trump from Emmanuel Macron has shared on Truth Social, saying that he's trying to arrange a possible meeting in Paris, that he doesn't understand what President Trump is doing on the issue of Greenland. Really, very interestingly, he says he's offering to set up a G7 meeting after Davos in Paris, that they would invite the Ukrainians, Danish, Syrians, and the Russians to on the margins of those conversations. So something, you know, a sort of G8-ish meeting potentially from the French president that's being offered there, a sort of interesting tidbit, not something I imagine that the French president would have shared with the public. But again, I think that going back to your original question there, Guy, there are some things that have been learned. And again, we said that Scott Bessent here in this press conference, he just said that the Chinese were the only ones to push back. And I think in the minds of many, the Chinese were the only ones to really win in that dispute with the United States. So the Europeans are going to have to work very sort of carefully, very calculatedly. Again, Scott Bessent says that NATO is rock solid. That is going to be the main concern for Europeans pushing back. Will this infringe on the possible security guarantees and the commitment of the United States on issues of Ukraine and security?
Ollie, thank you very much. Bloomberg's chief Europe correspondent, Oliver Crook. We have been listening, of course, to Scott Bessent. Plenty of content in there. Let's think about where this leaves markets. Mark Cudmore joins us from our Markets Live blog, of course, our Markets Live executive editor. Mark, let me start with the European agenda because we're just ahead of the European Open. French futures are weaker. There could be a tariff perhaps on champagne, we hear, overnight. US stocks set to fall on Greenland, but of course they are playing catch-up. This is one area of negativity that markets are dealing with, but then, of course, you layer on top higher yields in Japan.
Yes, I think there are two very big risk-averse events happening at the moment. The obvious one is Greenland is going to be a really slow-motion train wreck. I think the problem is here, kind of as Ollie outlined there, is there's no incentive for either side to back down. There's no incentive for Trump to back down from the hard line, and there's no incentive for Europe to kind of concede any major ground until the populace in Europe starts squealing on the economic front, which probably won't happen to at least those 25% tariffs in June. So we're going to take a while to price this because we're not going to get more aggressive lines from Europe. We're going to try find a diplomatic solution, but it's hard to see where that compromise comes. So that's the slow motion risk aversion. And I understand why people aren't overreacting at the moment, given the track record over the past year of Trump always chickens out. But there's less incentive there this time. The other more immediate concern, and the one I'm really concerned about because it's definitely been underappreciated at the moment, is what's happening in the JGBs market. 30-year JGB yields are trading 40 basis points above where they were on Friday. They're about to close the yields are about to close the highs today, about 27 basis points higher on the session. Now, this is really important because it has global macro consequences that will come delayed. When will they come? They'll come when JGBs find a floor. Now, I'm not sure that's going to happen. We're still a couple of weeks away from the election, and this is, we've talked about it for a long time that JGB yields should ultimately be much higher. The country's got a massive debt problem and it's about to expand fiscally very aggressively. So it won't be a global problem until they find a floor, but that could be much higher. It'll be a domestic Japanese problem. But when they find a floor, Japanese investors own assets all over the world. If they have a chance to buy JGBs at, 40 basis points yields already over the last few days, but could be much higher yields, they're going to pull back money from around the rest of the world. That will blow up the carry trade as well. This is a large bond market, so the consequences here are massive and being underappreciated.
Just what happens next then? How does this? Just give me the implications for the Treasury market, the European government bond market, people's portfolios. Mark, when does this start? How seismic could this be?
I think this is very big, but I can't work out the timeline. Several people have asked me today, and I'm struggling to work out when it feeds in. What I will say is that I don't think it's immediate, because as I said, I think that the global impact is when JGBs sell off enough to find a floor, and that's when you get money back home. And I don't think we're close to that level yet. As I said, the election is still, almost 3 weeks away, and therefore we've got a lot of time for this to play out. And I think it's getting its own self-reinforcing dynamic. Who wants to go into this market right now? We're talking about the Bank of Japan having to hike maybe 3 times this year to defend the yen and the JGB market, which is just creating the dynamic even worse. So I think it's delayed for the rest of the world. It's Japan focused right now.
Okay, Bloomberg Markets Live executive editor Mark Cudmore on the potential implications of the significant sell-off that we're seeing, particularly in the long end of the Japanese curve in terms of the sovereign debt there. And you can get a lot more analysis, of course, from Mark and the rest of the team by going to MLive Go. European futures pointing lower by 0.5%. US futures lower by 1.6%. We'll bring you the open. That's coming up. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance. Bloomberg is covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays only on Bloomberg.
Our Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard,
Oh boy.
can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every weeknight. Balance of Power, weeknights at 10 p.m. London time, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Tuesday morning, good morning. Couple of minutes to go until European equities start trading, cash European equities start trading. Look at all that snow. Look at that. Davos looks amazing this morning. It is going to be the centre of attention, I suspect, over the next few days. But it's having to compete with other places as well. Tokyo is one of those, certainly at the centre of the debate this morning on what happens next. We've got a big move in JGBs, huge move in JGBs. What are the implications of that? We will discuss in a moment. US futures, remember we were closed yesterday. It was MLK Day over in the United States. We're playing a little bit of catch-up when it comes to this story. We're down by 1.36% on US futures. There's a whole range of risk factors to price in this morning, from what is happening around Greenland to the story in Japan to the Trump tariff story coming out of the Supreme Court potentially a little bit later on. Earnings, we've still got plenty of those to talk about as well. It is a packed risk session. Tom, European futures?
Yeah, Monday was all about, of course, the trade story, the tariff impact potentially on the likes of the automakers and luxury goods, and you saw losses across the benchmark of 1.2% today.
ओके गाइस, ये क्रूड ऑयल वापस लेवल के नीचे आ गया है। मल्टीपल टाइम टेस्टेड लेवल था, काफ़ी देर से रेजिस्टेंस पे रुका था। कल भी यहाँ पर काफ़ी देर रुका, सेलिंग आ गई थी। आज भी काफ़ी देर रुका है, फाइनली वापस नीचे आ गया है जो मैं एक्सपेक्ट कर रहा था। जोन उसके नीचे क्लोजिंग आ चुकी है 5400 के नीचे। तो अब अगर ये हल्का सा पुल बैक देता है तो अब यहाँ से सेल कर सकते हैं। नाउ मोस्टली जो बायर हैं वो निकल गए होंगे यहाँ पर। तो अब एक हल्का सा पुल बैक आता है तो एक सेलिंग का प्लान यहाँ से रखेंगे, ठीक है। पुल बैक आना चाहिए, नहीं आया तो बाद में आएगा तो तब ट्राई करेंगे, बट अभी के लिए लेवल के नीचे कैंडल आ चुकी है क्लोजिंग बेसिस पे, सो इट इज़ अ गुड एरिया फॉर सेलिंग अगेन। दिस नाउ लेवल एक्ट लाइक अ रेजिस्टेंस अगेन। तो एक पुल बैक आने देना, डायरेक्टली मत सेल कर देना। अब सेल किया हुआ ऊपर से तो यहाँ पर हाफ प्रॉफिट ऑलरेडी बुक करके ट्रेल कर लो। पुल बैक आएगा तो वी विल सेल अगेन। वैसे तो काफ़ी देर से रेजिस्टेंस पे ही है प्राइस, बट नाउ वी कैन एक्सपेक्ट स्टिल दिस लेवल विल होल्ड। तो काफ़ी बार टेस्ट हो चुका है, इसलिए मैंने लिखा हुआ है MTTZ मल्टीपल टाइम टेस्टेड जोन। कल ही लग रहा था ये ब्रेकआउट, परसों ही लग रहा था ब्रेकआउट हो जाएगा, बट काफ़ी देर रुकने के बाद सेलिंग आ गई थी। कल भी क्लोजिंग वहीं पर रेजिस्टेंस पर ही हुई, आज ओपनिंग पे रेजिस्टेंस पे कंसोलिडेशन कर रहा था। नाउ फाइनली वापस से नीचे आ गया है। एक लेवल यहाँ है, मार्केट को यहाँ जाना तो है, पता नहीं देखते हैं कब जाता है इस एरिया के आसपास। गुड एरिया फॉर सेलिंग एक्चुअली 5000, 550, 560, 580, क्योंकि लोअर एंड से तो सारी जितनी लिक्विडिटी थी मार्केट ले ही चुका है ऑलरेडी। नेचुरल गैस में भी रेजिस्टेंस पर ही है प्राइस, थोड़ा सा नीचे आता है वापस तो इस एरिया के आसपास वापस बाइंग प्लान करेंगे। ऊपर से सेलिंग का ही प्लान है फिलहाल के लिए। वाला ही रेजिस्टेंस जोन है एक्चुअली में, स्टिल होल्डिंग। ओके, लंदन सेशन इज ऑलरेडी ओपन, लंदन सेशन भी ओपन हो गया है।
23, 24%, S&P ex-tech is 4 and 5%. So it's still, this gap is there. And you're absolutely right. When we see this real kind of delivery of strong earnings outside tech, that's when you rotate. And yes, that's everybody expects like rally broadening. You do need to see strong earnings broadening. That's really important.
Within the tech basket, do you sell software, given the challenge of Anthropic's co-work, for example?
I mean,
some of the legacy software names?
Yeah, software is probably one of the weakest spots within software, so also within tech. But as I say, it's not just like tech per se. It's areas with strong earnings. Where do you find strong earnings? They happen to be in this kind of mega cap area. But within that, it's really important to focus on strong profitable tech. So, yeah. I mean, unprofitable tech is doing quite well recently. So that's an area of concern for us, of course.
How big a risk is there that the Mag 7 underperformed the S&P this year?
And it's always a risk. Positions are high. I mean, I keep stressing that when you're uncertain, you have to, like, where do you hide from?
The market's not doing it, though. The market's the Russell's up 7%, the Nasdaq's up 1%.
Yeah, no, I hear you. And it's very common to see that sort of behavior at the start of the year when you come in new. What's cheap? Let's buy something cheap. Let's buy small caps. Let's buy mid cap. Yeah. Let's buy value.
But the US economy is reaccelerating. That's the reason for the trend.
Well, let's see. I mean, earnings season is coming. Yeah. So I think it's kind of show me the money moment. Yeah. You need to see those companies really delivering. So far, we haven't.
What happens if yields go higher? These are long-duration assets. Don't they get hammered on that?
I mean, we were worried about that for tech like a couple of years ago when years got higher. Yeah. And then we discovered those tech companies have so much cash and they are kind of a lot less sensitive to higher interest rates than small caps, who are very much depending on cheap financing.
How confident are you spot the turn? Because the market is already the market's getting nervous about tech. Okay. That is, I'm seeing article after article, note after note. How confident are you about spotting that turn? And if you don't get it right, how ugly could it be?
Yeah, no, I think that's a really good point. And I mean, we saw that last year. Last year, people were very worried about tech, and we've seen bouts of selling of tech. And what we saw in State Street custodial database, people sell out of tech. That's easy. The question is, what do you buy? And what do you buy? You need strong earnings. And then people invariably gone back to tech. So that was the thing, that until you find a good place to kind of park your money, and I mean, clearly that's not gold and miners because they're equally as expensive, and you can make the same concern. So unless you find economy really reaccelerates and you go and buy your industrials materials, or it really collapses and you go and buy your defensive, you kind of, if you kind of bubble along and you kind of soft lending economy, right, that people thought impossible, then you stay with tech. But on your point, how ugly can it get? I mean, absolutely, positions are very, very elevated. So you see kind of a big kind of step down. But also, I would say, when people really begin to rotate, it took investors years to build up those positions. So, okay, it's going to be sharp fall, but it will be prolonged fall. So I think you probably can get on this trade.
Sharp and prolonged.
Yes.
Wow, okay. Maria, where does that leave European tech? I was interested yesterday that the conversation, the concern was very much about tariffs, and there is some read across into tech there, but even where there isn't, this was just a sector that had done okay, so it was being sold off. I mean, where are you investing across the European technology space?
Yeah, I mean, I think that people often talk, okay, we want to diversify from US. US is so crowded, let's buy Europe, let's buy emerging market. But then when you look within that, what do they buy? Yes, they buy like better earning stories, right? And if they find that in European tech, great. If they buy it in Korean tech, great. So, but it's still the same trade. So it's not really diversification. So, I mean, I keep stressing, it's earnings, it's large cap, it's strong balance sheets, that's what you buy. If, I mean, yes, in your European tech is that, so that's fine, you buy that. But it's really earnings story. It's not like, okay, I'm like tech evangelist. It's better earnings. That's the stress.
I'm getting a theme of earnings coming out of this conversation.
That starts soon, doesn't it? Yes. Feels like we're just on the verge.
Yes, absolutely. I think Netflix is tonight. Yep.
Yeah. I love that Maria says she's not a tech evangelist.
Really? It's just felt that way for a very long time.
2 years.
No better alternatives. Not an evangelist, just no better alternatives.
Absolutely,
That's the right way of putting it. Maria, nice to see you. Thanks very much indeed for stopping by to see us. Maria Feitmana, Head of Equity Research at State Street Global Markets. Core 6 looks a little like this morning. There is a lot of activity in the luxury space. It is under pressure. I could argue maybe you would have seen more. A 200% tariff on champagne. LVMH is down by 1.5. It was under a little bit of pressure yesterday. Defence stocks are coming off. Tech, there you go. ASML, one of the few standout stories at the upper end of the markets this morning. Let's find out what else we're watching with Jennifer Creary.
That's right. We're keeping an eye on some of those French drinks makers. LVMH, Pernod Ricard, Rémy Cointreau, all down in the red this morning. That's after the US President Donald Trump floated a 200% tariff on French champagne and wine makers. That's in retaliation to French President Emmanuel Macron's refusal to join his Board of Peace. Macron raising concerns over respect for the United Nations principles and framework, those weighing heavy on drinks shares this morning. We've also got Renault up in the green, up more than 3% this morning. That's after the company announced that it's contributing to the development of the French drone industry. Of course, investors on the lookout for stocks that are poised to benefit from additional military spend from European countries. Those shares positive on the open. Next up, we're taking a look at BHP as well. Down in the red this morning, down almost 2%. That's following on from a drop of 2% in Australia as well. That's after the world's largest miner raised its projected investment in its potash project in Canada to $8.4 billion. That's up more than $1 billion above the upper range of its previous guidance, weighing on the shares this morning. And finally, we've got Wise as well. The company reaffirming its underlying income forecast for the full year. It's also seeing its margin at the high end of its stated range. Those shares soaring on the open, more than 10% off the back of that news.
OK, Jennifer Curry on some of the stocks that are on the move this Tuesday. Jennifer, thank you. Coming up, we are joined by Lila Ibrahim, COO at Google DeepMind. Expect top lines on all things tech and AI. We're just talking about the AI trade, of course. So more insights from someone near the top, of course, of the chain when it comes to DeepMind. That's coming up. This is Bloomberg.
At any point in your tennis career, did you say, I've had enough and I'm just going to retire at the top? Do you ever worry about that problem, staying too long?
It's a great question, and it's one that I think every athlete finds a different answer to. Mine came a little bit later than when I would have liked. I think stubbornness was a great quality that shaped a lot of my victories, but in the end of my career, I think it became a flaw because I was so stubborn to get healthy, for my shoulder to recover. I was also at an age where just my body didn't recover as quickly. And so for a year or two, that stubbornness got in the way of other great things in my life.
What would you say is the thing you're most proud of having done as a tennis player? Was it winning Wimbledon? What was the highlight of your tennis career?
I'd say consistency. I think consistency is, you can have results and they could, come at various times in your career, but I was consistent for many years, and you have to show up. You don't just show up to play first round of the finals, but you have to show up for press conferences before every match, before every tournament, and just the consistency and the mental wear and tear of showing up week in, week out. So I felt like I consistently showed up for my team, for my sponsors. As I look back, I'm proud of that.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Welcome back to the opening trade. 8:16 here in London. Equity markets 16 minutes into their session and stocks are weaker for another day. Let's check out what's happening in the bond markets, though, because there's a lot of news flow being generated there, or a lot of movement generated there because of the news flow coming out of Japan over recent days. Election is called, fiscal worries to the fore, and so we see Japanese bond yields up by 26 basis points at the 30-year tenor, and for the US markets, for Treasuries, up by 8 basis points at the same time horizon, guys. So once again, worrying about the long end of bond markets.
Gilts market moving at the long end as well. There's a huge move in the bond market and it's rippling into other asset classes. Geopolitics a big feature of the landscape as well. Hard to kind of separate that out. Plus you've also got to throw in what is happening around AI. That AI story certainly a big part of the Davos agenda as well. Let's get a little bit more on what is happening on that front. Let's hand things back to Francine Lacroix at the World Economic Forum.
Anna Guy, thank you so much. I'm delighted to be joined by Laila Ibrahim, CEO at Google DeepMind. Laila, as always, thank you so much for joining us. Look, it's very clear that President Trump has stolen the limelight. Everyone is talking about trade and tariffs and what's happening with Greenland. This was also meant to be the tech show. We have all the biggest tech companies here. Like, how, what will you focus on this week to try and get the most out of Davos?
Yeah, well, these are certainly interesting times, and as a global organization, we really need an opportunity like Davos to be able to have many different conversations. We operate in continents around the world, and we try to focus on what we can really control, which is how do we make sure that AI is being developed responsibly and to benefit humanity. So we're really focused on a lot of those conversations this week.
Laila, what is DeepMind now? Is it still a research lab, or is it more a product company?
Well, DeepMind was founded originally about 16 years ago as an AI research lab, and it continues to operate as such. But we've also been able to bring in becoming the AI innovation engine room for Google. So everything from Gemini and our latest models like Nano Banana, all the way to some of our scientific breakthroughs and our work in terms of what might the next breakthroughs in AI be, such as what's the next transformer technology. So we have quite a broad portfolio.
How much are you working on enterprise? I know Code is a big hit with developers. When will Google's versions, anti-gravity, come out?
Yeah, well, we've been really focused on continuing to make Gemini a really powerful model, bringing in capabilities that we think can unlock human potential. And Code was one of the areas that we really focused on in the past year, and really pleased with the progress we've seen with Gemini 3, which was announced at the end of last year.
So what's next for Gemini? Are you hiring more people to work on it?
Oh, and we're always looking at our talent. And so on Gemini specifically, we're continuing to think about what are the capabilities that will continue to increase the making it valuable for users. So things like, how do we continue to make it more factual? How do we help with things like reasoning, concepts, memory? We really believe that we can have a personal assistant, but in order to do so, there are a lot of areas that we need to work on, such as privacy, as well as how do you make sure that you have memory. So the AI understands me and my preferences and my needs, and I can use it as a tool as part of my everyday work. And what that requires is really understanding more of kind of the world model, the context around us in our daily lives.
Is there anything that you've put on the back burner because of your big focus on Gemini?
Well, an organization like DeepMind, I think one of the extraordinary things is that we have been able to keep the breadth of portfolio. So when you look at last year, not only did we have Gemini and VO, progress in our video generation, audio, imagery, but also things like Weather Next 2, being able to predict weather forecasts, like 50 different paths of a hurricane for the next 15 days, which really, if you think about it, can really help with emergency preparedness. We've also made significant progress in some of our materials discovery to help with superconductors, to power supercomputers, or next generation batteries to help with electric vehicles. We've continued to advance work in SynthID, our watermarking technology, ancient text to help us understand the past. I think there's so much exciting work that's happening, and that's actually what makes this such an extraordinary place to work. Is I've never been in a place that the human we're only limited by the ideas that we have. What are the biggest world problems that we might be able to address with AI?
It's going so fast. What are some of the ethical questions? I mean, you touched on privacy. There's a couple of other things that I know you think about, but how should we be looking at it? Because this is also a race. I mean, this is probably the biggest geopolitical race, even, you know, with other countries, including China. And so I wonder whether when you build it so fast, there's things that could break.
Yeah, well, we're always thinking about responsibility, safety, security from the very start. In fact, when we embark in our research projects and start to define them, we're also thinking about what are the risks, how might we mitigate them, if we don't have the expertise around the table, who are the partners that we need to partner with, but then also what are the opportunities and how do we make sure that we're not solely focused on the risks, that we miss the opportunities and invest in those. You know, one of the things that I've been really excited about in the past year is some of the progress we've made around making Gemini better for learning and education. How do we make it more efficient, more effective, more engaging so that learners, regardless of where they are in their life journey, the technology can meet them where they're at. And that, of course, also brings up a lot of questions and concerns that we have about, like, what is the relationship that humans have with their AI? How do we think about mental well-being? These are all areas of research and investment that we're making up front so that we can develop both the innovation as well as mitigate the risks and do so responsibly.
What are business asking you? So I'm sure you're meeting with a lot of big chief executives here, and a lot of them are excited. They're investing quite a lot or buying some of your models. But what do they need for their staff?
Yeah, well, one of the questions I got last night at dinner was about this, are we prototyping too much? Is there too much piloting going on? And my response was no, we're still early in AI's development. It can feel like we're far further along on the technology curve than you might expect, but there's still so much work to be done to make the models even better and more valuable for users. And as a result, we're never going to have as much time as we do right now to explore and really understand how do we want to shape the technology. Where and how do we want to set the boundaries? One of the things I've done with my own team is to say we need to be experimenting with using AI as part of our workflow. Right. And at the same time, what are the very human elements that we're bringing into the job that we should actually celebrate, retain, invest in? And I think it's really this kind of co-development of AI in the workplace, also recognizing the human value, and that's how we're going to shape how AI will reshape our jobs.
Lila, what is your biggest concern regarding, I mean, away from ethical questions, is it actually access to power? So is it trying to figure out the energy complex? Or is it just making sure that, you know, rivals like Meta don't poach your staff? It seems like it's a massive global talent war, like maybe the banks were facing 10 years ago.
Yeah, well, actually, on the talent side, we tend to focus on is how do we make sure that we hire really good talent that are very values aligned with the work that we do. And because our mission is to build AI responsibly to benefit humanity, that shows up in the people that we hire and the culture that we build. And so from a talent perspective, I feel like we know what we want to do there. The ethical questions, I think it's not just about the ethics questions, it's also about misuse. So we think a lot about how do we make sure that the benefits are significantly outweighing the risks and the potential harms. So we think a lot about the governance, how do we make sure that this is regulated well, how do we operate responsibly in the countries where we are. I have to say that really what keeps me up at night is the risks. Are we doing everything we can to mitigate them? Are we thinking enough around the corner? Yeah. Because if you're not investing in that early, you can't be a bolt-on, right? It needs to be very early on. And then also, are we investing in the opportunities? We believe AI could be one of the most transformational technologies of our time, and we're already seeing how it's empowering creatives, how it's improving education and learning, how it's unlocking productivity and advancing scientific breakthrough. We're seeing real-world impact right now. And so I also worry a lot about, like, are we really maximizing the benefits to provide as much as we can for the world.
Lila, thank you so much. Lila Ibrahim there at Google DeepMind COO. Back to you in London. We'll have plenty more and throughout the day here from Davos.
Francine, thank you. Back with Francine and the team as we go through the programme. Tom, we've got a focus on, I said champagne earlier, it's actually wine and champagne that President Trump has threatened to put a 200% tariff on. And so we'll continue to keep an eye on what's going on with LVMH and Pernod, because this is just wider than just the champagne sector. But those stocks certainly in focus, although Pernod Ricard going higher this morning.
I think our favourite stock of the day is, or at least our favourite stock story of the day, is potentially Ryanair and the spat between Michael O'Leary and Musk, of course.
It's easy to not take seriously, isn't it? But then you remember what happened with the purchase of Twitter. Nobody took that very seriously to start with, did they? And then
And then
Here we
suddenly it
are.
happened.
Yeah, okay. I struggle to see how this goes much further, but I guess you've just got to price it in and
attach a low probability.
Attach a low probability and see what happens, but it seems to be moving the stock. The story is the bond market, though, this morning. Epic moves we're seeing. Out of Japan, rippling into other bond markets around
And
the
maybe
world.
another reason why European stock markets failed to bounce this morning, another reason to be concerned.
Yeah, the sell-off is there, and it's rippling across, arguably, to the equity space as well, to your point. Coming up, more on the tech theme, though, as we head back to Davos to talk all things technology investment and AI with Fabrizio Bloisi, who is the CEO of Naspers and Prosus. That is next. This is Bloomberg.
Bringing you up to the minute news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Welcome to the world of decentralized finance. Bloomberg is covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
This is the opening trade. We are 30 minutes into today's session, so the selling pressure continues across the European equity space after losses of 1.2% yesterday. Further downside today, down 0.7%. The luxury names under pressure again on the tariff threat, but there's a sell-off in the global bond markets as well, particularly at the long end, and we'll get the details on that shortly. There's rippling across the equity markets as well. Arguably, it's not just trade and tariffs and Greenland, it's also what's happening in terms of the ripple effects of Japan and the sell-off there. So we'll start with the Japanese 30-year, where yields are up 26 basis points. That's where the pressure is. The 10s are selling off as well, and you're seeing that then read across in terms of US Treasuries. The 30-year at 4.92. When do we get to 5% on the 30-year? Closing in on that with moves of basis points, 8 basis points higher on the 30-year. Here in the UK, the 30-year is also high. Yields up 6 basis points, 5.22 now on the long end of the UK gilt markets. We're seeing the effects already, Guy, in terms of the concerns domestically in Japan about the fiscal spend and cuts around consumer goods and the global effects of that.
It's going to be interesting to see how it plays out over the next few days. Okay, let's talk about the internals and what is happening in this market. They've got a 5-to-1 ratio basically in terms of losers versus winners. Only 97 stocks up in the stock 600. You've got relatively light volume, which I think is interesting. Maybe we need the US to reopen to get a volume picture coming through. Let's talk about stocks that are higher today. Wise, the transaction company, up today on an update, Q3 update. It's also talking about a US listing. That stock is up by nearly 13%. I'm averaging, pushing it up a little higher. Ryanair's up by 1%. I think we're fading the idea that maybe Elon Musk could buy Ryanair. ASML, though, now moving into negative territory, so there's some of the tech kind of heavyweights that initially lifted the market beginning to fade, which is interesting as well too. So even the leaders now seeing some red on that board. Let's talk about where we are. Certainly seeing some losses. The pharmaceutical space is down. Astra's down. Roche is tracking a little bit lower. Keep an eye as well. The Supreme Court potentially ruling on tariffs a little bit later on. That's a factor in that sector. But the tariff story certainly writ large when it comes to luxury. LVMH, big maker of champagne and wine, down by 1.75% on that tariff threat, Anna.
Let's talk about some of the other news flow, and we'll start with what's been driving bond markets. The slump in Japanese bonds deepened earlier today, sending yields to records as investors gave a thumbs down to Prime Minister Sanae Takaichi's election pitch to cut taxes on food. The Japanese 40-year rate topped 4%, the highest level since its debut in 2007. The yield on 30-year JGBs climbed by more than 25 basis points. Donald Trump has threatened to impose a 200% tariff on wine and champagne from France. This after the French President Emmanuel Macron declined an invitation to join the US President's proposed board of peace for Gaza. Sources say that President Trump wants the full constitution and remit of the committee signed in Davos on Thursday. Meanwhile, Donald Trump has renewed his push for the United States to take over Greenland, claiming the European Union won't resist much. Speaking about the Arctic territory late yesterday evening, the US president said, quote, "We have to have it." He added that he will meet with several parties in Davos over his ambitions for the country. Tom.
OK, well, let's get back to what's happening in terms of the conversations in Davos. But before we do that, European stocks, of course, outperforming the US so far this year. The dynamics, of course, have changed in the last 48 hours or so, with tech names in the driving seat. Is that momentum now at risk from those rising trade tensions? That is a topic of conversation on the ground at the World Economic Forum. Let's bring back in Bloomberg's Francine Lacott, who is there with a guest who has an insider view on the sector. Fran.
Yeah, an insider view, because joining us now is Fabrizio Blasi. Tom, thank you. He's the chief executive of Process and Naspers Group. Fabrizio, as always, thank you so much for joining us. Look, you've been on the acquisitive trail. I mean, you've done a couple of things that were quite big. You've gone after large assets in Europe, including Just Eat. What happens next? Do you have appetite for more?
Francine, pleasure to be here. It's always a pleasure to be here with you. Yeah, very excited, just getting started. We did like $8 billion in acquisitions last year, what included Despegar in Latin America, then Just Eat Takeaway in Netherlands, and then we did La Centrale in France. So it's a good start, but I think we have everything ahead of us. For sure we are willing.
More to come?
More to come.
More to come?
I'm sure.
How much money do you have to spend?
We have more, at least $10 billion more to keep investing. And I see so many opportunities. The world is changing a lot. Actually, I think we are starting realize now we are in a new world order. In this new world order, everything changes, and there will be much more growth in AI technology outside US. Over the last 2-3 years, all the wealth creation in technology was in US. What we believe is that after this decoupling that is happening right now, we will see much more growth all around. So we are investing a lot in India. We did 5 IPOs in India this year. We are ready to do more acquisition investments and IPOs in India. I think India is growing a lot, more than 7%. It's the 4th biggest economy. We did a few acquisitions in Latin America. Now we have a very big group of tech there, and I think we can do much more. I think Latin America has a space to have $100 billion business there. And Europe is my passion. I committed to Europe. We did Just Eat Takeaway in La Centrale, like $6 billion in investments. And I think we can do much more. Hope we can move much faster. That's my...
Okay, faster because you're frustrated with regulation in Europe. You were telling me that. But what do you want to go after? What will you do, for example, with your stake in Delivery Hero?
Yeah. When we did the Just Eat acquisition, the commitment we had to do is to have to divest $3 billion before we can do more acquisitions. I think this is a big mistake for Europe. I think Europe should be talking about how we invest more and faster. But actually, we are talking about how I divest faster. I think this is absurd. I think competition authorities in Europe said no to the Siemens-Alstom deal 5 years ago to create a big transportation global business. We don't consolidate banks, we don't consolidate telecommunication, we are not consolidating or have a bigger group in food delivery. I think this is a mistake. I think this is, we are behaving as if we were in 1996. We are in 2026 and the world now requires big tech in Europe. So I am legally obliged now to divest the Delivery Hero. What a big mistake. I'm sure because the world changed that Europe is going to keep changing. And understanding that, we have to build big tech here.
Fabrizio, it's very clear that the Trump administration is here. They're taking aim at Europe because of their treatment with tech and big tech, and because they say on the geopolitical front they're too weak to actually defend something like Greenland. Like, do you agree fundamentally with Trump that the European economy is broken?
I see Trump saying, I'm here to defend the interests of the American companies and fighting for that. Fighting for that aggressively, let's say this way. I see other countries also fighting for their companies. And I think the difficult decision that Europe has to do, and they have to do trade-offs that they are not doing today, is to say, we need to have big tech in Europe. Otherwise, the big tech is going to be in China and US. And I don't think these big decisions are being done yet. For example, as I told you, we really need to consolidate and have bigger technology companies here. I don't think it's happening.
But it doesn't deter you from looking at other assets. So is there a particular sector that you want to be more involved in Europe?
I think that the disruption happening right now is on AI, obviously, and assistants. Over the last 1 to 2 years, we have assistants that answer all the problems you have. But what we really bet now is in assistant that do things, assistant that deliver real work, real things, assistant that you can ask something to them and they can make your life easier. And we are a very big player on that. Outside of China and US, we are by far the biggest player. So we do food delivery all around the world with hundreds of millions of customers. We do travel, mobility, events, grocery, pharmacy. So I think the big thing for us is to connect the AI world to 1 billion customers where they can just ask and have their problems solved. So I think a few years ago, people talk about super app, like an app that do everything. I think the direction now is a system that connects the real world to the artificial intelligence world. And I can't think of a better company to do that outside US than Prosus.
Okay, so what are you looking to buy? And actually, if everything goes to plan, and that's a big if, what does your company look like in 2028?
We are going to keep expanding in the position that we have today of marketplace that deliver, as I said, many real-world services and also e-commerce and payments to really take all the friction and people, as I told you, can just ask your virtual assistant and have all those services delivered. So we are looking obviously for food delivery consolidation. We are looking for all the adjacencies, so we can really make our customer life easier.
Does this super app or the super assistant, does it have to be European made because of friction with the US and US tech companies?
I think, as I told you, it's a new world organization. You have to do that on Europe. You have to do that in India. You have to do that in Latin America. You have to have local technology that enable those countries to have sovereignty in this kind of services. And that's the Prosus approach. So we have today a big lab of AI in Europe called Prosus AI Lab. In Netherlands, we also launched the AI House in Netherlands, and we are expanding that in Europe and also in India and Latin America.
What happens to your Tencent stake? Do you wind that down?
We are a big shareholder of Tencent. We are a big believer of Tencent. We sold a little more of Tencent lately, but I want to reinforce I think Tencent is the biggest company in China. It's an amazing company. And during the artificial world...
Will you sell a bit more?
I just announced a few weeks ago that we changed substantially our buyback. So now we are doing a few buyback with Tencent. But right now, our buyback is financed more of non-Tencent assets than Tencent. And I think this is very good for Prosus. I think Tencent has an amazing future. And remember, in artificial intelligence world, having WeChat, it's an amazing asset. I think what Tencent can do is just getting started. So we are selling much less of Tencent, and we are keeping our buyback. We even increased the buyback, selling other assets with less future than Tencent.
Fabrizio, thank you so much, as always, for joining us. That's Fabrizio Blasi, the CEO of Prosus and Naspers Group. Back to you in London, Guy. We'll have plenty more, of course, from Davos throughout the day.
Looking forward to all of that. The message, a simple one there. Europe, get your act together. You can't be thinking that this is 10 years ago. 2026 is a different ballpark. Plenty more great guests coming out, as Fran says, from the World Economic Forum in Davos today. The Finnish president, Alexander Stubb, is going to be joining us a little bit later. The CEOs of both Merck and Novartis on deck as well, as will be the Bank of France governor. What does he make of what we are seeing in the markets today? Big moves in bond markets. And, of course, UBS, his CEO, Sergio Mossi, will be joining Bloomberg. Looking forward to that conversation.
OK, so those are some of the conversations coming up. There is a conversation happening right now in Davos at the Congress Centre. Bloomberg's head of economics and government, Stephanie Flanders, as you can see, is speaking with Uber's CEO, Dara Khosrowshahi. Let's take a listen.
Revenue-based. And one of the advantages that Uber has is that we know today how much essentially a human driver can bring in terms of revenue. We take about a 20% cut, et cetera, of that revenue. So 80% goes to the human driver. We can sign up for a revenue model that has a high degree of certainty. And as a result, today we're working with very large financial institutions to essentially prove out the financing model for these fleets. We will take balance sheet risk to begin with. But as we prove out this revenue model, then we see significant capital players who are very, very interested in coming into this market. It's a non-correlated asset, so to speak. It will be a very, very large market. And essentially, just like you see these REITs, real estate investment trusts, that own hotels, that own shopping malls, et cetera, trading in the public markets, we think you'll see kind of these fleet entities as well. Public and private insurance companies owning fleets in different cities. And we will be a very big part of that.
You think, but in terms of proving the case for that, will be entirely revenue-based, and you'll have the yardstick of Uber currently?
Exactly.
Okay. When you're working, I think you've mentioned in the past that as you have trouble sometimes on the hardware front, and I just wondered, are you finding it difficult? What are the challenges of trying to get car manufacturers to work with you in some of these areas?
Yeah, I think the car manufacturers are finally seeing this market as a very, very large potential market. So the issue isn't having trouble on the hardware, it's bringing the cost of hardware down. And I think we're probably 2 generations away. Right now, you can build a hardware, but every build is bespoke.
2 car generations.
Yeah, but 2 car generations. So it's the next generation of cars. You won't have bespoke builds. The cost of sensors is coming down very significantly. Cost of compute is coming down. NVIDIA is building a reference architecture that we think is very, very good for the industry generally. But it'll take 2 generations of hardware to get to pricing well below $100,000, which truly makes this a mass market product and something that we're very, very much looking forward to.
Are there particular manufacturers who are closer to that than others?
Every car company is talking about it. I wouldn't say anyone is in the lead. This market is a market that's ready to be taken by OEMs that, take a bet on it.
When you look at, as I'm sure you do, some of the assumptions built into investors' models, the ones who are most bullish about this, which seems to be all the people who are buying, how stretching, I mean, I wouldn't expect you to say, oh, it's all overvalued, but how much, in your view, are they conservative or are they highly optimistic in terms of how long it's going to take to make revenue from some of these things?
The market for AV investment, it's mostly private companies, and Waymo is the leader there, but there are a number of Chinese companies out there. And I don't think actually that market is particularly overheated. I think that the potential is trillions of dollars in incremental spend, transportation spend. I think, again, every single vehicle sold, new vehicle sold 10 years from now is going to be L3 or L4 ready. So I think the market is enormous. And I don't think the market is overheated by any means. Now, the overall AI market, in terms of foundation models, hardware providers, Okay,
the CEO of Uber speaking to Bloomberg, Stephanie Flanders there, about the evolution of autonomous vehicles, the hardware piece, and how AI is going to play a role as well. Let's get back to the markets briefly, because, of course, you continue to see the sell-off in the sovereign debt markets, particularly at the 30-year level when you look at US Treasuries and gilts as well. The European stock market, further losses there, accelerating the losses, down 0.9%. So, given the losses of yesterday, it's pretty sharp in terms of the downside that we're seeing. The FTSE 100 also off by a full 1%. S&P E-minis looking to reopen, of course, after the holiday yesterday, pointing lower by 1.6%. Nasdaq 100 futures down by 475 points, and the Russell 2000 has so far outperformed year to date, pointing lower by 1.8%. Plenty more coming up. Stay with us. This is Bloomberg.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
2026 for us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've been the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now of age. Now, as of right now, we are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Revenue, for example, and Nuvia. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth for Further Wave by empowering our customers across all our segments?
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
This week, live from the Alpine Mountains of Switzerland, is the World Economic Forum annual meeting in Davos. Bloomberg Television brings you unmatched coverage and conversations with world leaders, business executives, and billionaires as they navigate responsible AI deployment, economic expansion, and geopolitical tensions. Tune in for daily coverage all week. Context changes everything.
Welcome back. This is the opening trade, 8:50 here in London, and European equity markets, well, we're not buying the dip just yet. Yesterday was negative for European stocks on the back of trade tensions. Today appears to be the same in the sense of the direction, not necessarily the magnitude. US futures, of course, pointing lower because they are looking to catch up. Tom, we are going to be thinking about trade, perhaps, as we go through the day. What else is on the radar?
Yeah, ECOFIN meeting will be happening in Brussels, so we'll listen out, of course, for any sound, any further responses to the continuing pressure and threats over Greenland coming from the Trump administration. At 9:25 a.m. UK time, talking of the Trump administration, not directly part of the administration, of course, but the US House Speaker Mike Johnson of the Republican Party will be addressing the UK Parliament, which is interesting, of course, on the 250th anniversary of the United States. And the UK deadline to approve that Chinese embassy, that's also today as well. Expected reporting suggesting that that's going to happen, and Prime Minister Keir Starmer could be visiting Beijing later this month. We're also going to get those Supreme Court hearings we'll be discussing as well. So potentially an opening today for the ruling on IEEPA tariffs. On Wednesday, it's the Supreme Court starting to look at the Lisa Cook case, which arguably could be more important for the markets, or equally as important as well. And we're also getting earnings from the likes of Netflix.
It's huge. The risks, there are so many risks out there. Supreme Court, that's going to be massive. What happens around Greenland, what's happening with the Japanese bond market, Chagos, let's throw the kind of the UK angle. There's so much for these markets to deal with this morning. I don't know how you price it. What I'm stunned about is that risk isn't higher. The VIX is at 20. Woohoo. We're up a little bit, but we're definitely not elevated at the moment. Let's talk to Mike Masika about this, Senior EMEA Equity Strategist at Scully Montgomery Kerling for our M Live team. Good morning to both of you. Welcome back. Mike, let me start with you. Is this a market that is ready for a sell-off?
Well, Guy, it's a market that's definitely ready for profit-taking, and a little bit more than what we've seen. The reason is, like, very, very few investors have protection right now. Everyone is long. The Bank of America Fund Manager Survey just came out this morning. It's the most bullish in 5 years. Like 48% of investors don't have any protection whatsoever. That's the most in 8 years. Bull and bear ratio is like at hyperbull level.
So we're all in, basically.
I mean, everything is all in. Cash levels are record low, 3.2% of portfolios. Never happened before. So again, like, you get a little bit of friction, a little bit of tension, and you get profit-taking. You have to have that.
Mike, how much of what we're seeing in the markets today is down to higher yields and the selling of sovereign debt versus trade tensions?
From what we've seen, most of the issue is the trade tension, and actually it comes back to that survey. The number one reason for potential sell-off, according to a very large number of investors, is now geopolitical tensions. This was nowhere to be seen in the past 3 months. In the survey, I mean, and now it's like number one tail risk for the market. Way above.
How do you price it though?
It's interesting. The market tried to look through Venezuela, look through Iran, its most recent iteration at least. I mean, Skylar, we are seeing markets reflecting on some geopolitical. Well, no, it isn't geopolitical tension that's pushing up long-end yields, is it? It's fiscal concerns about Japan, which could be linked, but that's where we are right now. What do you make of the moves at the long end of the curve and how global that conversation goes?
Yeah, absolutely. I mean, I think particularly in Japan, the worry is very reasonable in that debt to GDP is the highest in G10. You have fiscal just rising from here, so that debt to GDP ratio is getting worse. You also have this duration mismatch where you've been able to fiscally expand because you've bought lots of risky assets abroad, and so as your yield rises or as your interest rate rises, that becomes more concerning from a fiscal, area issue. And then I think too, you need to think about like term premium generally in the 2010s was just structurally too low. So we're just transitioning to that higher environment, and there should be ricochets into other markets because it's not just Japan that has fiscal worries right now, and the correlation between Japan and European bonds actually is the highest in the last year than it has been relative to the past 10 years.
Are we going to get repatriation? I think that's what everybody's trying to work out. You talk about it kind of moving into other markets. Japan's been the kind of the piggy bank of the world. It's provided huge amounts of liquidity. If that sort of turns on its tail, what are the implications?
Yeah, I mean, that's a massive risk in terms of a huge amount of U.S. assets are owned by Japanese investors. So whether or not that rotates away is a big question. And it's also coming up in the discussion around, is that going to be a political weapon from a geopolitical perspective? As in, are you going to sell U.S. assets as a result? I think the question more relies on how profitable are U.S. companies, how high is the yield? Because if that stays high, then those there's not a reason to sell those assets.
But we're potentially getting closer to that point.
Yeah, it's just another factor, isn't it?
Mark Cudmore was talking about Japanese JGBs need to find a floor, and then we might see that play out. I suppose that gives you more of a sense of what you're dealing with.
But you've also got this whole threat about, are we selling America? Is that trade back on? Does geopolitics make you want to sell America? Does the turbulence in America make you want to sell America? Besson was trying to play that down.
Do you take that seriously, Michael, the idea that rather the public institutions that own US assets could be leaned on in the worst case scenario to sell US assets?
So if you take European firm or European institution holding US assets, the problem is most of them are private. I mean, you would need governments to actually impose to them to sell US assets. I don't think that's happening, honestly. That would be unseen. Now, do governments could sell US assets? Yes, they could. Central banks, they could. I'm not sure what would be the impact. We can see already today the dollar is being like the number one victim of what's going on, right? It's the one that's going down.
Yes, in fact, that's possibly one of the things we've not mentioned enough today. You know, the dollar index down by 9 cents of 1%, Bloomberg dollar index down by 3 cents of 1%. Does that sustain, Skylar, briefly?
I don't know. I mean, I'm quite puzzled by the fact that it is happening because it seemed like we'd moved away from that trade. As in, we know that tariffs are worse for European growth than U.S. growth. We know that investors are still buying U.S. assets. We know that hedge ratios have now adjusted. So why have that relationship changed?
A question for the rest of the week. Skylar, thank you very much. Skylar Montgomery-Koenig from our Markets Live team. Michael Masika, our senior EMEA equities strategist. Keeping our focus on Davos today, of course, the UK Chancellor Rachel Reeves will be speaking to Bloomberg 2:30 p.m. UK time. That is it for the opening trade. The Pulse is up next.
What some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people. And there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, you know, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content and never the two shall meet, but there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction might be using models to do so. You know, stamp tool in Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
not escalate, and dismissed the idea that Europe could possibly dump U.S. treasuries.
This is a false narrative that there is no talk in European governments. This was a report written by Deutsche Bank that this could happen. The media has latched onto this. I think it is a completely false narrative. It defies any logic, and I could not disagree more strongly on that.
All right, that was Treasury Secretary Bessent. Just a couple of meters from here, with me now, Ian Bremer, president of Eurasia Group, and Chad Thomas, Bloomberg's executive editor for Europe. So thank you both for joining us. Ian, we just heard the Treasury Secretary. I don't know whether he's trying to walk down some of the antagonizing things that Trump is saying. Is there a way out of Greenland?
If Bessent were president, I think that he'd be building a lot of confidence with the Europeans with that statement. But when he says it's a false narrative, does that mean when President Trump announces that there are tariffs that are going to hit these European countries on February 1st, which is like a week from now, that was a false narrative? I mean, look, I do know that Marco Rubio has been working assiduously to try to find a way to square the circle on Greenland. Is there a 100-year lease, for example, for Denmark? Is there a way that the Americans would have veto authority over some of what Greenland defense measures, security measures would be, but they wouldn't actually get ownership, which is the Danish red line and the European red line? But the point is that Trump has accepted none of those things. Right. And ultimately, the American people did not vote for Bessent. They didn't vote for Rubio.
Chad, I don't understand what the red line is for Europeans, because they're talking tough, but there's nothing to back it up. So what could they actually do?
Well, that is the real question here. Will the Europeans back up some of the tough language that they have been using with real action? Of course, they could do something when it comes to counter tariffs. They have that option. They could go even further with some of the tougher measures that they could implement at the European level. But so far, they haven't done anything other than talk. And in some cases, you had Friedrich Merz, the German chancellor, yesterday saying, wait a minute, let's be careful here. Germany, of course, very dependent on exports to the U.S.
They're not talking as one. Why not?
Well, they aren't one. Europe is not a state. The United States is. China is. When Donald Trump tried to get the Chinese to back down on tariffs, of course, the Chinese backed Trump right into a corner, and Trump had to negotiate. But he thinks that he can push the Europeans around, and so far he's right. Now, there has been talk of this anti-coercion instrument that many Europeans say that they will implement. Macron, in particular, the Italians have said, not yet, we want to talk. Starmer has said, not yet, we want to talk. Ursula von der Leyen is going to be addressing the forum shortly, and she has, in my view, neither the temperament, personally, nor the institutional capacity to hit the Americans back.
But to Ian's point, we had a story just yesterday where we were speaking to many sources within the European Commission, within the European Union, saying they want von der Leyen to be more forceful, and that Europe needs to come up with a response, and so far they're not seeing that.
Yeah, but so my thinking is, why, is it because they're afraid that this escalates and then we go to actually a war?
No.
Or do they try and see whether if they play the long game, Trump will just forget and get onto something else?
It's mostly because they aren't dealing from the same set of interests. I mean, the Nordic countries believe this is urgent and that this could break NATO, and I think there are some Europeans that support them on that. The Baltics do, the Poles do. I think that France does. But ultimately, the Italians don't. And a lot of other Europeans do
why?
not.
Because they think they can speak to Trump? Because actually the Prime Minister Meloni has a good relationship with
Also,
him.
because in part it doesn't matter that much to them individually. I think that is a big part of the issue here. National security does not mean the same thing when you talk to all of these different European leaders.
Well, I think when you say, who has a line into Trump, Alexander Stubb, the Finnish president, thought he had a line into Trump and was speaking to him regularly. They're one of the ones who got slapped with these tariffs now because they have been backing Denmark. So who really has a line into him?
What's going to happen here is that the Europeans are ultimately going to see that they're divided. This should be the one issue. It should be the crisis they want, because Americans do not support Trump on Greenland by a large majority. Right. Americans do ultimately have a sense of fairness, and they understand that the Americans are treating the Danes as a bully, that they are, this is purely for Trump's ego. It's not a national security matter that could be resolved by the Danes very easily. He has refused to negotiate with the Danes on that issue. Trump says we've been working for 20 years. This wasn't an issue for Trump. When he was president for 4 years, he had the opportunity to move it. So the question is, what do you do when the interests of the United States president actually diverge from the interests of the United States. Well, and that is a real issue on Greenland.
Ian, do Republican lawmakers, for the most part, are not happy about this? Do they step in? I mean, there's still a Congress.
There is a congressional delegation that is here. It is a bipartisan congressional delegation. There were several Republicans I spoke with yesterday morning. They clearly are not happy. They were in Denmark showing their support for one of America's most steadfast allies, fighting side by side and dying just the same number per capita in Afghanistan as the Americans did. But for President Trump, that does not matter. It does not matter. And if you are European, you feel like the United States is treating you with utter contempt. Right. They're treating you worse than they're treating the Chinese, worse than they're treating the Russians. Why would they do that? And the answer is because they can. So unless the Europeans decide that they're going to show that there will be consequences for President Trump directly for treating them with contempt, he will continue to.
Consequences are messy, but we're talking about possibly selling U.S. treasuries from pension funds. I mean, is that feasible? Is there any appetite for that?
There is some conversations we hear going on among some of the pension funds, like do they divest from U.S. assets over this, in particular in Denmark, but whether they really do that or not, that certainly remains to be seen. We had Besson saying this morning that he believes that's a false narrative. I've also been thinking about the fallout in the Nordic countries. They have been so pro-American, not just from a political point of view, but culturally as well. That's absolutely changing now. You look at this, the protests that have been taking place across Denmark last weekend. That's unheard of.
Permanent damage is being done to the United States and its relationships with its friends around the world. Mark Carney, Prime Minister of Canada, has just come to Davos, returning from a trip to Beijing, where he has developed a strategic partnership that will bring Chinese automobiles into Canada. Why? Because they no longer feel they can trust their supply chain with American automotive manufacturer. Why are they going to be working with Chinese tech firms to a greater degree? Because they had done America's bidding on Huawei. It got them in trouble, and now they feel like they can't trust the Americans. This is America's closest ally. You think the Europeans aren't going to respond?
You see something happening similar in Germany with the German Chancellor Friedrich Merz. He had initially wanted to take a very tough stand with China. He's now planning to go to China. They just announced new incentives for automobiles. They're going to allow Chinese cars in as part of that. So it's happening in many countries.
But it was interesting for Canada that actually President Trump wasn't against that too much. I think he gave it almost like a blessing in disguise.
Why they're doing it.
Right?
That's right.
But do they buy defense from China? I mean,
things play out. As I said on April, again, I would say this is the same kind of hysteria that we heard on April 2nd. There was a panic. And what I'm urging everyone here to do is sit back, take a deep breath, and let things play out. As I said on April 2nd, the worst thing countries can do is escalate against the United States. Again, I would say this is the same kind of hysteria that we heard on April 2nd. There was a panic. And what I'm urging everyone here to do is sit back, take a deep breath, and let things play out. As I said,
summit, actually, it went off much better than many people had expected. So could he show up in Davos, to Ian's point, and actually negotiate with people? Possibly. It depends on which Trump shows up.
But now he's also he's going after the UK for something, with one of the islands.
For giving up the Chagos Islands. He already said he supported it. That's right.
Right.
So, he changes his mind.
Mindset?
Well, ask Marjorie Taylor Greene. I hate to bring her up, but the fact is that, he had one position on the Epstein files and she supported it. Then he changed his mind. And MAGA is whatever Trump says MAGA is at the moment, right? It is not an ideological consistency. It is you must be loyal to Trump. And if Trump changes his mind, as he does, you support what he has changed his mind to.
Where are the Republicans in this?
I would say that the Republicans continue to publicly support Trump on virtually every issue. And that is likely to continue to be true until the Democrats take the House in the midterms, or until there is a major crisis. And either of those things can happen, in the future.
And the Democrats?
The Democrats still are leaderless, and they still are very unpopular. But there's no question that at this point they see that the midterm elections are going to be mostly about the incumbent, and in that regard they feel better about taking some momentum.
I want to ask you about Japan in a second, but do we know who President Trump is meeting whilst he's here?
We don't know for sure. He said, of course, this morning that he wants to have a number of meetings with people over Greenland. We believe he'll meet with Zelensky, the Ukrainian president. Of course, we haven't been talking about
Next episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
News when you want it with Bloomberg News Now. I'm Lizzie Burden.
And I'm Stephen Carroll.
The US president is reinforcing his increasingly aggressive push for ownership of Greenland. Speaking in Florida over the past few hours, Donald Trump called the island a national security necessity to counter Russia and China. Trump added that he does not expect the European Union to offer significant resistance.
Well, I don't think they're going to push back too much. Look, we have to have it. They have to have this done. They can protect it. Denmark, they're wonderful people. And I know the leaders are very good people, but they don't even go there. And, you know, because the boat went there 500 years ago and then left, that doesn't give you title to property.
Trump went on to say that he'll discuss Greenland with several parties while attending the World Economic Forum in Davos. His latest comments come as Germany's Chancellor Friedrich Merz sought to de-escalate tensions following the threat of tariffs on 8 European countries.
We do not want this escalation. We do not want a trade dispute with the United States of America. But if we are confronted with tariffs that we consider inappropriate, then we are in a position to respond. And that is precisely what we will be discussing in Brussels on Thursday.
German Chancellor Friedrich Merz, speaking through a translator there after the French President, Emmanuel Macron, said that the EU should consider using its most powerful trade tool, the anti-coercion instrument. That would allow for additional tariffs, new taxes on overseas firms, and even foreign investment curbs.
Macron's push for a robust EU response came as the US president directly threatened France with a 200% tariff on its wines and champagne. The move came after Emmanuel Macron declined Trump's invitation to join a proposed board of peace for Gaza. Trump also posted screenshots of messages from the French leader on social media, which proposed a meeting with the leaders of Ukraine, Syria, Denmark and Russia in Paris on Thursday. Here's what the US president told reporters a little earlier.
Well, nobody wants him because he's going to be out of office very soon. So, you know, that's all right. What I'll do is if they feel like Costo, I'll put a 200% tariff on his wines and champagnes and he'll join. But he doesn't have to join.
President Trump also confirmed that Russia's President Vladimir Putin had also been invited to join the board. The US President also posted messages to social media that he said were from the NATO Secretary General Mark Rutte, praising his handling of a range of diplomatic issues. In the screenshot, Rutte also says he's committed to finding a way forward on Greenland.
Yields on Japanese bonds, meanwhile, have soared to new records as investors show their displeasure at Prime Minister Sanae Takaichi's election pitch to cut taxes on food. Takaichi's betting that a snap election on February 8th will allow her ruling Liberal Democratic Party to strengthen its slim parliamentary majority. However, traders have given her policy offer the thumbs down, with the 40-year rate hitting 4%, its highest yield since its debut in 2007. Currently up 30 basis points, almost 29 basis points at 4.22%.
UK wages grew at their slowest pace in 3.5 years in the 3 months to the end of November as British firms cut jobs at the fastest pace since 2020. Pay growth, excluding bonuses, cooled to 4.5%, down from 4.6% in the period through October. Meanwhile, tax data showed the number of employees on payrolls falling by 43,000 in December. That figure was double market expectations and came the month after Rachel Reeves' revenue hiking budget.
And the UK's deadline to approve or deny China's planned mega embassy in London is today, and the government appears to be gearing up to say yes. The Foreign Minister told the UK Parliament that some of the government's concerns had been resolved, but the decision is still set to be highly controversial to diplomats and national security officials alike. Bloomberg's James Woolcock has more.
Britain's difficult geopolitical game has come to Parliament today. This morning, Mike Johnson, the US Speaker of the House, is in the Commons to showcase the special relationship. Hours later, in the same building, the Housing Secretary Steve Reed will announce the UK's decision on China's mega embassy in London. It's one of Beijing's key asks ahead of the UK Prime Minister's planned visit to China later this month. But the two back-to-back events show the challenge Britain faces in trying to keep both superpowers on side. In London, James Woolcock, Bloomberg Radio.
And those are your top stories on the markets. The Stock 600, 0.7% lower. The CAC 40 down by 0.8. The FTSE 100 also 0.8 lower. The DAX in Frankfurt is 0.9 lower. Wall Street futures are sinking further now as well. Investors catching up after being closed yesterday for a holiday. So S&P E-minis down by 1.5%. Nasdaq futures 1.8% lower. The 10-year Treasury yield 6 basis points higher at 4.28%. And yields rising across Europe as well. The 10-year German bond yield up by 3 basis points as the jump in the the long end of the Japanese government bond curve continues in the jump in yields, up 27 basis points on the 30-year yield at the moment.
That's news when you want it with Bloomberg News Now. I'm Lizzie Burden.
And I'm Stephen Carroll, and this is Bloomberg.
I'm Carol Masser.
And I'm Tim Stenevec, inviting you to join us for the Bloomberg Business Week Daily Podcast.
Now, every day we are bringing you reporting from the magazine that helps global leaders stay ahead.
We've got insight on the people, the companies, and trends that are shaping today's complex economy.
That's right, Tim. We're all over global business, finance, tech news, all as it is happening in real time. And we've got complete coverage of the U.S. market close. Gotta say, basically, if it impacts financial markets, if it impacts companies, if it's impacting trends and narratives that are out there, we are on it.
We also have a lot of fun doing it. Bloomberg Business Week also brings you the analysis behind the headlines through conversations with our expert guests.
And we are doing this all live each weekday. And then we bring you the best analysis in our daily podcast.
Search for Bloomberg Business Week on YouTube, Apple, Spotify, or anywhere else you listen.
Check it out on your way home from work to catch up on the conversations that you missed during the business day.
And on the weekend, check it out for a complete wrap-up of your business week.
That's the Bloomberg Business Week Daily Podcast. I'm Carol Masser.
And I'm Tim Stenevec. Subscribe today wherever you get your podcasts.
I'm Barry Ritholtz, inviting you to join me.
On paper, we have a wider budget deficit because we've got the approval of the National Assembly of Nigeria, the Parliament of Nigeria, but actually the commitment of President Bola Ahmed Tinubu under his renewed hope agenda at the stage we've got to now, after removing major distortions, after stabilizing the economy, is to consolidate and, in fact, to rely less on debt and to try and drive investment. We're here in Davos to tell the Nigerian story and to show how investable Nigeria is now that we have a stable macroeconomic environment.
Are you planning any further Eurobond issuance? Or other issuances?
We have the latitude to do it, but as you know, if you want to go to the market, first of all, the market has to be receptive. Yeah. You yourself have to be within your guidelines and your rules and regulations for borrowing, your margins for borrowing, and of course, the timing has to be right. So we'll see down the road what will happen in that area.
But could we expect something big on Eurobonds this year, or is the appetite not there?
We're hoping to rely less on borrowing, but we'll see what happens there. We have the latitude to come to the market. We were very well received the last time we went to the market, but honestly, our emphasis is on investment and particularly driving domestic investment, increasing domestic savings for investment in the Nigerian economy in order to grow it.
Minister, Nigeria's debt-to-revenue ratio remains amongst the world's highest, actually, the world's worst, despite recent reforms. So what is the government doing to correct that?
Well, that's the point. The issue is now to focus on revenue, focus on domestic resource mobilization. As you know, we have a tax reform regime that is coming into place, 4 tax acts that, apart from being pro-poor, are meant to help increase the tax to GDP ratio from quite a low 13% now to drive it up to about 18% in the nearest future. In addition, we have automation, application of technology to drive internal revenue of government, block leakages and loopholes, which a manual system has engendered. And as I say, in addition, we are looking to bring in private sector funding. The private sector is 90% of the GDP, and we want, under the regime that we have now, under the improved incentives that we have now, that Nigerians consume less and save more and invest, as well as the diaspora Nigerians and indeed foreign investors. We're looking to places like the Middle East and other areas that are cash rich and looking for good investments.
Minister, how much time does that give you, actually? I don't know whether there's a threshold of debt where you think you might need assistance from the IMF.
Well, we're hoping that what we are putting in place is immediate. We are in major discussions with foreign direct investors. We have just signed a CEPA, a comprehensive economic partnership agreement with UAE, and we're hoping that this effort allows us to bridge that gap and to bring things into balance fiscally, such that we can rely on our own resources more than the multilateral institutions, who, as you know, are always there. But we are in an environment where multilateralism as a whole is receding. So we're looking to rely on our own resources, including the regional market of ECOWAS and the continental market of the African Continental Free Trade Area.
And you're confident that this will happen?
We are optimistic and we are determined, and we'll give it our best shot. And as you say, we need to get better fiscal balance quickly, and that is our aim.
Minister, going back to the IMF, is there a threshold? Is there a number in your head in debt to revenue that actually you start being very nervous?
Not at the moment. Not at the moment. The idea is just to be making sure that we bring the figure down from where it is now.
Yeah. Is there anything that the IMF wanted you to do that you've resisted so far?
I think when we're in discussions with our trusted partners, the IMF, the World Bank, what they look at what President Bola Ahmed and Tinubu has managed to do in 2.5 years. Nobody would not reasonably put that down as a condition. So he has gone so far, he has done so much to correct the distortions of the past and to bring back investor confidence. If you look at the reserves, you look at the inflation rate, if you look at the stable exchange rate, you can see. And if you look at the growth in the first half of 2023, 2-point-something%. Now 4 point in the first half of 2025. Sorry, 4.23%. So that is a trajectory which we look to maintain, and we know that would take us to the kind of growth that will lift millions of Nigerians out of poverty by creating jobs for them.
Okay. Minister, I want to ask you about under the new regime, what do you see the tax to GDP ratio being?
Well, the aim in the short term is to get it up to 18% of GDP, and of course to get government spending, the amount
गाइस देखो क्रूड ऑयल पे रेजिस्टेंस पे वापस प्राइस पहुंच गया, बट जैसा मैंने पहले बताया था ये रेजिस्टेंस मल्टीपल टाइम टेस्ट है। ठीक है, ये लगभग 5वीं बार आ रहा है। लास्ट टाइम लग रहा था ब्रेकआउट करेगा, किया नहीं, तो ये थोड़ा सा रिस्की ट्रेड है। डायरेक्ट एंट्री मत करना, अभी थोड़ा सा वेट करेंगे। अगर एक कैंडल वापस लेवल के नीचे क्लोज कर रही थी, मैं एक्सपेक्ट कर रहा था कि यहाँ पर जब कैंडल क्लोज हुई यहीं से पुल बैक आता तो बेटर था। ये थोड़ा ज़्यादा ही नीचे आ गया एंड देन कंप्लीट रिकवरी, तो पॉसिबिलिटी है इस रेजिस्टेंस का ब्रेकआउट भी कर सकता है। प्राइस याद होगा कल जैसे मैंने थोड़ी देर पहले बताया था, प्राइस यहाँ पर ऑलरेडी बहुत पहले से रेजिस्टेंस ले चुका है। ठीक है, यहाँ पर रेजिस्टेंस लिया था, थोड़ी बहुत सेलिंग आई थी, मैं जिस तरह से यहाँ पर कंसोलिडेशन कर रहा था, लग रहा था ब्रेकआउट करेगा, नहीं आया, तो मल्टीपल टाइम टेस्ट यहाँ हो गया था। फिर कल भी यहीं पर कंसोलिडेट कर रहा था, आज मॉर्निंग पे भी यहीं पर कंसोलिडेशन कर रहा था, फिर ये थोड़ा सा बड़ा सेल ऑफ आया है, बट ये अभी भी प्रीवियस लो के नीचे नहीं निकला है, तो ये हायर लो बना हुआ है। दिस इज आइडेंटिकल रेजिस्टेंस, तो ये कुछ इस तरह का पैटर्न है अगर ध्यान से देखोगे तो। ठीक है, तो मल्टीपल टाइम टेस्टेड जोन है, थोड़ा सा रिस्की ट्रेड है, तो अभी डायरेक्टली एंट्री मत करना, थोड़ा वेट करेंगे तभी सेल करेंगे। ऐसा ना हो कि ब्रेकआउट कर जाए तो फिर उस केस में फिर और रिस्क बन जाएगा। तो डोंट एंटर डायरेक्टली, वेट फॉर द लेवल, मल्टीपल टाइम टेस्टेड लेवल, थोड़ा सा अगर नीचे आ जाता डायरेक्टली तो और बेटर था, यहाँ से बाय कर लेते, वो भी नहीं आया। तो वॉलेटिलिटी हो रही है, अननेसेसरी रिस्क नहीं उठा सकते, तो वेट करेंगे थोड़ा सा, डायरेक्टली मत लेना, रिस्की ट्रेड है। ठीक है, मुझे यहीं पर लग रहा था ये ब्रेकआउट हो जाता तो बेटर था, जिस तरह से कंसोलिडेशन कल से कर रहा था, बट नहीं गया, नीचे वापस आया है, फिर से ट्रैपिंग हुई है, वापस रिकवरी किया है। हो सकता है थोड़ा बहुत यहाँ से सेलिंग आए, बट ये थोड़ा सा अगर लोअर एंड पे लोअर लो बनाता, ये जो पहला लो बना है, दूसरे में एक लोअर लो बनाता तो बेटर था, अभी ये हायर लो बना के बैठा हुआ है। तो अगर यहाँ से थोड़ी बहुत ही सेलिंग आई तो ये कुछ ये पैटर्न में कन्वर्ट हो जाएगा ऑलमोस्ट। बट अगेन बाइंग भी नहीं कर सकते, बिकॉज जिस तरह से मोमेंटम आ रहा है, इस तरह के मोमेंटम में मार्केट होल्ड नहीं करता है ब्रेकआउट पे। लेट्स सी क्या करने की कोशिश करता है, थोड़ा सा वेट करेंगे। अभी यहाँ पर डायरेक्टली एंट्री मत करना सेलिंग में, रेजिस्टेंस है, ब्रेकआउट नहीं हुआ है अभी भी, बट वी नीड टू वेट लिटिल बिट। गोल्ड और सिल्वर स्टिल बुलिस, अभी भी बुलिस ही है सारे के सारे। गोल्ड एमसीएक्स में अपर सर्किट लगाया था, अगेन अपर सर्किट ओपन होकर थोड़ा बहुत और मोमेंटम किया। ठीक है, यहाँ पर से लेंगे भी तो इस लेवल पे ध्यान रखेंगे, थोड़ा क्वांटिटी कम ही रखेंगे, ज़्यादा क्वांटिटी ले नहीं सकते, ऐसा मैंने बताया, रिस्की लेवल है काफ़ी ज़्यादा। ये कैंडल क्लोज होने देते हैं, 50 सेकेंड्स रह गए, इसके बाद नहीं तो एक कम क्वांटिटी से एंट्री करेंगे, ज़्यादा क्वांटिटी तो लेंगे नहीं। एक कैंडल नीचे ही आए क्लोजिंग बेसिस पे 5432 के नीचे। ओके देखो, हो गई कैंडल क्लोज, कैंडल इज क्लोज्ड। क्रूड ऑयल में एक सेलिंग का ट्रेड बनाते हैं, ध्यान रखना ये रिस्की ट्रेड है थोड़ा सा, क्वांटिटी ज़्यादा लेना मत, गो विद अ स्मॉल क्वांटिटी ओनली। ठीक है, ये आपका 6 टाइम यहाँ पर हिट कर रहा है प्राइस इस लेवल को। अब बाकी क्वांटिटी कम रखना, एसएल भी ज़्यादा बड़ा नहीं रखेंगे, ब्रेकआउट होगा तो फिर निकल ही जाएंगे, क्योंकि सपोर्ट भी अब काफ़ी नीचे ही है, नेक्स्ट रेजिस्टेंस इज फार अवे एज वेल। मल्टीपल टाइम टेस्ट हो चुका है, लेवल स्टिल होल्डिंग, अभी भी ब्रेक नहीं हुआ है, तो बाय भी नहीं कर सकते ब्रेकआउट पे। देखते हैं, देखो सेलिंग अगर बड़ी आनी है तो ये लोअर लो बनना जरूरी है, लास्ट लो अगर ब्रेक नहीं करता है तो फिर अगर थोड़ी बहुत ही सेलिंग आती है, तो मैंने पैटर्न दिखा दिया आपको, कुछ इस पैटर्न में जा सकता है प्राइस। तो देखेंगे कितना लोअर लो बना रहा है, लास्ट स्विंग का अगर 50% के नीचे सस्टेन नहीं किया, इट मीन्स फिर या तो कंसोलिडेशन के बाद वही ब्रेकआउट करेगा। क्वांटिटी थोड़ी कम ही रखना इन क्रूड ऑयल। ये 6 टाइम, ये 6 टाइम है प्राइस इस लेवल पे क्रूड ऑयल में, इस रेजिस्टेंस एरिया पे। इसका ये 50% लेवल का एरिया है जो लास्ट वेव निकली है इसमें। अगर प्राइस के नीचे कंटिन्यूसली सस्टेन करे तो बेटर, अगर सस्टेन नहीं करता है तो फिर इस तरह से ब्रेकआउट के लिए चला जाएगा। बाकी अगर नीचे आना है तो ये लोअर लो बहुत ज़रूरी है। नेचुरल गैस को देखोगे कल की तरह ही कर रहा है। कल का वो एक जो रेजिस्टेंस एरिया था वहां पर कंसोलिडेशन किया, ब्रेकआउट कर दिया, आज फिर से रेजिस्टेंस पे कंसोलिडेशन ही कर रहा है। सेलिंग इसमें भी नहीं आ रही है, इवन दो इट इज आल्सो रेजिस्टेंस, इट इज स्टिल जस्ट होल्डिंग द रेजिस्टेंस। प्राइस पुल बैक। ऑलमोस्ट 1%, 1.16% डाउन नाउ, कंटिन्यूसली मॉर्निंग से फॉल ही कर रहा है। निफ्टी फ्यूचर में कोई सपोर्ट तो नज़र नहीं आ रहा। नेचुरल गैस में भी देखते हैं, देखो जिस तरह से कंसोलिडेशन कर रहा है, नॉट सूटेबल फॉर अगेन सेलिंग। सेलिंग थोड़ी फास्ट ही आती है हमेशा, थोड़ा नीचे आता तो वापस बाई करते, वो भी नहीं आ रहा है। तो यहाँ पर एक दो कैंडल और वेट करते हैं, अगर ये नहीं आती है सेलिंग तो फिर मुझे लग रहा है शायद प्राइस थोड़ा सा ऊपर सेलिंग एसएल लेने जा सकता है, एंड देन फिर हो सकता है वापस आए। तो वी नीड टू वेट फॉर 1 to 2 कैंडल मोर, अदरवाइज थोड़ा एंट्री पॉइंट और शिफ्ट करना पड़ेगा। लॉजिकली तो अभी तक आ जानी चाहिए थी, मॉर्निंग पे हिट कर गया था रेजिस्टेंस को, 3-4 घंटे से वहीं पर है, 11 बजे के आसपास। Nifty might fall till 25,100 in future. That is a support area expecting. नहीं आता है नेचुरल गैस तो पॉसिबिलिटी है अगेन आई सेड प्राइस थोड़ा सा 350 के अराउंड इस एरिया तक वापस जा सकता है ऊपर लेवल तक वहाँ से लिक्विडिटी लेके फिर हो सकता है गिरे अगर यहाँ से एक दो कैंडल पे सेलिंग नहीं आती है तो फिर वी विल शिफ्ट द एंट्री पॉइंट अगेन कंसेशन ऑलरेडी ओपन है तो एक्सपेक्टेड ही था बट अभी भी उतना कुछ खास नहीं वॉलेटिलिटी कह सकते हो क्रूड में पे देखो ये हो गई कैंडल क्लोज, फिर से नेचुरल गैस में नहीं जा रहा है नीचे, इट इज़ स्टिल साइडवेज। हायर टाइम फ्रेम पे देखोगे तो बड़ा कंसोलिडेशन हो गया 4 आवर टाइम फ्रेम पे एंड 1 आवर टाइम फ्रेम पे एज वेल। ठीक है, तो इसमें देखो अब क्या करेंगे, अभी तो प्राइस आया नहीं है लेवल पे, बट मुझे लग नहीं रहा उस लेवल पे प्राइस रुकेगा। देयर इज अ वेरी हाई चांसेस प्राइस अब हायर इसी जोन के हायर लेवल को टेस्ट करने जाना चाहिए, विच इज अराउंड अप्रॉक्सीमेटली 350। तो हम इसमें एंट्री के लिए थोड़ा सा वेट करना, ठीक है, थोड़ा और ऊपर आने दो प्राइस को। अब कैंडल भी ओपन इक्वल टू लो है, मेरे अकॉर्डिंग थोड़ा वेट करके इसमें अब एंट्री करना। अब यहाँ पर फिर से एंट्री मत करना इस लेवल पे, ठीक है, इस लेवल पे आता है तो एंट्री मत करना, इसके हायर लेवल पे एंट्री करियो अराउंड 350 टू 350 के अप्रॉक्सीमेटली। ठीक है, भले ही अब यहाँ से नीचे क्यों ना आ जाए प्राइस, ये है रेजिस्टेंस जोन पर ही, स्टिल अभी भी रेजिस्टेंस जोन पर ही है नेचुरल गैस, बट नहीं आ रही है सेलिंग। लुक्स लाइक प्राइस यहाँ पर कंसोलिडेशन कर रहा है, मतलब यहाँ पर के सेलर कंप्लीटली ड्रेन होते जा रहे हैं। ठीक है, तो लिक्विडिटी का नहीं है यहाँ पर उतनी, तो फिर प्राइस हायर लेवल पर जरूर जाएगा। तो अब यहाँ पर एंट्री करने का फ़ायदा नहीं है, थोड़ा और ऊपर आने का वेट करते हैं। ठीक है, तो ये सेम ही ट्रेड होगा बट इसके हायर लेवल पे एंट्री करेंगे, इस लेवल पे एंट्री मत करना 345 के अराउंड। सेलिंग आनी होती लोअर एंड से अभी तक आ जाती। हो सकता है अभी भी यहाँ से सेलिंग आ जाए, बट नाउ नॉट इंटरेस्टेड इन दिस जोन। थोड़ा हायर लेवल पे लिक्विडिटी लेने जाना चाहिए, जाने देना इसको। अगर यहाँ पर एंट्री फिर से बनेगी तो आई विल मार्क दैट लेवल, अदरवाइज नो। रेजिस्टेंस का एक्सटेंडेड लेवल आप कह सकते हो इन नेचुरल गैस। क्रूड ऑयल में याद रखना ये ब्लू कलर की लाइन के नीचे क्लोजिंग बड़ी इंपॉर्टेंट है। इसके नीचे अगर ये मार्केट क्लोज नहीं करता है तो फिर जो थोड़ी देर पहले पैटर्न बताया था वो फॉर्म होने के चांसेस ऑलमोस्ट 90% ही हैं कि प्राइस ने एक बार लो क्रिएट किया है, देन हायर लो, दिस इज अगेन हायर लो, एंड देन अगर ये जाता है इस तरह से तो फिर ब्रेकआउट के लिए डेफिनेटली जाना चाहिए प्राइस को। तो इस लेवल के आसपास अपना एसएल कॉस्ट पर रख लेना। अगर इसके नीचे क्लोजिंग बेसिस पे जा रहा है तो वेल एंड गुड है, फाइनल टारगेट का वेट करेंगे, नहीं तो फिर कॉस्ट टू कॉस्ट पे निकल जाएंगे। एसएल ट्रेल करते हुए चलना क्रूड ऑयल के इस रिस्क की ट्रेड में। बार सेलिंग आई, लो बनाया, दूसरी बार लोअर लो, थर्ड टाइम एक और लोअर लो, फोर्थ टाइम हायर लो, दिस इज अ फिफ्थ टाइम, सिक्स टाइम, दिस इज सिक्स टाइम प्राइस हिटिंग दिस क्रूड ऑयल रेजिस्टेंस एरिया, सिक्स टाइम है ये। वाओ। वहाँ पर एक रीटेस्ट जोन भी है एक्चुअली में, रेजिस्टेंस प्लस रीटेस्ट। Yeah, there is a hot volatility is there actually. यहाँ पर क्रूड ऑयल में रेजिस्टेंस के साथ साथ एक रीटेस्ट जोन भी बना हुआ है एक्चुअली में, वो भी साथ ही में है। ये तो कैसे आ गया? मार्केट ऑल्सो क्लोज नेगेटिव ही क्लोज हुआ है आज भी। ठीक है, नीचे वाला तो खैर रेजिस्टेंस ही है, ऊपर वाला एक रीटेस्ट जोन भी है वहाँ पे। रीटेस्ट तो मल्टीपल टाइम टेस्ट हो गया खैर ऑलरेडी, रेजिस्टेंस तो मल्टीपल टाइम टेस्ट हो गया, रीटेस्ट अभी तक सेट हिट नहीं हुआ है। समथिंग अराउंड 50% का लेवल है। ब्लू कलर की लाइन के नीचे सस्टेन होना चाहिए अगर बड़ा फॉल करना है मार्केट को, क्रूड ऑयल की बात कर रहा हूँ। अदरवाइज मल्टीपल टाइम तो टेस्ट कर ही चुका है इसी लेवल को, बड़ा लास्ट स्विंग के नीचे नहीं गया वैसे भी, तो भी ब्रेकआउट के लिए ही जानेगा नहीं तो। क्या हो गया? प्राइस होल्ड करना चाहिए क्रूड ऑयल को इस रेजिस्टेंस जोन पे, क्योंकि यहाँ पर एक रीटेस्ट भी है साथ में। अगर ये रेजिस्टेंस ब्रेक होता भी है तो ऊपर जो रीटेस्ट है सपोर्ट का एक ब्रेकडाउन हुआ है। हाउ विल दैट एक्ट, बिकॉज रेजिस्टेंस अपनी जगह पे रेजिस्टेंस मल्टीपल टाइम ले चुका है, रीटेस्ट अभी तक हिट किया नहीं है एग्जैक्ट लेवल को ऐसे रीटेस्ट में। तो ऐसा तो नहीं होगा कि ये रेजिस्टेंस इसका ब्रेकआउट हो जाएगा लेकिन रीटेस्ट नहीं करेगा, इवन दो रीटेस्ट का एसएल तो काफ़ी दूर है, इसलिए उतना बड़ा एसएल उठा नहीं सकते। एरिया अभी भी बेरी से लग रहा है, इस एरिया में प्राइस that is a resistance area, that is a retest zone, both are there. ये स्मॉल क्वांटिटी रखना फिलहाल के लिए तो। ध्यान रखना गाइस ट्रेड का, ठीक है। एसएल जाएगा तो होल्ड नहीं करना, एसएल छोटा ही है 20 पॉइंट का। रिस्की ट्रेड है वैसे ही, बट अभी भी ब्रेकआउट नहीं हुआ है तो देखते हैं। 50% तक भी नहीं आ रहा है पुल बैक स्टिल। इस नेचुरल गैस को देखोगे रेजिस्टेंस पे भी नहीं पहुंच रहा है, एक तो स्लो हो गया, ऊपर से रेजिस्टेंस को भी हिट करने नहीं जा रहा है। दिस काइंड ऑफ मोमेंटम इज वेरी बैड। प्राइस या तो फटाफट से मूव कर जाए या फिर डाउन आ जाए। इस तरह के मोमेंटम में ना बड़ी स्पाइक होने के चांसेस, आइदर साइड होने के चांसेस बढ़ जाते हैं। इट इज शोइंग कि लिक्विडिटी है ही नहीं, सेलर्स है ही नहीं, बायर भी नहीं है। देखते हैं एक दो कैंडल पे अगर आ जाता है इस लेवल पे वापस से रेजिस्टेंस पे एग्जैक्टली तो बढ़िया, नहीं तो फिर नेचुरल गैस में अगेन इस लेवल से भी प्लान फिर सेलिंग नहीं करेंगे अगर ये नहीं आया अगली एक दो कैंडल पे। 5 मिनट इस कैंडल का वेट करते हैं, उसके बाद एक कैंडल और वेट करेंगे। अगर नहीं आया इस लेवल पे, या तो यहीं से सेलिंग आ गई या फिर यहीं पर रुका रहा, तो फिर इंटरेस्टेड नहीं रहेंगे फिर से इस लेवल पे भी। क्रूड ऑयल में भी लग रहा है पूरा कंसोलिडेशन में ही चला जाएगा इस लेवल पे प्राइस। नेचुरल गैस में लास्ट कैंडल है, अगर अब भी नहीं आता है प्राइस रेजिस्टेंस पे तो फिर अगर इसी लेवल पे रुका रहा या फिर यहीं से नीचे आ गया तो फिर थोड़ा और शिफ्ट करना पड़ेगा। ध्यान रखना नेचुरल गैस का रेजिस्टेंस जोन सेलिंग फास्ट आनी चाहिए रेजिस्टेंस पे हिट करने के बाद।
Joining us from Washington, Tyler Kendall. Tyler, the president setting this agenda on fire. His approach to tomorrow, what do we know?
Yeah, John, good morning. I mean, President Trump is really just ramping up the pressure as he heads to Davos. That speech tomorrow now slated for 8:30 a.m. Eastern. And though he is abroad, of course, we know that he's going to be focusing in on some domestic issues, including that his NEC director, Kevin Hassett, has already previewed that he's going to roll out a plan related to letting Americans use and pull from their 401k for a down payment on homes. But even so, it is hard to ignore that he has only been ratcheting up the disputes as he heads in to the World Economic Forum, and even in just the last few hours as European leaders are reacting to his latest threat of a 10% tariff by February 1st against those countries that have rallied around support for Greenland. And it appears now that issues are dovetailing after French President Macron raised concerns not just about Greenland, but also the White House's proposed Board of Peace in Gaza, which a person familiar tells us this president is looking to finalize this Thursday, where you are in Davos. But in response to the French president's concerns, President Trump is now floating a 200% tariff against French wine and champagne. While it remains to be seen if that is actually going to come to fruition, it is just the latest dispute after a weekend of escalation, as Bloomberg News now reports that the EU is considering pulling out of its trade deal with the U.S. and weighing its own retaliatory tariffs. Now, John, I think it's worth mentioning here that all of this comes after a week of meetings here in Washington, where administration officials met with officials from Greenland and Denmark, and that was considered to have gone relatively well. They actually set up working groups to keep the diplomatic channels open, but it is clear that President Trump didn't feel that way. John, of course, we're going to be watching those remarks, but also who he does and doesn't meet when he visits there in Davos this week.
Tyler Kendall with the latest in Washington. Tyler, thank you. If you want to upset the elites in Davos, Switzerland, tariffs on champagne, one way to do it, maybe?
That's definitely one way to do it, especially if you want to come into really with a bang. Also, the tariffs Trump is talking about, they might get overturned this morning at 10 a.m. when Supreme Court has a decision day, an opinion day, and we might get that decision. So basically, he's talking about tariffs that we don't even know if he's able to use legally.
We've got a packed agenda here in Davos, Switzerland, happening right now over at Bloomberg House. Bloomberg editor-in-chief John Micklethwaite sitting down with the Anthropic CEO, Dario Modi. Let's take a listen.
Or superhumanly good at recommending shopping or ads or various things like that. Anthropic has focused, I think, first and foremost on enterprises, developers, and to the extent we do consumer, we're very focused on productivity and the kind of high value end of the consumer work. And so that gives very different incentives, right? If you want to get things done, we talked about AGI and superintelligence before. One of the things I would say is that there are superintelligences today, and they're basically large corporations, right? They're smarter than any human can be at solving the problem of shipping commerce at the lowest possible cost, or making solar panels at the lowest possible cost, or launching rockets at the lowest possible cost. And so there's really high returns to intelligence in this area, which I think incentivizes us to kind of build the right thing. It's also, I think it's a business that is more stable than consumer. We don't need ads. We don't need large numbers of free users. We can just very directly create value, right? There aren't all these weird externalities of like you're prioritizing engagement, you're prioritizing these other things, you're generating all this slop. We just make stuff that people can use.
A year ago here, you said the Chinese were catching up a bit. Do you think now the Chinese have fallen behind?
I think they never really caught up that much. So, of course, there was this huge excitement around DeepSeek, right? But, the truth was a couple things. One, those models are very optimized for the benchmarks. It's actually very easy to optimize a model for a finite list of benchmarks. When we go out into the world, right? When we're competing against other companies for enterprise contracts, we see, just honestly and candidly, we see Google and we see OpenAI. Every once in a while, we see a couple other U.S. players. I have almost never lost a deal, lost a contract to a Chinese model.
But now you have the Trump administration, and I think you've already protested about this. giving high-speed chips, NVIDIA chips, to the Chinese?
That's right. That's right. The thing that is holding them back, and they've said it themselves, the CEOs of these companies say it's the embargo on chips that's holding us back. They explicitly say this. And now, indeed, there are some policies, and I hope they change their mind, to explicitly send not quite our latest generation of chips, although it was reported that even that was being considered, but the generation of chips that's just one back, that's still extremely powerful. And we are many years ahead of China in terms of our ability to make chips. So I think it would be a big mistake to ship these chips.
ओके देखो, ये नेचुरल गैस का प्राइस अभी भी नहीं आया, रेजिस्टेंस पे वहीं का वहीं है। ठीक है, जिस तरह से मूव हो रहा है मैं पहले ही बता चुका हूँ, अगर सेलिंग आनी है तो फास्ट आनी चाहिए, रेजिस्टेंस पे हिट करके प्राइस ना तो रुकना चाहिए और ना ही उससे पहले सेलिंग देना चाहिए। ठीक है, अब ये कैंडल क्लोज हो गई है, इस लेवल से भी अब सेलिंग नहीं करेंगे। ठीक है, लिक्विडिटी है नहीं, सडनली आ जाए अलग बात है, बट प्राइस इस तरह से जा रहा है, हो सकता है शिफ्ट करता जाए अपना एसएल ऊपर की साइड को। से सेल मत करना, अभी प्राइस आएगा भी नहीं आएगा, वी डोंट नो येट इन नेचुरल गैस। ऑलरेडी 6% के अराउंड, 4% के अराउंड अप है। तक गिर जाए अभी भी प्राइस वहीं से, बट अब उस लेवल से वापस सेल नहीं कर सकते, आ जाना चाहिए था, काफ़ी देर से रुके हुए हैं। दो बार शिफ्ट कर चुके हैं, ध्यान रखना है, थर्ड टाइम है ऑलरेडी इसमें। से देखेंगे इस एरिया से, अगर आता है तो यहाँ से अब इंटरेस्टेड नहीं है इन नेचुरल गैस।
And that political mess that came from that. JP Morgan, for itself, they have said that we don't do that. We don't debank people for political reasons, and that's as far as they went to comment on it. But those shares down 1.7%. The president also expressed dismay that the Wall Street Journal reported that Jamie Dimon had been one of his Fed picks. Trump, of course, pushing back on that story. Elsewhere, you pointed out tech having a really bad day. I should point out all those memory chip stocks falling hard in today's session. Apple also getting caught up in the sell-off, down 1.2%, a downgrade from Citi, saying that it's because of the memory chip stocks, because they're so expensive. Apple's going to struggle with its margins, but it only downgrades it to 315, so that's still about a 25% gain from current share price. Finally, rounding things off with some deal news this morning, Wrap Therapeutics with a deal. GSK will be buying the company in a $2.2 billion deal. It values the company at about a 65% premium from the close. They make a lot of immunology and anti-inflammatory deals, so the price action just about getting to that premium. We're up 64% in today's session, John.
Hey, Danny, thank you. More from Danny in the next hour. Plenty of price action to kick off this Tuesday morning. Turning to the economy, companies adapting to rapid shifts in the labour market as AI integration becomes increasingly widespread. It's going to be a huge feature of the conversation here in Davos, Switzerland. And to add to that conversation, joining us now is Becky Frankowitz, the President and Chief Strategy Officer at Manpower Group. Becky, good morning. Good to see you.
Nice to see you.
Let's get into this. Jobless growth is a big, big story, I think, for this World Economic Forum, and arguably the story the President's got to address himself when he speaks at this forum tomorrow. Can you describe the levels of growth we're seeing and whether we're seeing a decoupling in the level of job growth that we've seen in the last 12 months?
Yes, I think what we're seeing is the anticipation of AI. So that's the interesting thing. AI is still in its infancy. It's a baby, and we're starting to see it grow up, but it's not embedded in most companies still today. And so really what we're seeing is the anticipation of impact, and that's what's causing people to either delay, either increase, or not need to hire. And that's where we are right now.
So are you seeing companies try to increase flexibility by leaning into temporary workers just a little bit more?
Yes, so you're the third person I've heard that from even today. And so it's a hot topic, but the data would say, no, we're not seeing that yet. I think what companies are saying now is we've probably postponed hiring as long as we can. We need to do something. And in this unknown of what AI is going to do, let's bring in workers that we have more flexibility with. And so we haven't seen the data show that yet, but that is definitely the conversation.
Who is getting hired to the extent that there are jobs being created? Is it people who are experienced and have already been in the workforce for a while, or is it younger people who actually are natives of the technology?
Yeah, it's varying by sector. And so in the tech space, we're seeing that the job description is requiring 5 years or more experience because there's been quite a slowdown in tech hiring. However, you go into healthcare, we're seeing a decline in the number of years of experience. And so we're starting to see a nuanced job market in a way that we haven't seen at least since COVID.
How much do you expect a lot of the jobs that have been cut to never come back? That as a lot of these companies really understand the efficiencies more, really are in the early innings, we are having a structural shift in the labor market where many fewer workers are actually needed.
Yeah, so what we're seeing today is when a job is hired, about 20% of the time, it's like for like, which means 80% of the time, it's a nuance on the job. So we're already starting to see jobs be hired that aren't the same as the jobs they're replacing.
That's interesting, because last night I heard an executive say that firing will be very quick, but hiring will take years, and that's the bridge policymakers need to focus on. Would you agree with that assessment?
Yeah, and I think that, yes, I would, and it's the humanity in that space. And so we have this duality happening right now between the now and the next. How do I lead for the now and build for the next? And what's in between is our workforce, and how do we make sure our workforce has confidence that they can, of course, contribute today, but also be ready to contribute tomorrow?
A big feature of this Davos is the President of the United States, and he's been leaking out what he's going to talk about in terms of affordability. How does Washington, just in general, or even governments internationally, how do they address this issue?
Of affordability?
Of this crisis of potentially AI taking jobs.
Yeah, well, I think, again, 3 years ago at Davos, the talk was AI's coming for your job. Now the talk is AI's coming to your job. And that shift is an important one because it means now we know AI will take part of tasks. But the big unlock for AI is when we think about the outcome that we want and how you redesign the process. And again, the duality of humanity, we need workers today. They have to keep contributing, which is why John asked me the question about temporary labor and how do we keep flexibility, because we have to perform today towards an unknown future.
Some of these themes are already developing. We caught up with Citigroup earlier this hour, and Lisa asked him about what's happening with jobs. They're doing this quietly anyway. if you look at the overall staff levels at some of these banks over the last several years, they've barely increased. Profits have absolutely exploded. Bramo, I would suggest if you look at the banks on Wall Street, some of these things are already happening.
They have actually contracted their staff at the fastest pace, going back to even some of the depths of the financial crisis, but it's coming without that commensurate slowdown. Exactly to your point, jobless growth.
Becky, what is making them more productive? Where is it coming from?
Well, we're just squeezing more for less is what we're doing today. Again, waiting to see what AI can come automate. But when we ask companies if they're going to hire or not going to hire, AI is only 20% impact on those answers. And so it really is, how do we keep control of our workforces while we're anticipating something in the future?
Earlier this hour, I mentioned a PwC survey. I'm going to mention it again because I think it's absolutely amazing. On a weekend and the start of a week where all the news flow will be dominated by tariffs and geopolitical risk, you survey CEOs in America, survey CEOs worldwide, and ask them what is the region they're most excited about, and it's America.
Yes.
And it's up on last year. It's actually up on last year. It's gone from 30% to 35%. What is so hot about America right now?
Yeah, so one is the adoption of AI. I mean, the American population is one that says, give it to me, I'll try it, versus are we sure it's going to work with skepticism? And so part of it is the entire culture of the country is built on adoption, and that translates into the workforce. That is one. Two, there is this drive for growth. It's part of the American spirit that I think you're seeing show up. And so some of it is I'd say, soft, but the labor market and growth is full of feelings, John. It's one of the things we've learned. We thought it was data. It's actually not. It's how I feel. And fortunately, people are confident in America today.
How do you feel, Becky? Feeling confident?
I'm cautiously optimistic is what I would say. I'm cautiously
Diplomatic.
optimistic. Yes, cautiously optimistic.
Becky, it's good to see you.
Thank you.
Thanks for being here. Thank you. Becky Frankowitz there, the Manpower Group president. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Back with us. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. Japanese Prime Minister Sanae Takaichi's election pitch to pause taxes on food, sending bond yields soaring to records. The rate on the 40-year is surging past 4%. That's the highest since its 2007 debut. Continued volatility expected in Tokyo trading ahead of the snap election February 8th. President Donald Trump inviting world leaders to become members of his Gaza Board of Peace. Invitees include the leaders of Russia, Turkey, Argentina, and Canada. According to a draft charter seen by Bloomberg, the Trump administration is asking countries that want a permanent spot to contribute at least $1 billion. French President Emmanuel Macron declining to join the board. Fed Chair Jay Powell will attend Fed Governor Lisa Cook's SCOTUS hearing. Sources telling us here at Bloomberg, Powell plans to sit in on Wednesday's session in the case of President Trump's attempted firing of Cook. Fed watchers and analysts say the case will impact the president's ability to fire Fed governors and influence the central bank. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in the next hour. Up next on the programme, financing the AI boom.
We are safely and soundly deregulating the banking and financial system. According to Oliver Wyman, we may have added $2.5 trillion in lending capacity, which will help finance our AI boom.
The game here is understanding. These digital assets have the ability to change the payment landscape of the world, and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoin?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need. Because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. That's a good-looking trophy.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
We're live at the World Economic Forum in Davos, Switzerland, waking up to a sell-off in the equity market. Check it out. Futures selling off over the last 24, 48 hours continues so far this morning. We're down by 1.6 on the S&P. On the Nasdaq, we're down by close to 2%. With a strong whiff of tariffs hanging in the Swiss air, this is the move you've got in the bond market. I have to say up front, the move in the bond market is global. The bigger move is actually in Japan, but it's dragging yields higher stateside as well. We're up by 7 basis points on 10s, up by close to 10 on 30s. With that move in the bond market, this might be of concern. You're not seeing dollar strength. You're seeing dollar weakness. Check it out in foreign exchange. Euro dollar right now, positive on the session. The dollar, Lisa, weaker against everything in G10.
Which is the reason why people are saying that the sell-off in U.S. assets is something more than simply an issue having to do with Japan. Whether it continues, whether it persists, remains to be seen. A lot of people drawing parallels to April with Liberation Day.
A strong echo, I think, of what happened last April. Remember what happened next? Market ripped. Everything was okay. Things are fantastic. Why one sector, tech? Insulated by the warm embrace of just significant tech spending over the last 12 months.
Yeah, this to me is the story of the United States and the optimism that you're hearing from so many business leaders here in Davos. Yes, people are concerned about the geopolitics. Yes, they're not sure where things are going to go. But yes, they're so excited about artificial intelligence. They think that that will supersede absolutely everything and keep demand underpinning some of those flows into the U.S.
It's a big story at the World Economic Forum. Under surveillance this morning, financing the AI boom.
We are safely and soundly deregulating the banking and financial system. According to Oliver Wyman, we may have added $2.5 trillion in lending capacity, which will help finance our AI boom. We are cutting back regulation, and that is leading to great certainty for businesses.
That was the Treasury Secretary Scott Bessent speaking a little bit earlier. Joining us now to extend the conversation, Michael Kratsios, the Director of the White House Office of Science and Technology Policy. Michael, good morning. Good to see you.
Good to see you guys.
Thanks for being here. We've got a lot to talk about. Let's start with this. The energy intensity of GDP growth feels like it's changing really, really quickly. How do we need to adapt to that?
I think energy is a key driver of everything that we're going to be doing to drive this AI race. The White House put out its AI action plan in July of last year. It has 3 pillars. One is innovation, one is energy, and one is international. So a key pillar of the whole thing to work out is how we can get enough energy in the U.S. built out and how we can build these data centers quick enough to power all the great solutions that are going to come to our industries in the years ahead.
You're tracking the numbers, looking at the charts. When you look at demand and supply, are constraints on the horizon, or are they avoidable?
We generally feel like the industry is finding a way to push through it. Obviously, the regulatory challenges associated with being able to permit and build this stuff is in everyone's mind. And I think you saw the president speak directly to this issue on a Truth Social post last Monday, where he said, look, if you want to build out all these data centers to these data hyperscalers, you have to find a way to make sure that the energy prices for American consumers don't go up. So the White House and President are very cognizant of the electricity issues, but we think we can meet that demand.
A lot of people say that the United States is certainly ahead when it comes to chip technology, when it comes to some of these hyperscalers. China's ahead when it comes to how much energy it has available to use some of these solutions. How long do you think it would take for the U.S. to really catch up to where China is on the energy space?
I don't necessarily see it as us trying to catch up with energy capacity of China, but I think it's more, do we have the amount of energy that we need to meet the demand in the U.S.? And up to now, I think we're able to kind of meet that demand and that capacity, and I think we're in a good place.
So you don't think that there's any additional energy that needs to be provided in order to meet the build-out that people expect coming down the
obviously, we could always build more electricity and drive more. That's the whole agenda is around energy abundance, but I think we're pacing it and creating the right regulatory structure to meet the ultimate demand.
Michael, there's a bill that hasn't even gotten out of committee that's getting a lot of attention when it comes to Congressman Brian Mast's bill, basically saying the U.S. needs to regulate, Congress needs to regulate chips the same way they do arms sales. Who should be regulating chip sales to, say, adversaries like China?
I don't have any position on that bill. I haven't read it, but I will say currently Secretary Lutnick and the team at BIS is obviously on the hook by statute to work through our export control policies.
When it comes to China, though, there has been a divide, I would say, within the White House, or a robust debate, let's call it, about how do you deal with China? Do you sell them the chips to get the world addicted to American technology, or do you need to put stricter guardrails around it?
Yeah, the policy right now is to restrict the top-end chips from access by the PRC. So currently the Blackwells, which are the best chips on the market, are not available to China. The Rubin that's going to come out later this year is also going to be export controlled. The change that many of you saw this week was a new rule that went out for the H200, which is one chip below the Blackwell. And those sales are allowed to China with some restrictions.
Can we cut through narrative and facts? I'll describe the narrative of the last 12 months. It was around this week last year and the week after there was a near obsession with DeepSeek. And the story coming out of that was that somehow China was far more efficient at developing these things compared to the US, and that it was also export compliant. And it was the export compliant piece of this that got my interest. As far as you're aware, are the developments you're seeing out of China export compliant, or are they just getting these chips somehow, somewhere into the country?
Yeah, I think we've come a long way since that moment with DeepSeek, and I think what's shown over the last year is continued American dominance in leading frontier models, and it's something that I think all of our big AI companies are very proud of. The message that we came to bring here to Davos is all about the third pillar of the AI action plan, and that is how do we share America's technology, our AI stack with the world. We want everyone to be building on American chips, fine-tuning on American models, and using American applications. And that's something that the President developed an executive order in July of last year, and we'll full steam ahead to make sure that anyone who wants to build on AI has access to our technology.
On the flip side, there's a real question, and certainly we're here in Europe, so in
Okay guys, ये क्रूड ऑयल में भी देखो, अगर ये इस कैंडल पे अगर मोमेंटम नहीं आया 5:30 के बाद थोड़ा सा वॉल्यूम आना स्टार्ट हो जाता है, 6:30 न्यूयॉर्क सेशन इज गोइंग टू ओपन. सो फिर हम यहाँ पर भी ना इस रिस्क की ट्रेड में अगर कोई है तो अपना एसएल कॉस्ट पर रख लेना, या फिर फ्रेश एंट्री मत करना. ठीक है, हम फिर प्राइस इसमें भी सेमी पॉसिबिलिटी मुझे लग रही है. अगर ये नीचे नहीं आता रेजिस्टेंस से तो फिर ये भी थोड़ा सा अपसाइड जाके फिर वापस जा सकता है. तो फिर हमें वापस से अपना रेजिस्टेंस, ऑलरेडी वो मल्टीपल टाइम टेस्ट हो चुका है, तो फिर शिफ्ट करना पड़ेगा. सो जस्ट वेट फॉर दिस कैंडल. जितनी सेलिंग आती है ठीक है, नहीं आती है तो कॉस्ट टू कॉस्ट से निकल जाओ, फ्रेश एंट्री मत करना. और फिर अगर प्राइस यहीं से नीचे आ जाए कॉस्ट टू कॉस्ट पे रखे रहो. नीचे आता है वेल, अगर नहीं आता है तो फिर थोड़ा ऊपर और जाने देंगे. फ्रेश एंट्री मत करना फिर उसके बाद. तीन मिनट रुकते हैं नेट क्रूड ऑयल में, फ्रेश एंट्री मत करना कोई भी। कोई ऑलरेडी सेलिंग में है तो अपना एसएल कॉस्ट पर रख लो या फिर कॉस्ट टू कॉस्ट निकल जाओ। वैसी रिस्की ट्रेड है, एक नॉर्मल ट्रेड बनाएंगे, उस केस में फिर प्राइस को थोड़ा और ऊपर जाने देंगे। फ्रेश एंट्री मत करना सेलिंग के इसमें अभी। सा फिर हो सकता है प्राइस और इसी एरिया के आसपास जाए और फिर सेलिंग दे तो थोड़ा सा एसएल और शिफ्ट कर देंगे अपर साइड को फ्रेश एंट्री में। नेचुरल गैस का तो मुझे लग रहा है इसके ऊपर तो नहीं जाएगा, दैट इज अ लास्ट लेवल। आई एम एक्सपेक्टिंग अ सेल ऑफ यहाँ पर। एक दोनों ही है, रेजिस्टेंस भी है साथ में रिटेस्ट भी है, विच इज स्ट्रॉन्ग। कोई सपोर्ट नहीं बना है, लास्ट यही सपोर्ट है 320 के अराउंड। क्रूड ऑयल में सेलिंग का ट्रेड में अगर कॉस्ट टू कॉस्ट एसएल जाता है निकल जाना, ठीक है, कॉस्ट टू कॉस्ट से निकल जाना, फ्रेश सेल मत करना इसमें अब। ठीक है, देखो यहाँ से अब सेल मत करनी ही करेंगे। कोई रुका हुआ है कॉस्ट टू कॉस्ट पैसा लगा के छोड़ दो, फ्रेश सेल मत करना। कॉस्ट टू कॉस्ट का सेल जाता है तो एग्जिट कर जाइए। है ये रेजिस्टेंस जोन के आसपास ही, नहीं आ रही है सेलिंग फटाफट से तो अननेसेसरी रुकने का फायदा नहीं है। और ऊपर जाने देते हैं, अब आता है तो ऊपर। ऊपर भी क्रूड ऑयल में ना ये एक रेजिस्टेंस एक और कंसिडर कर रहे हैं, इसके ऊपर भी एक और रेजिस्टेंस है, दो रेजिस्टेंस साथ ही में है। रेजिस्टेंस और साथ साथ में बने, इन दोनों को एक ही साथ मार्क कर देते हैं, ज़्यादा बेटर रहेगा। अलग अलग मार्क करूंगा तो सही नहीं है। दो रेजिस्टेंस हैं एक्चुअली में, एक लोअर एंड पर है, एक हायर एंड पर है। इसको ना अलग ही रखते हैं। ठीक है, दोनों रेजिस्टेंस ना साथ साथ नहीं, इसको अलग ही रखते हैं, एक साथ लगा के सही नहीं है। एसएल काफ़ी बड़ा हो जा रहा है इसमें। ठीक है, दोनों रेजिस्टेंस को फिर से सेपरेट ही कर देते हैं, दूसरे रेजिस्टेंस तक पहुंचेगा तो देखेंगे। इसके ऊपर क्लोजिंग नहीं आनी चाहिए, क्लोजिंग दो कैंडल की आ गई तो ये भी लेवल ब्रेक ही हो जाएगा। ठीक है, इसके ऊपर भी एक रेजिस्टेंस है, उसको अलग से ही मार्क करके रख लेते हैं, दैट इज़ अ डिफरेंट रेजिस्टेंस एक्चुअली। इसके ऊपर प्रॉपर ब्रेकआउट नहीं होना चाहिए, ब्रेकआउट मतलब दो कैंडल एक के ऊपर एक क्लोज नहीं होनी चाहिए, नहीं तो ये लेवल तो फिर ब्रेक ही माना जाएगा। ऊपर वाला रेजिस्टेंस है, वहाँ से सेलिंग भी आती है तो फिर ये सपोर्ट की तरह काम करने लग जाएगा। अगेन इस लेवल से कम ही क्वांटिटी में लेंगे फिर से। याद रखना, दो कैंडल एक के ऊपर एक क्लोज हो गई, एसएल मान इस लेवल से निकल जाएंगे। टारगेट बढ़ी हैं दोनों के। एसएल को पॉइंट वाइज मत रखना, कैंडल ही इंपॉर्टेंट है। इफ द कैंडल इज क्लोज वी हैव टू एग्जिट। टू कैंडल्स कंसेक्यूटिवली, वन एक के ऊपर एक। एसएल का ध्यान रखना, एसएल बेसिस पे मत जाना, इस पे मेनली कैंडल बेसिस पे ही देखेंगे। ब्रेक करता है अब तो फिर दिस इज द लास्ट ट्रेड ऊपर से, बिकॉज ये लेवल ही मल्टीपल टाइम टेस्टेड है, दैट एक्ट लाइक एज अ सपोर्ट। फिर ये कुछ इस तरह से जाने की कोशिश कर सकता है उस केस में। लेट्स होप ब्रेकआउट ना हो। ठीक है, कैंडल बेसिस पे लगाना है एसएल, ना कि एग्जैक्ट पॉइंट वाइज। एक के ऊपर अगर एक कैंडल क्लोज हो गई तो ब्रेकआउट माना जाएगा। सिक्स 30 होने वाला है, आधा घंटा और है। थोड़ी वॉलेटिलिटी एक्सपेक्ट ध्यान रखना। यूएस मार्केट ऑलरेडी ओपन ही है।
Tomorrow, full coverage right here on Bloomberg Surveillance. Under surveillance this morning, the trade war making a comeback.
I don't think they're going to push back too much. Look, we have to have it. They have to have this done. They can protect it. NATO's been warning Denmark for about 20 years now, longer than that, 25 years. They've been warning Denmark about the Russian threat. And it's not only Russia, it's also China. So we'll see what happens. But let's put it this way. It's going to be a very interesting Davos.
That was the President of the United States. Joining us now in Davos, Switzerland, Paul Ryan, the former House Speaker, and now Teneo, Vice Chair. Speaker Ryan, good morning. Good to see you.
Good morning. Nice to see you.
I had this question planned for a while. Does your party now have more in common with Senator Bernie Sanders than the 114th and 115th Congress that you oversaw?
Apparently in economics, maybe the case is right. On tariffs and on interest rate caps and things like that, perhaps. I'm a conservative. This is not conservative economics.
Is there space for that in your party now?
Yeah, there is. Our party is a Big Ten party. It's got a lot of different factions. The dominant faction right now is more of an economic populist faction. That's the president's faction. That's MAGA. I'm a conservative, and I'm in the minority of my own party, but that happens.
When John's talking about having this relationship, say, the MAGA wing with Bernie Sanders, we're seeing that with a ton of issues the president's talking about, that the defense sector shouldn't have dividends or buybacks, credit card interest rate caps. Bernie Sanders literally wrote the bill. How do individuals in the minority of the Republican Party right now make their voices heard?
This is populism, but it's populism tethered to whatever people think is popular, not tethered to certain core principles like liberty, freedom, free enterprise, private property rights, et cetera, et cetera. So my wing of the party, which is the classical liberal conservative wing, the free market wing of the party, is in the minority. And we just have to make our case for why we believe what we believe and why we think people are better off at the end of the day. The challenge is it's hard to defeat populism and sound bites and emotion, and that's what can win the day, but it doesn't win the issue. It doesn't actually deliver the results. So at the end of the day, I think results are what matter, and I think people, voters, vote for results. If they're going to vote for populism that speaks to their concerns and their grievances and their frustrations, that's one thing. But if that populism doesn't deliver policies that actually solve problems, then they're going to look elsewhere, and hopefully we can have a better discussion about what actually works. What principles that built our country, that make our economy strong. It's our private property rights, our deep liquid capital markets, our rule of law. That's why America is America. That's why we've done so well. We have to defend those principles, even if those principles aren't that popular.
You're a free market individual. This administration is taking equity stakes in companies. Is that state capitalism the way the Chinese do it, or say like the Europeans in the 70s?
Yeah, it's more of Europeans. It's more Japanese. It's more Europeans. It's not Chinese. It's not what conservatives are for. We don't believe in doing that. But this is more industrial policy, less communist dictatorship. It's very different.
Your role right now is to advise companies, and you're coming at a time where companies have no clue what's going on at the White House or what might come out of it. What do you tell them?
Yeah, I mean, we just did a survey, actually, of 750 CEOs that Teneo just did, and frankly, a lot of them are pretty optimistic about M&A. They're optimistic about economic growth. Where they're uncertain is tariffs. So they have to plan for resiliency. They're basically building resilient systems because they don't know what's going to happen on tariffs. I actually think, and I hope, that the Supreme Court may take away the IEEPA authority. I don't think that law was written for tariffs. It's a sanctions law. We'll find out. It may be even later today. I don't know when the court's going to rule. But that's a tool the president's been using far beyond Congress's intent. That's my opinion. But if that happens, then he'll have to go to other trade laws that aren't as easy to use, like the IEEPA laws have been used. And so that takes away some uncertainty. But we're going to have trade uncertainty, tariff uncertainty. But there's good regulatory posture. We have good tax policy. There's going to be a lot of M&A. So I think we're driving the car with 2 feet. We got 1 foot on the gas, 1 foot on the brake. And that's what CEOs are trying to plan for. How do they respond? How do they seize the opportunities and plan for the uncertainties?
We just had the head of General Atlantic on, who said that resilience to him means diversifying, and it means diversifying away from the United States. This is the what-if scenario. In the meantime, businesses have to plan. How much of the people you're talking to moving capital flows outside of the U.S. in a way that concerns you?
I worry about that. I worry more, frankly, about a long-term debt posture and the fact that we're not doing anything to deal with our debt, which means our dollar. So I think there are things that are good that are happening, say stable coins being deployed. That's good for the dollar. If we got our fiscal house in order, that'd be great for the dollar, but I don't see the populist politics lending itself to doing those things. But we do have the best economy in the world. We have the deepest and most liquid capital markets. So I still think we're going to be there. We have better regulations than what we had in the last administration. We have good tax policy, but there's a lot of uncertainty. So yeah, it bothers me when I hear companies feel they need to diversify away from America because of the uncertainty. But if we get this uncertainty dealt with, if the uncertainty tamps down, then I think we'll be back in business. So overall, I think we're going to be okay at the end of the day. I think our institutions stick.
Can we finish on the debt market? You took us there. There's a sell-off in today's session. Look, 4.30 on a 10-year bond yield is not a crisis. I'm not going to pretend it is. But the direction of travel is just to push more and push more. And it's not just America anymore. That's right. Maybe Japan is leaning in the same direction and they'll loosen things up as well. What do you think we're building up to?
What I worry about are auction failures. They won't technically be a failure because they'll make the primary dealers buy the paper. But I worry if we see that an auction would have failed, what the spike in yields will look like, and then what that does to our fiscal policy. So if we could get ahead of our fiscal policy problems by reforming our entitlement programs prospectively for the X generation on down, I think we could calm the bond markets down and we could be the flight to quality again. We're not there and our politics aren't there yet. So because that's not even anywhere near being politically viable, you have these kinds of things. Then you have all this tariff uncertainty, all the things that are happening there that are going to spook the markets. I don't know if this is a Japan story today or if this is a Denmark. I don't know what this is about, but If we had our fiscal house in order, I don't think you'd see these kinds of shocks.
There's no flight to quality this morning, that's for sure. Speaker Ryan, it's good to see you.
Good to see you.
Thanks for dropping by. Thank you. That was the former House Speaker and current Teneo Vice Chair, Paul Ryan. Weighing in on the debt market at the end, Lisa. Look, yields are up. Not a crisis at 4:30. That's not a problem. Let's not pretend it is. But the direction of travel, we shouldn't pretend it's a good one either.
Yeah, and if I were going to be reincarnated as anything, it would be the bond market, right? Is that, in the words of a sage, given that a lot of people are worried that it could get out of control and actually shape policy itself.
Coming up next on the program, we'll catch up with the Lumen Technologies President and CEO, Kate Johnson.
What would you say the president would say, or you would say, is his greatest economic accomplishment to date, and what would you say is their greatest economic challenge for the remainder of the term?
He has believed in tariffs his whole life. And a lot of people thought that the tariffs would come in and cause a recession and cause inflation, and his intuition was that they wouldn't, and they haven't. And I think that we've learned a lot about how tariffs fit into an optimal fiscal policy because of him, and I would say that would be a great accomplishment as well.
The tariff policy, is it complete now? In other words, has he finished negotiating the major deals with the countries he wants to negotiate with, or is it still an ongoing process?
It's an ongoing process. It's an ongoing process. I think that one of the things that people have been talking about just the last few days is, thinking about changing tariffs for foodstuffs and things. And so I think that there are going to be more changes, and there have been really big changes. And then one of the things that people forget about, like prudent policymaking, I'm sure that President Carter would have agreed with this point, is that you do what you think is right, and then you watch what happens, and then when you see things that you need to adjust, you adjust them. And so I would guess that we've made really big changes and that we'll have to make adjustments now and then.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
In case you missed it, on the pulse.
Markets like oil, you got the short, 2 weeks ago it was 230 million barrels short, bigger than what the glut is that's floating out in the South China Sea in these dark fleet ships. So the market going in is record short. Demand is not slowing down, it's picking up, and geopolitical risk is at, I would say, an all-time high. That's a recipe for a spike in prices right now.
Where do you see the next risk?
Basic commodities and affordability, starting to put pressure across the interest rates and everything like that. And, the curve is beginning to steepen on the yield curve. And then you got to ask, as the yield curve begins to tip out and you start to see higher interest rates further out on the back end, are people going to be willing to sell these commodities? It starts to become even that much more riskier as your underlying cost structure of the economy changes, and a re-rating of real assets. And
it's like a shock.
It's a shock.
Don't miss the Pulse, live every weekday.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every weeknight. Balance of Power, weeknights at 10 p.m. London time, only on Bloomberg.
Live from Davos, Switzerland, the World Economic Forum. It's day one for the team here at Bloomberg Surveillance. Good morning to you all. Day one for your stateside as well after a long weekend. Check this out. Waking up to this in the equity market. Down and down hard on the S&P, the Nasdaq, the Russell. On the Nasdaq 100 so far this session, we're down by close to 2%. Things are slowly getting better on the S&P 500, sub 1.4%. In the bond market, bond yields higher, particularly at the long end of the curve, 10s and 30s. The two-year bond yield quite anchored right now. You're seeing yield yields bleed higher by something like 5-6 basis points on 10s. The move much bigger in Japan. But as we keep going back to this story, it's the move in the bond market accompanied with the move in foreign exchange that gets your attention. And it's a similar story. We've seen this movie before. We saw it almost 10 months ago, last April, when we saw that dollar weakness together with bonds selling off, that Sell America trade, just making a little bit of a comeback. I've got no idea if it sticks, but that's certainly what we're seeing so far this morning.
And you're also seeing a similar kind of flavor when you look at the precious metals. I will note that as U.S. hours begin and people come into their offices, the move is tempering. And I think that that's interesting because that typically is a trend that we see. People come in, they're buying the dip. So the day is young, but that is something to keep watching.
Well, the president did send out his soother-in-chief to the markets, he calls it, Scott Bessent, who said, this is hysteria of April 2nd. And what did we learn on April 2nd? It was a negotiating tactic, and Trump ended up having negotiations and deals and wasn't the high tariff rates that he first promised.
Just for the record, are you suggesting the Europeans are a little bit more emotional about this issue? Just for the record.
Actually, well, they are if you look at the text messages.
When you take a look at the text messages, and frankly, in private conversations that you have here, it is deeply emotional, and it is deeply emotional for fund managers as well. So I will just say on the record, yes.
We'll see if this dip gets bought a little bit later in the session as we count you down to the opening bell. Let's cross over to Danny Berger for your morning movers. Hey, Danny.
Hey, John. Some earnings to get through this morning. 3M selling off and selling off hard after reporting down 4.6%. I got to say, their earnings were fine. They beat on most metrics. They also said that they're going to grow both sales and profitability. The one sore spot was their consumer business. That continues to decline and has had a couple consecutive quarters of that. Maybe it's also just getting caught up in the broader sell-off. So 3M, again, down 4.6%. Rallying this morning, and again, maybe this is another head-scratcher, is D.R. Horton, because their earnings did miss the home builder. Less sales than expected. Even though mortgage rates came down, the CEO on their earnings call did say that it's this issue of affordability that is still keeping home buyers on the sidelines. So shares initially sold off, and now they're up. Those shares up 2.9% in the pre-market. This one is very clear why it is moving. It is Critical Metals. This is a company whose main flagship mining project is in Greenland. This is a company that tends to rally whenever there are more nerves about Greenland, whenever the conversation gets more real about the president's ambitions to have the country. So those shares up 9.5% with President Trump trying to make moves there at Davos around Greenland. John.
Danny, thank you. More from Danny in about 60 minutes' time. Let's turn back to tech. AI driving significant data movement, boosting partnerships between hyperscalers and energy providers. Kate Johnson, the president and CEO of Lumen Technologies, a telecommunications company that provides high-capacity fiber networks, joins us now for more. Kate, good morning. Good to see you.
Good morning. How are you?
Thanks for dropping by. I'm fantastic. Let's talk about your company. What are we transitioning from to? Are we no longer just a telcos company? What are we developing into?
We're going from legacy telecom, which is point-to-point analog solutions to move data, to a digital network services company that provides AI-ready solutions. So the big problem is huge swath of data needs to go everywhere. Compute and storage spread everywhere. Users spread everywhere. You got to get the data to and from the models and to and from the people to drive insight. And you need fiber connectivity to do that. And that's what we do.
That's what you do right now. How have you had to change and adapt the business to meet this moment?
Massive transformation across a couple of different levels. The first is expansion at the physical level, and that's what you've seen in the papers. We're doing deals with hyperscalers to interconnect clouds and data centers. Largest expansion of the internet at large in history. The second piece of it is digitizing everything. You know, when cloud came around, it digitized compute and network and storage, and nobody touched network. It kind of just stayed static. And what we're doing is we're programmatizing or making the network programmable, just like compute and storage are, so that you can be agile as an enterprise using AI. Fire up my network, fire down my network, depending on how much data I have.
It's cost intensive to do this, and you work with a number of different partners. There have been some high-profile partnerships, including the latest being Palantir. Mm-hmm. What are you looking for when deciding who you want to partner with?
So basically, any technology company runs on compute, storage, and network. So we work with all of them. And what we do is we tailor our network solutions to be sold right with that technology cloud solution so that enterprises no longer have to go to two separate places. They can buy whatever solution they're looking to transform and drive business outcomes, and they can get an AI-ready network embedded in it. And that's how Lumen's providing value to the technology ecosystem.
How do you
keep staying power? Because this is a very quickly evolving technology, and some people are worried that things like neoclouds or some of these other developments are sort of glorified real estate plays, or are potentially going to be stranded assets when the technology changes, or there's less need for that level of compute. How do you avoid getting left with that kind of excess capacity?
The really cool thing about networking is it's relevant to both sides of the construction of the AI economy, the production side and the consumption side. So the production side is all the CapEx you're hearing about, people building, the technology companies building infrastructure to supply AI solutions. They're connecting all these data centers to do their models and start training them, right? But there's the consumption side. That's digital, right? And that's the digital platform that we're building to make it easy to consume. So we're relevant to the production side because we connect the data centers. We're also relevant to the diffusion side of AI because we help enterprises take advantage of those models. So our staying power is quite impressive, actually.
As you make this transition, are your hiring decisions different? Do you have to sacrifice also anything?
So it's a great question. The transformation of our workforce is going to be pretty significant, just like every other company on Earth. We're importing AI skills. We're training and upskilling our existing workforce. And we're also trying to figure out how to shapeshift, how to invest in places where we haven't in the past.
Do you think this is a global story for telecoms?
So I think it's a story for telecom in two parts. One is most telecoms are still focused on analog provisioning of services. They're stuck in the old physical network, and they're not investing in the digital platform. Any telco that recognizes that crown jewel asset of the fiber network and builds a digital platform on top of it is relevant to this story.
In CapEx booms, mistakes are made. Can we talk about how quickly this is moving? We've seen some estimates that in the last 12 months in the US, 40% of the GDP growth has come from tech CapEx. It was mid-single digits only a few years ago. Things have changed that quickly. How do you approach something moving that fast and maintain discipline?
Look, if you're asking me if there's an AI bubble, I think
I'm not there yet. That's the next one.
Okay, well, so
I think you should have followed.
She saw right through that one. Bubbles are all about asymmetry between supply and demand. And what you're seeing is the construction of the supply side of the AI economy. By the way, that's going to take several decades because you got the power, you got the chips, you got the networking that all needs to be constructed. It's going to be about diffusion. And diffusion, or the consumption of it, the supply side, is really dependent on skill sets, mindsets, data sets, change management. There are a lot of different factors associated with diffusion, and that's what we're talking about here at Davos.
How big is the appetite right now for the likes of Palantir or Microsoft, your former employer, to keep investing in the fiber, in some of this highly capital-intensive assets that they've already poured billions of dollars into?
So they've poured billions of dollars into a lot of different kinds of assets, and they all need to be connected. It's critical infrastructure. You cannot run AI without it. AI needs data. Data needs data centers or compute, and that compute layer needs to be connected. So we're actually quite close with them, and we're constructing ideas for how we bring more value to the story. That digital platform, we've integrated it natively into our fiber optic layer. And what that means is we can provide new capability, new performance, new speed. It's more secure than anything they've ever worked with before, and we're collaborating in doing so.
So who's your next collaboration? What do you have your eyes on?
That's for me to know.
And for me to ask
and
about.
to share later.
Yeah, exactly.
We're working with a number of technology companies to bring integrated solutions, AI-ready solutions to their customers to accelerate their time to market and their time to value. And so see more for detail.
Watch this space.
Soon.
Are we making announcements this week? No, too soon?
Well, we're in quiet period for earnings.
Okay. All right, okay. We'll
Maybe
wait.
not this week.
Kate, thank you. It's good to see you.
Thank you.
Kate Johnson there. Wonderful. Fantastic to catch up with the Lumen Technologies president and CEO. Tried to sneak in a little bit of a bubble question. I think Kate's a bit too sharp for that.
She was like, all right, I know what you're asking. You're going to say, is there a bubble?
She had like 1,000 different flavours of that over the last 12 months, I'm sure.
Who hasn't?
Let's get you an update on news elsewhere. For your top stories, your Bloomberg brief, here's Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. Taiwan says China sent a military drone into its airspace for the first time. Taipei says the reconnaissance drone was in the airspace for about 4 minutes early Saturday, above the range of air defense weapons. It comes as Taiwan's defense ministry says it wants to acquire an extra 200,000 drones and 1,000 unmanned vessels using a special military budget. President Trump threatening to impose a 200% tariff on French wines and champagne. The president taking aim at French President Emmanuel Macron after he rejected an invitation to back Trump's latest peace initiative in Gaza. President Trump publishing a text message from his French counterpart in which Macron invited Trump to have dinner in Paris Thursday. BlackRock's Rick Reeder making the shortlist to replace Fed Chair Jay Powell. Sources telling us here at Bloomberg President Trump's interview with Reeder last week went well. The search is now a four-man race again. Treasury Secretary Scott Bessent saying the president could announce his pick as soon as next week. And that is your Bloomberg Brief. John.
Vonnie, thank you. Very cool. Thanks for the update. More from Vonnie in about 30 minutes. Up next on the programme, building around tariff uncertainty.
Frankly, a lot of them are pretty optimistic about M&A. They're optimistic about economic growth. Where they're uncertain is tariffs. So they have to plan for resiliency. They're basically building resilient systems because they don't know what's going to happen on tariffs.
At any point in your tennis career, did you say, I've had enough and I'm just going to retire at the top? Do you ever worry about that problem, staying too long?
It's a great question, and it's one that I think every athlete finds a different answer to. Mine came a little bit later than when I would have liked. I think stubbornness was a great quality that shaped a lot of my victories, but in the end of my career, I think it became a flaw because I was so stubborn to get healthy, for my shoulder to recover. I was also at an age where just my body didn't recover as quickly. And so for a year or two, that stubbornness got in the way of other great things in my life.
What would you say is the thing you're most proud of having done as a tennis player? Was it winning Wimbledon? What was the highlight of your tennis career?
I'd say consistency. I think consistency is, you can have results and they could, come at various times in your career, but I was consistent for many years, and you have to show up. You don't just show up to play first round of the finals, but you have to show up for press conferences before every match, before every tournament, and just the consistency and the mental wear and tear of showing up week in, week out. So I felt like I consistently showed up for my team, for my sponsors. As I look back, I'm proud of that.
Live from Davos, Switzerland. Lisa's been talking about this for the last couple of hours. She mentioned the Europeans being overly emotional about the price action.
Okay.
And the Americans would wake up, step in and buy.
I didn't say overly.
Kinda.
They've been sued.
That's what's happening. On the S&P 500, we recovered just a little bit. We're down by 1.4%. On the Nasdaq, down by 1.6%. But the story, in many ways, remains the same. Sell-off in the bond market, dollars weaker. Sell-off at the back end of the curve, 10s and 30s, bond yields higher. Can see them higher by 6 basis points, up around 8 on 30s. The move in Japan, phenomenal. We're talking about a 20 to 30 basis point move at the long end of the Japanese curve. We'll save some time for that in the next hour. Check out foreign exchange, though. Dollar weaker against every everything in G10. And that's what got my attention first thing this morning. I was expecting a risk aversion. You all were. Would we get a flight to safety in the bond market? No. Treasuries sold. Would we see anything in foreign exchange that supports the US dollar? No. The dollar sold. Smells like April. Looks like April. Will it stick?
And that really is the key question. Will it stick? And overly remains to be seen, because that might ultimately be the right vote. But right now, it does seem like when people come into the U.S. hours, I'm getting messages saying it's not at all about Greenland. It's about what's going on in Japan. It's about potentially Taiwan, etc. At the same time, there is a flavor of what we heard last April. Also, potentially on Friday, the president told Kevin Hassett, I loved you so much on TV, I might need to keep you where we are. And we actually saw movement in the bond market. Potentially, investors are thinking a more credible candidate, or they're pricing in a hawkish candidate like the other Kevin.
A more hawkish Kevin Walsh, perhaps. Something we can discuss in the next hour as well. In the next week, we might actually find out who the next Fed chair is.
I mean,
right?
2 weeks. Waiting for
I thought it was 1 week now. Maybe next week.
I was told in April it was going to be the fall. And now we're
tuned.
sitting here in Davos in January, and we still don't know the Fed chair.
Sitting here in Davos, obsessed with tariffs once again. Under surveillance this morning, building around tariff uncertainty.
Frankly, a lot of them are pretty optimistic about M&A. They're optimistic about economic growth. Where they're uncertain is tariffs. So they have to plan for resiliency. They're basically building resilient systems because they don't know what's going to happen on tariffs. I actually think, and I hope, that the Supreme Court may take away the IEEPA authority.
That was the former House Speaker and current Teneo Vice Chair Paul Ryan. Joining us now, Geeta Gopinath, the Harvard University Professor of Economics and the former IMF First Deputy Managing Director. Geeta, good to see you.
Great to join you.
Thanks for being here. You've penned a fantastic piece recently about how much has changed, because I think there's a temptation to sit here to look at what markets did over the last 12 months, the amount of business investment we've seen, particularly directed at America, and say nothing's changed. How much has changed?
I think everything has changed for the global economy. Now, if you look at the headline numbers, which in terms of global growth, you'd say 3.3% was projected for this year, 3.2% last year, you think, well, nothing really changed. And I don't like the word resilience being thrown around, because it's not as if countries were able to deal with tariffs and not get affected by it. Tariffs did have a negative effect. It was a headwind even for the U.S. economy. It just got offset by a lot of positives, including AI, including expansionary fiscal policy. So let's not mix the underlying changes that are happening, which will show up over time. It will take time, though we're seeing new developments that maybe will be faster than we think, but let's see.
When you say they'll show up over time, in what ways will they materialize?
So firstly, I think the uncertainty is actually consequential, and that takes time. You know, after Brexit, the first 2 years after Brexit, investment actually went up, and everybody thought, well, we're making a big fuss about nothing. And then slowly investment slowed down, and then 10 years later, it looks really bad. I'm not saying that's the exact effect that's going to happen on the US, because it's a much more closed economy relative to the UK, but those effects are going to play out over time. Interest rates are, you know, I haven't checked the most recent numbers, but until yesterday, they seemed very squeezed in terms of the spreads that we're seeing everywhere. Financial conditions look really easy. It seemed like there was only one way to go up in terms of financial conditions, which is a tightening. And I think you just mentioned before we started that we are seeing that.
Yeah, we're seeing that when it comes to Japan. In the U.S., though, there is a hope that there is going to be this rate-cutting cycle that will continue amid the growth. Do you think that that's misplaced, or that could come at the consequence of what we're seeing right now in the dollar?
I think that we have a risk that we may be underestimating what inflation could do in 2026. On the one hand, yes, because there's been a productivity, positive productivity growth, that helps with inflation. But given the fiscal stimulus that's there, it's coming out right now, continued spending on AI, tariff effect that still has to play through, the dollar weakening, all of that could generate inflation going up. Now, what does that mean? I think regardless of what the central bank position is going to be, the long end of the yield curve will go up. Because either they raise interest rates and that causes the long end to go up, or you think this is too dovish a central bank, inflation is going to be high, that causes the long end to go up. So I think that's the risk that hasn't truly been priced in fully.
Is a move at the long end of the yield curve in the United States more a function, in your view, of what's happening globally and the fact that Japan, as John was mentioning, used to be sort of the peg that was the base for the entirety of the bond market? Or do you think that this truly is a consequence of some of the policies coming out of Washington?
So firstly, I will agree that Japan is very consequential. If interest rates are going up in Japan, given the carry trade that exists,
it has spillover to all markets, including the U.S. But I do think what's happening in the U.S. market is also driven by U.S. policies. The administration is aware of that, which is why, as you can see, they've shifted the supply to the short end of the yield curve as opposed to the long end. One of the reasons we haven't seen as much of an increase in interest rates at the long end is because they're really supplying now at the short end. If interest rates have to go up because of inflation, that's just going to worsen the fiscal situation and then push up the long end again.
The dynamic you described, Geeta, is precisely why we're seeing the dollar weakness that is materialising and developing before our eyes. You see it right now this morning, Lisa, weaker against everything, against the major currencies in G10.
Yeah, it's the reason why you've seen such a bid into gold, which raises the question, how much further can this go? And are we seeing a real devaluation that goes well beyond even in the currency cross of the euro dollar?
None of it matters. We've got the warm embrace of big tech. You wrote about that recently too, I believe, in The Economist. Can we breathe some life into that article once again? There is a sense of comfort in America because of the amount of spending a handful of companies are doing. Do you think we're becoming too dependent on that? And that concentration risk, is that something we need to appreciate a little bit more this year?
Yeah. So when I wrote about this in October, it was early October, at that time I said about $35 trillion of wealth could be eliminated if we had a dot-com style correction. Since that article and towards the end of October, I do think investors have become much more discerning. Meta got penalized even though they had better than expected earnings, but they said they were going to spend a whole lot on AI without being clear about where the revenues would come from it. So I actually think markets have become more discerning. But that said, I still see a bit of inconsistency between valuations of all these companies, not just those on the market, but also off the market, and the possibility of all of them earning that large profits. I just don't, that's a bit of an inherent inconsistency.
Is this the most fragile part of financial markets right now, the AI trade?
I would say that is certainly one of the most fragile parts. The other one is on the bond market side. I think it's been too comfortable there.
Does it give you at least some optimism that when it comes to AI, you see, at least in the United States, a tremendous amount of fiscal backing for these kind of build-outs?
The support for it in terms of incentivizing investment is great. I don't think the problem in AI is underinvestment. There's plenty of investment happening, so they don't need any more incentive. I'm sure that AI will be transformative. Productivity, I think, will go up for sure. Whether that translates into profits in this hyper-competitive environment is what I'm questioning.
And this is one of the reasons why people keep talking about the race between the U.S. and China regarding AI to be unique, because in the U.S. it's all about coming up with the hyperscalers and building out the infrastructure. In China, it's more about the software, it's more about the deployment, it's more about the energy creation. Do you see, in general, China getting an upper hand when it comes to attracting flows and some of its output and how it will be used in the rest of the world?
Firstly, I think China is doing a lot more on energy, it's just building out a huge amount of energy so that it can support its AI business. You're right, they're more focused on applications as opposed to foundation models. But that said, we saw DeepSeek. So to my point about the ability of all these firms to earn the kinds of profits they do, it's not just competition from within the US, but it's also competition from China.
Well, we're going to spend some time together, I believe, talking about some of these issues. I also want to talk about what's happening with the disconnect. I think this year, coming from 25 into 26 is defined by a massive disconnect. You've talked about an equity market being at an all-time high, credit spreads are super tight. That despite the chaos around us, headline risk super elevated. One thing that's dominated this program for the last 12 months is the fact that payroll growth has been very muted and earnings have been very high. And it feels like that spread is going to have to reconcile some way or another, and maybe politicians might force the issue. When the president addresses this forum tomorrow, yes, it's going to be about trade and some geopolitics, but it'll also be about affordability. Do you think that the status quo can persist, the disconnect that we just described?
There is a great deal of unhappiness with affordability everywhere in the world, and you see that in the US too. And tariffs have played an important role. About half to a 0.7 percentage point of inflation is coming from the tariffs. So they have had an impact, even though U.S. firms have absorbed it. I think we should all recognize, and I did research on that last year, which is to say that the costs of the tariffs have been borne by American firms. Some of that has been passed through to U.S. consumers. We haven't seen manufacturing jobs come up. In fact, manufacturing jobs have been lost. And U.S. stock markets did okay, but they did worse than Europe and other emerging markets did. So it is negative on many dimensions.
Just lastly, you are no longer a part of the IMF. What is the role of the IMF and some of these global organizations at a time like this?
I mean, the foremost role of the IMF is to be the lender of last resort. We see enough risks on the horizon that for them, delivering on that role is going to be critical. The other aspect is surveillance, which they'll have to do for all parts of the world. Of course, I think they're going to be a little more guarded in terms of what they actually say. But both these roles are absolutely important.
Why do we have to be so guarded in this environment? Why can't we be explicit and just speak truth to power?
Well, I think, what is it called? Strategic patience? That's what everybody throws around. Yes.
Geeta, it's good to see you. We'll catch up tomorrow. Geeta Gopinath there, the former IMF First Deputy Managing Director on the situation dominating global markets and the economy. And there is a disconnect. We talked about it throughout the whole of last year. Is it a disconnect that needs to be reconciled this year?
Right now we're seeing it get reconciled on a political level, at least with rhetoric coming out of everywhere, and we're seeing that in Japan. One reason why people keep watching the bond market to reconcile these two is going to take money, and that's something that increasingly is in focus.
Coming up next, the third hour of Bloomberg Surveillance will catch up with the IBM Vice Chairman Gary Cohn, Southern Company CEO Chris Womack, CoreWeave CEO Michael Intraday, and the President of Finland, Alexander Stubb. A stacked hour just around the corner.
Is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. I'm Jemana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Watch Horizon's Middle East and Africa every trading day at 9 a.m. in Dubai and 5 a.m. in London. Only on Bloomberg.
I never have changed my show to make it for YouTube. I'm very conscious of the fact that ABC pays for the show and YouTube pays nothing, and YouTube gets to sell it and keep half the money, and that's quite a deal for them. It really is. But I've never made the show for YouTube. With that said, I love YouTube and I love being on YouTube because all you really want deep down is for as many people to see your stuff as you can. And I know that it has hurt because it is so easy to watch the monologue on YouTube now. I know that it has hurt the ratings, not just for our show, but all of the shows. And maybe that's kind of what has killed late night TV. More likely the fact that we have our lead-ins are a tenth of what they were when I started.
I was alarmed to see that the most watched video from your show had fewer views than the average Mr. Beast video. And I don't know what that says about the state of the world, but
I think it says Mr. Beast is kicking ass is what it says, yeah. Well, you know what? There is a big difference. When you do the show every night, you're not going to get as many views. But we still, I mean, I woke up this morning, there were 2.2 million views of my monologue the night before. So for everyone who says late night is dying, it's just not true.
Welcome to the world of decentralized finance. Bloomberg is covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays only on Bloomberg.
What's the best investment advice you've ever received?
It's hard to pinpoint one thing. Being disciplined and having a very long time horizon is really important. I see a lot of people that are unwilling to make investments and take risks when the return potential is the highest, and in fact, in some instances, go the other way. So I'd say have a plan and be disciplined. It took me a little while to learn that just because something was down quite a bit doesn't make it attractive, and just because something's up quite a lot doesn't mean that it's expensive or that you've missed it. We had a former portfolio manager that used to say, don't cut your flowers and water your weeds. And we've certainly been through a period of time where it's paid off to let your winners run. And I'd say through my career as a large cap growth portfolio manager, that was a pretty important element of my process.
This year, we think it's a story about broadening.
We're in a period where investors can have more confidence.
The key issue here is really on the risky asset side.
There's just more vulnerability on the volatility side.
We want to stick with earnings, which we think are going to be the driver of equity markets over the course of this year.
Bloomberg Surveillance, live from Davos with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from Davos, Switzerland this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your price action looks like this. Check it out. Equities down across the board, recovering slightly on the S&P, on the NASDAQ. The sell-off in the bond market, though, it's the Sal America trade making a comeback. Yields are up, and the dollar is weaker. This is what we saw play out last April. It didn't stick too long. Let's see if it changes. But that's the story so far this morning. It's about trade and the relationship between America and the continent. There's a little bit of Japan playing out in this story as well. We'll breathe some life into that over the next hour. You'll see it in Japanese yields much, much higher at the long end of the curve. But the main event at the World Economic Forum is about a day away, 24 hours out, 2:30 local time. The President of the United States addressing this forum, and markets, not just European politicians, slightly on edge.
Yeah, slightly on edge, especially because of what we've heard over the past 48 hours with the potential to increase tariffs substantially on Europe, not to mention 200% tariffs on French champagne. A real concern here about what we're renegotiating, whether the peak tariff uncertainty really is behind us when, once again, this is being used as a tool over what? Greenland. Again, if this was on your bingo card, well, you deserve to get a check for a lot of money, that Greenland would be the focus of this Davos.
President Macron not popular in the White House at the moment, it seems, at least for the moment.
Not popular because the president is leaking private text messages between Emmanuel Macron and President Trump. And Macron really trying to say, I really like what you've done in Syria. We've had so much collaboration, but I don't understand what's going on when it comes to Greenland. And Greenland has really become this huge distraction and almost an existential crisis for the Europeans. But I think those individuals that are constructive around the president, a distraction as they try to negotiate other deals right here in Davos.
We're all trying to figure out what's going on. Let's take a step back and think about the president's first term. Whether you like tariffs or not, there was a well-articulated argument about a lack of reciprocity in a place like China, and that justified why they went forward with the tariffs they went forward with. Coming into the second term, tariffs are being used for a whole range of things, including revenue, including geopolitics. It just feels like, Lisa, that is a massive change compared to what we saw 8 years ago. And when you look at things that way, it's difficult to get your hands around a clear ideology that helps you predict the moment, helps you forecast, helps you price it in financial markets where things can change from one weekend to the next so drastically.
It's a great point, especially because the legitimacy of the tariffs before was part of the negotiations that led to a deal with Europe that a lot of people didn't like. This time around, a lot of European leaders are saying, this is a red line because we don't understand how far you can go, at what point we have a deal, at what point it can be renegotiated. And it's the reason why the market is taking this a little bit more seriously, because it feels like, potentially, this is really igniting something different in the leaders of Europe.
Two things to note, too. 10 a.m. today, the Supreme Court will be meeting. It's an opinion day. We could get the tariff decision. And all of these tariffs the president is talking about, the reciprocal tariffs, he used IEEPA, and that might be struck down at the Supreme Court. The other thing I think we need to remember is, remember the president went to NATO in his first term? He ran out of meetings. There was all this chaos. But at the end of the day, he got to a destination he wanted. He anchored it to the extreme, and he got to a destination was that Europe is spending much more on the collective defense. Potentially Greenland is part of that. Anchor it to the extreme and get to a destination of travel. He spoke about Greenland in 2019, how it was critical for NATO, how it was critical for national security and its defense.
That's policy. Let's talk about business. 2 hours of conversations already, and 2 hours of conversations about a lot of optimism around America. That's still the story. Look, I know a lot has changed in the last 12 months. We talked about that with Gita Governaf just moments ago. But how much money is being invested in the US economy? How big are these bets the big tech firms are taking? They're absolutely massive, and they're still making them. And when you ask CEOs around the world what's the #1 destination for capital, overwhelmingly the favorite still, the United States of America.
It's big tech versus politics, and here in Davos, it's facing off with one another, and you've got the big tech quotient, and you've got all of the business leaders leading into that story because the politics one, messy and unclear.
And tech won in the last 12 months, and you saw that in the equity market. Coming up this hour, we'll catch up with the IBM Vice Chairman, Gary Cohn. We'll speak to the CoreWeave CEO, Michael Intraday. Look out for that. And plus this, a headline act a little bit later on. The Finland President, Alexander Stubb. We begin this hour with stocks extending their sell-off as President Donald Trump's push to take control of Greenland is sending fresh volatility into markets worldwide. The IBM Vice Chairman and former NEC Director, Gary Cohn, joins us now for more. Gary, good to see you.
Thanks for having me.
Hey, you heard the way we opened the programme. There seemed to be a concrete ideology when you were alongside the President in his first term. Well, how would you describe this moment? What is this all about?
You know, no one knows for sure. But I think what we've seen evolve in the Trump presidency is this desire to negotiate and get a deal. So ultimately, is Greenland all about getting a deal? We know that the North Atlantic is becoming much more of a sought-after territory from a militaristic standpoint. So I understand the president's concern to have a military presence and protection of the North Atlantic. As if we want to expand our air defenses, Greenland is a pretty strategic spot. So I understand what the president's interest is. They also have rare earths, which is something that we in the United States can't supply to ourselves. So the question is this a negotiating posture to get a deal with Greenland, to get more rare earths, to get a larger naval and air force presence? And it may be. It does seem like that's on the table, and this may all evolve in a place where the United States ends up in a very good strategic position.
Do you think that's the way the business world sees it, coming into the World Economic Forum this week?
You know, I think the business world's split on it. You know, you've obviously got a European presence here and a U.S. presence here. I think the U.S. presence is a little bit more optimistic that this is going to end in the right place, and we've seen this before. I think the European contingency is a little more leery and say, look, you know, maybe you're confident this ends well. We don't like being in the middle of this right now.
Which is a reason why, in European hours, treasuries are selling off much more. The dollar was much lower. And as the U.S. wakes up, people are coming in and buying it. How much is the Sell America trade real, and how much is it a perception based on these moments, the ones that we saw on Liberation Day?
Look, there is some Sell America going on right now. I've met with a couple different asset managers this morning, said that global funds are reallocating a little bit out of the United States. So you see that, you know, interest rates are higher, so people selling bonds, rates go higher. People are repatriating currency back home. They're selling dollars to buy local currency. They're selling stock market. They've got to repatriate currency. So I think we're seeing a little bit of that. I don't think that's what's driving the overall market right now. It doesn't feel like we've got to liquidate America. It feels like we've got to trim around the edges in asset allocation models going on.
This goes back to the wrestling match we were describing. AI on one side, you've got politics on the other, and they're facing off, and it's sort of Sell America until AI rears its head and gets to the lead, and that's what we're doing.
It's Sell America until the light turns green and everyone has to buy America again.
Right.
Because in the real reality, if you look at the U.S. economy and what's going on, we've got one of the strongest economies in the world today. You know, we're growing at 5+% growth. You know, we've got a pretty good tailwind going on behind us. I mean, right now, the only thing stopping is all this geopolitical risk. If and when, and I say when, this geopolitical risk settles down, the market's probably going to take off again. That's been the history of this pattern.
Settles down. Gary, 2.5 weeks ago, we captured Nicolas Maduro. It feels like a decade ago. Now we're sitting in Davos talking about Greenland. You think geopolitics will settle down under a Trump administration?
2 weeks. Yeah, we're going to settle down. I think that there's a couple balls up in the air right now.
Well, a couple.
But, you know, this too shall pass. We can go back in the last 8, 12 years, and there's been periods of time where we've had these, you know, highly volatile geopolitical moments. We're in a highly volatile geopolitical moment right now. And by the way, I'm not sure it's a coincidence that Davos is right in the middle.
All right, interesting. I want to ask you about the Fed chair race, because you were in the room with the president in Trump 1 when he decided to go for Jay Powell. What kind of questions do you think he's lobbing at these individuals? And in the end, who do you think it's going to come down to?
Look, the president's in an enviable position right now. He's got, what we know, he's got 4 really highly qualified candidates. Any one of those 4 could do a really good job in there. I think the president at this point is trying to understand the sort of mindset of the person he's going to put into the position. The president clearly has a view on what interest rate policy should be. The problem or the opportunity with the Fed job is once he appoints someone into that job, they're an independent agency, and he loses his day-to-day contact with that person. So I think the president learned in the first administration that it's very important to who he puts in that job, and that he should make sure that he's very comfortable with their policy mandate before he appoints them.
Do you think it's become even more important now that that individual needs to have the ability to persuade the rest of the committee in a way that maybe a few years ago that wasn't as relevant? There's just a sense on Wall Street that the president's approach in the last 12 months has galvanized the rest of the committee to dig in.
Look, I think the committee structure is going to be the committee structure. I'm not sure if the chairperson can ultimately sway the committee that far. Could they sway 1 vote or 2 votes potentially? But you've got some very strong regional bank presidents. You've got some very strong governors in the Fed. I think the Fed ultimately at the end of the day is going to be a tough group to persuade. I think they'll come out in the right place. I mean, historically, the Fed has done a very good job. Have they been a little bit late? Yeah, they were late in the transitory inflationary problem of COVID. But they've caught up. They've gotten to the right place. And I think if you look at the Fed through the cycle, they end up getting to the right place.
You were diplomatic about the 4 candidates. Can I just talk about some of them individually? Governor Chris Waller. You can too.
Yeah, you can.
Governor Chris Waller, I believe you were part of that process, right? Mm-hmm. Vice Chair Clarity, you were part of that process too. What was the president's approach to that process back then? Was he as involved as he appears to be now?
He was not as involved then, but remember, he was a first-term president who was an outsider to Washington. That was part of his mystique, as he was an outsider to Washington. He knew he had to put someone into the Fed chair's role, and he approached it. But I think now, understanding the importance of interest rate policy and understanding his view of interest rate policy, he's taken considerably more time talking to the various candidates.
I'll ask you the question that might get you in trouble. Is Kevin Walsh a chameleon? Is he a hawk? Is he a dove? Is he whatever it takes to get the job? Why didn't he get the job last time?
Look, Kevin is highly qualified.
Without a doubt.
Kevin has served in the Fed.
Without a doubt.
Kevin was there during some of the toughest days of the Fed during the financial crisis. I personally was dealing with Kevin on an hourly basis as we were trying to figure out what was going on in the United States financial system. Kevin was an active participant in the outcome that we all benefited from. And without Kevin's wisdom, I'm not sure we would have ended up in the same place. He's a highly qualified candidate.
It sounds like out of the 4, that's who you'd like to see in the seat, based on that strong defense of Kevin Walsh.
I think Kevin Hassett's a great candidate. I worked with Kevin Hassett when I was in the White House. He was the CEA director.
Share your thoughts on Kevin Hassett.
Kevin Hassett was an excellent CEA director.
Let me tell you what some people say about Kevin Hassett, that if he's appointed, that's a puppet of the President of the United States. He'll sit there, smile, and do whatever it takes. Is that unfair?
You know, you and I both know, whoever gets appointed, there will be people that are disappointed and will have negative things to say about him. On the flip side, there will be people that will be very happy with whoever one of those 4 gets appointed. And if it's a 5th candidate we haven't seen yet, they'll be equally as happy with that one.
There is a sense that whoever's going to be there, they're going to cut rates. How much is the entire build-out of AI, which is what you spend most of your time talking about here, based on the idea that the Fed is going to be easing policy no matter what?
Like the AI build-out in rates, they're linked, but they're not inextricably linked. This AI build-out is being built because there's demand, there's forward demand, and the AI companies feel like they are behind the curve in being able to facilitate the needs of their clients. They are going to build these data centers. The only question that rates have is what is the ultimate all-in cost to build these things? And interest rates are going to be important. These are big, huge CapEx expenditures with 30-year lives. So, you know, the amount of interest you're going to pay to finance one of these centers is important. So 25 or 50 basis points has a lot lot to do with these decisions. But I will caution you, like I always do, the Fed only controls Fed funds. They control overnight rates. You've been talking all morning about the 10-year. The 10-year's at 4.30. Where these data centers are going to be financed, they're going to be financed to the medium, to the long, to the very long end of the curve. It's going to be a combination of duration. Fed funds is not going to affect that. So Fed funds could possibly go down, and the interest rate to finance a data center could be unchanged.
Do you miss the trading floor?
Of course you miss the trading floor.
Yeah, I get the feeling you miss the trading floor. Can you imagine how scary things were back at Goldman back in the day?
But that's when
first-year analyst, Gary's walking the trading floor.
Yeah, I think that he would have probably...
But John, that's when there really were trading floors.
Right.
Like you actually stood up and talked on phones and spoke to each other. And
did it prepare you for the West Wing?
Now it's machines. Now it's machines.
Did it prepare you for the West Wing?
It did. It did. It very much did.
In what way, Gary?
Just, I think, the ability to be watching 5 different things going on at the same time and be listening in 5 places. People in the White House were always amazed that I could be like having a conversation over here and talking to someone behind me because I heard them talking. But when you grow up in a trading floor and you grow up in a trading environment, your eyes and ears have to see everything.
With one eye on JGBs this morning as well.
Yes.
Gary, thank you. It's good to see you.
Thank you.
Thanks for sharing some of your experience. That was Gary Cohn there, the IBM Vice Chairman. Let's give you an update on news worldwide this morning with your Bloomberg Brief. Let's cross over to Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. Treasury Secretary Scott Bessent is urging European allies to remain calm over President Trump's Greenland claims. Speaking in Davos this morning, Secretary Bessent compared the uproar to the political throwback over President Trump's tariff announcement last April. He also dismissed suggestions that Europe is retaliating by dumping U.S. treasuries, calling that a false narrative. Apple regaining the lead in China's smartphone market after iPhone shipments jumped 28% during the holiday quarter. According to research firm Counterpoint, the iPhone 17 drew in consumers, with Apple's handsets accounting for 1 in every 5 shipments. Rivals Huawei and Xiaomi experienced double-digit percentage declines. Indiana University has won the college football national championship after defeating the Miami Hurricanes 27-21. The Hoosiers finished with a perfect 16-0 record, winning their first ever national title in program history. Quarterback Fernando Mendoza became the 8th Heisman Trophy winner to win a national championship. And that is your Bloomberg Brief. John.
Hey, Vonnie, appreciate it. Thanks for the update. Up next on the programme, we'll catch up with the CoreWeave CEO, Michael Intraday. From Davos, Switzerland, good morning.
What some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people. And there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content and never the two shall meet. But there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction might be using models to do so. Stamp tool on Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
What a start to our coverage here at Davos, Switzerland, at the World Economic Forum. Day one for the team here at Bloomberg Surveillance. On day two, it's all about the president's address to this forum. Europe very much on edge, and I have to say markets were too. Things are recovering slowly going into the cash open. Equities are off the lows on the S&P 500 and on the Nasdaq. This was a theme that you were leaning into, Lisa, earlier on this morning, that when America woke up, when the US session started, there was a chance that this dip would get bought.
There was a whole day of discussion, of rhetoric, of trading without the U.S. participating because of the holiday. And so there was a lot of discussion around Greenland really just permeating through every bit of action. Now suddenly there's more discussion about AI and growth and all sorts of other things coming from the U.S. audience.
Without a question, though, there are questions about the risk mitigation characteristics of treasuries. I don't think that's going away. You're not seeing that flight to safety, flight to quality, at least in the treasury market. Yields were elevated, even as equities were down and down hard. And that's the theme for us again this morning.
And as you've been pointing out all morning, the dollar has been weaker in tandem with those higher yields. So something is going on. My spidey sense has a sense that maybe this time feels a little bit like a repeat of April. And frankly, as we heard from Gary Cohn just then, we do see a shift in allocations, a diversification away from the United States.
The opening bell about 1 hour and 10 minutes away. Let's talk about AI and one company at the epicenter of this whole theme in the last 12 months, CoreWeave. The CEO, Michael Intraday, joins us now for more. Mike, good to see you, sir.
Thanks for having me.
How difficult has it been to keep up with demand in the last 12 months?
So it's not the last 12 months. It really has been a sustained issue across the space. So not just for us, but for really all of the companies that are trying to serve infrastructure to AI models that are being used by enterprise, that are being used by governments, that are being used by retail. It's really been a relentless and voracious requirement to continue to build infrastructure as fast as you can.
What are the big constraints at the moment?
So the constraints are really around our ability to bring up powered shells fast enough to be able to manage this incredible spike in demand. Over time, as the markets do what markets do, which will be to address the infrastructure issues, the constraint will move to power. The constraint will be from fabs and their ability to generate more chips and memory, and so it moves around. But right now, the single most difficult issue is really to focus on the powered shells.
There's some skepticism around the industry, just at large, but in particular around your company. There was a recent lawsuit having to do with overrepresenting capacity on the part of CoreWeave ahead of the IPO last year. What's your response to that type of skepticism and that claim in particular?
The company will vigorously fight that claim. We believe that it's baseless, and there's an enormous amount of information out there about the company, about demand, and about our ability to build it and when we're going to build it. And so, these things happen, but we're not terribly concerned about that.
Your IPO is in March. Your shares are up 130%. It's not a terrible performance, I will say. There is a question about whether there are constraints building in financing markets. When you had that $2 billion debt sale, there was a sell-off in shares, a question around how well you could finance this in an efficient way. How are you dealing with that? Does it challenge your ability to use the debt markets going forward?
So there was a brief sell-off, which actually recovered through the rest of the day. So, I think that there is a significant amount of appetite in the markets for products that can be underwritten, where the offtakes are from credit-worthy entities, where you have a company like CoreWeave that has built an incredible reputation around our software and about our ability to integrate, NVIDIA's GPUs, which are the best silicon solution in market, with the best software solution in market to deliver the best product in market. And, the capital markets have been very, very receptive to that and will continue to be receptive to that as long as the products are structured correctly and the counterparties are strong. We don't see any lack of demand for in the capital markets to build the infrastructure we need.
We've been talking all morning. There's really this push-pull at Davos when it comes to the politics and geopolitics and AI. And the president's going to talk about affordability, and you recently had governors from blue states and red states at the White House basically telling tech companies they need to subsidize American consumers. When you see these hyperscalers, how do they make sure that they are maintaining the grid, not just for themselves, but keeping prices lower for Americans.
Yeah, so look, the politicians, they're balancing many priorities as they're thinking about artificial intelligence, as they're thinking about affordability, as they're thinking about geopolitics. All of those things are coming to bear on how they think about and how they frame this discussion. Around the affordability component in particular, we believe, and we have aggressively taken the position that it is important that companies that are building AI pay their fair share of the requirements to deliver power to these data centers. It's going to be important in the short term, and it's going to be important in the long term as artificial intelligence continues to permeate the economy. And there's a great opportunity for us to really kind of build out a system to be able to ensure that we're playing that role as we continue to scale this business, which is so important for so many different aspects of society.
Just quickly, and I understand it's a complex question, so forgive me for the time constraints, but how do we value the lifespan of a GPU? It feels like that's like the key question right now in financial markets, and you're at the heart of it.
Yeah, so look, I'm pretty aggressive about this, right? Like the way that I conceptualize how to value the depreciation curve or the obsolescence curve of technology is a function of our clients and what they are willing to pay for. There is no argument that will get me to concede that a GPU becomes obsolete when I have clients who are the smartest, most experienced users of this compute that come in and buy compute from us for 6 years. They know new technology is coming. So the idea that this technology becomes obsolete or useless after 3 years or 2 years, it's bunk. It's a narrative that's been put out there by people who are trying to influence the discussion around the stock. But the truth of the matter is, if Microsoft and Meta and NVIDIA are buying compute for long-term contracts, they know new technology is coming, and they're going to buy it anyway because they know it's got value.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, and cilantros, chili, garlic, and olive oils. It's a lot of good seafood, complete a different way. Example, they have the fresh fish, but Japan, the fresh fish uses sashimi. But Peru use fresh fish, make the called ceviche, cooked with the lemon juice. Never use the soy sauce. First time I eat this, kind of wow. So then after this one, my open eye more, my cooking style that change. Combine to Japanese style and another country food, then make novel style.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in Davos, Switzerland, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
At the heart of the price action in the last 24 hours, a dispute over Greenland and tension rising between Europe and America. The French President Emmanuel Macron addressing the World Economic Forum on this very relationship. The headlines just crossing moments ago.
Yeah, absolutely. He's talking about the fact that Europe must defend multilateralism. What you hear Emmanuel Macron talk about is plenty using one of their most volatile things that they can go into their toolbox, which is this anti-coercion rule, which means more tariffs, maybe going after tech companies. This has struck a nerve in Europe. What I get from European officials is they feel existential here at Davos. Americans are kind of shrugging it. The Treasury Secretary this morning said, sit back, take a breath, which just like April 2nd when it comes to the hysteria, it feels like the Americans are looking for a deal and they're ready to negotiate right here.
Understandably, it's emotional on the European side, and we'll see if those emotions settle down when the President addresses this forum tomorrow afternoon. Emotional in the markets as well. Things are recovering just slightly. Equity futures down hard throughout this morning, recovering just a little bit and off session lows. The S&P 500 was down by close to 2%. You can see the recovery so far this morning in the bond market as well. Yields were much higher than where they are at the moment. 10-year bond yields getting close to 4.30, just backing away at 4.27. Let's get you some morning movers with 60 minutes until the opening bell. Here's Danny Berger with more. Hey, Danny.
John, let's start with one of the positive stories this morning because a lot is down, and that is an acquisition by the UK drug company GSK. They are buying the pharma company Rap Therapeutics. They make immunology and anti-inflammatory disease treatments. Those shares up 63%. The premium that they're paying is about 65%, so we're almost there. It is a $2.2 billion deal. I also want to show you one area of this market that does seem to be leading some of the losses. As you pointed out, John, they have eased, but we still are looking at Western Digital, SanDisk down at least 1.4%. Micron's down just a third of 1%, but it is these memory chip stocks that have been the high flyers thus far in 2026 that have been hurt in the broader and especially tech-focused sell-off of this morning. Finally, we've been getting a couple regional bank earnings coming through. For the most part, the reaction to them has just been negative. The bar has been high. They've been rallying this year. KeyCorp, they're faring the worst so far this morning, down 2.2%, even though they beat across most of their metrics, saying they're going to return shareholder capital. U.S. Bancorp, that's up 1.25%. They're working through their acquisition of BTIG. And Fifth Third, they're working through their acquisition of Comerica. So that has been the theme for the U.S. regional bank earnings, is that they are getting bigger. John.
Danny, thank you. Looking forward to the coverage around the opening bell. More from Danny a little bit later this morning. Let's turn to energy. Investments in data center construction is expected to jump again this year, adding pressure to already soaring costs for households. A man who knows a lot about this is Chris Womack, the CEO of Southern Company, and Chris joins us now for more. Chris, good day to you. It's good to see you.
Good to be with you guys.
Can you help us visualize electricity demand over the last decade or so, and just describe how much things have changed in the past few years alone?
No, it's been pretty incredible. And at Southern Company, we've seen, say, over the past 3 or 4 years, I mean, demand being pretty flat. But of late, I mean, we're seeing upwards of 8, 9, 10% growth as we look into the future. So we're seeing incredible growth, incredible demand, incredible opportunity to serve these data center customers, which is an incredible opportunity that we're really excited about.
It comes with risk as well for society. The president has talked about affordability issues. I believe you yourself, in the last 12 months, addressing a Bloomberg event, talked about the prospect of a revolution if we don't do do something about this. Are we doing enough?
I think we are. I mean, I think there's a model about how to do this. I mean, and what I see working with data center customers in terms of them being willing to cover their cost. I mean, to pay their share. And when we do that, that provides us the opportunity to benefit all existing customers. So the model is there. I mean, what we see in the Southern Company territory is the ability to price it right for those data center customers and then provide incredible benefits to the rest of our customers as we have this growth and thus provide rate stability. So we figured out how to do this across our territory. We know there's more communications to be done to explain that, but we see an incredible opportunity with this growth.
On Friday, President Trump announced that he was going to be selling energy directly to some of these technology companies, having an auction specifically for them. Do you think this is a good idea?
I mean, I think in certain places like the PJM Regional Transmission Organization, this makes sense because, I mean, they're having incredible price pressures as capacity is taken out of the market. It's really providing some constraints. What's happening there is not happening everywhere. Like I talk about the vertical integrated market that we have in the Southern Company territory. I mean, we own generation and we provide services all the way through distribution directly to customers, and so we're seeing more stability there. But I think in that PJM marketplace, this will make sense, and it's probably a good idea to help.
What's the right balance right now between allowing prices to be set by the market and preventing, as you were talking about, a revolution, right? I mean, at what point do you need extra capital to come in, extra support, in order to meet the demand that seems to be never ending at this point?
But I think the key in what we're finding out is the price we come to agreement with these data center customers. With this growth, and if you price it right, you price it properly, you have the opportunity to provide benefits to existing customers into those communities. If you get that right, growth can provide great balance, great benefits, and great price stability to all existing customers. So there's a model to do this, and that's what we're seeing that's working across our territory in Southern Company.
Chris, do we have enough energy, given the fact that actually this administration has made it clear they like some energy over others?
I think it's going to be incredible to really invest in all the above. I do think we have enough. Clearly, there's more growth we have to make. I mean, we're looking at building some gigawatts of power in our territory by the end of the decade. So there's a need to build more. But I think you have to make sure you get in the right markets, in the right structure that provides you the incentives to build. And then once again, making sure that we price it right, that the model is right, so that all customers benefit from this incredible opportunity that we're facing.
But when you say incentives,
गाइस, ये नेचुरल गैस को ध्यान में रखना है. अपर सर्किट लगा था थोड़ी देर पहले, अपर सर्किट ओपन हुआ, उसके बाद फिर से ऊपर ही जा रहा है. ये कैंडल ओपन इक्वल टू लो है, एंट्री पॉइंट के अराउंड ही है. वैसे तो रेजिस्टेंस को हिट कर चुका है. एंट्री करने से पहले ओपन इक्वल टू लो पे एंट्री मत करना इस 15 मिनट कैंडल पे. कैंडल ध्यान रखियो, रुक ही नहीं रहा प्राइस बिल्कुल भी. कल से 2 रेजिस्टेंस तो ब्रेक कर चुके हैं. थर्ड रेजिस्टेंस है 15 मिनट का मेजर. गैप अप ओपन हुआ था, वहां पर एक रेजिस्टेंस था, वो रेजिस्टेंस के ऊपर ओपन हुआ, वहां एक ब्रेकआउट हुआ. उसके बाद कल एक और रेजिस्टेंस था, वो ही ब्रेकआउट हो गया 320 वाला. दिस इज थर्ड रेजिस्टेंस 360-65 के अराउंड. नीचे आना है उसके लिए भी 350 के नीचे क्लोजिंग चाहिए, अदरवाइज नीचे भी नहीं आएगा ज़्यादा. इस लेवल पे एक अपर सर्किट लगा था, अगेन ओपन हुआ, फिर से बुलिश हो गया. देयर इज नो सेल ऑफ एक्चुअली इन नेचुरल गैस. सेल मत करना, कैंडल क्लोजर का वेट करना. ओपन इक्वल टू लो है तो रुका ही नहीं, प्राइस और ऊपर चला गया. के ऊपर क्लोज नहीं होनी चाहिए एग्जैक्टली. पर फिर सीधा नेक्स्ट रेजिस्टेंस सीधा 380 378 टू 380 के अराउंड ही मिलेगा. fourth resistance continuously in 15 minute. भी नहीं आ रहा है एंट्री करें बाइंग के लिए. क्लोज नहीं होना चाहिए. अभी तो 3 मिनट है, देखते हैं क्लोजिंग आती नहीं आती. 362 के ऊपर क्लोजिंग नहीं आनी चाहिए. 362 के ऊपर अगर इसकी क्लोजिंग आई तो फिर नहीं, यहाँ पर भी एंट्री नहीं करेंगे. एक तो कैंडल ओपन इक्वल टू लो है और लेवल के ऊपर क्लोज कर रहा है, तो नॉट इंटरेस्टेड. हो सकता है प्राइस फिर और जाता ही रहे कंटिन्यूस में टिल 380 तक. थ्री सिक्सटी टू के ऊपर क्लोज होता है और उसके ऊपर एक और कैंडल क्लोज हो जाती है, ये सेम लेवल सपोर्ट बन जाएगा एक्चुअली में. नीचे भी हैं बहुत सारे सपोर्ट, बट पुल बैक ही नहीं आ रहा है. This is the next resistance. पे सीधा अब यूएस मार्केट ही ओपन होगा, ध्यान रखना। 8 PM यूएस मार्केट विल ओपन। बाकी नेचुरल गैस में देखो, इसका नेक्स्ट रेजिस्टेंस अब सीधा फिर 380 पर है। यहाँ पर भी मैं ज़्यादा अब सेलिंग एक्सपेक्ट नहीं कर रहा हूँ, ये है बुलिश ही। अब कहाँ तक आ सकती है सेलिंग, अब इसमें भी देखोगे। जितना टारगेट रखा है मुझे तो नहीं लग रहा वहाँ तक जाने वाला। ये मैक्स टू मैक्स 350 तक ही लग रहा है, अगर पुल बैक आता भी है तो वहाँ से वापस बाइंग आ जाएगी मोस्टली। फिर हो सकता है थोड़ी बहुत फाइट चले और फिर नेक्स्ट रेजिस्टेंस की ओर। क्वांटिटी कम ही रख के ट्रेड करना सेलिंग में तो यार। नेचुरल गैस ऐसा लग रहा है सेलर्स हैं ही नहीं मार्केट में। यूएस नेचुरल गैस और एक्सट्रीम वेदर सो अप, एक्सट्रीम वेदर सो अप, इतना एक्सट्रीम वेदर है। इस नेचुरल गैस रेजिस्टेंस पे सेलिंग नहीं आ रही लेकिन। वाह, उतना ही एक्सपेक्ट कर रहा हूँ सेलिंग इसमें, बस 350 के अराउंड, इससे ज़्यादा मैं एक्सपेक्ट नहीं कर रहा हूँ। कैंडल क्लोज हो गई तो बात अलग है, अदरवाइज इन माय व्यू ये थोड़ा सा नीचे आएगा, यहाँ से फिर ये फाइट हो सकती है थोड़ी बहुत यहाँ पर। जो भी जीतेगा बायर या सेलर, देन इट माइट मूव अपसाइड अगर सेलर निकलते हैं नेक्स्ट रेजिस्टेंस। हाँ अगर ये नीचे कहीं क्लोजिंग बेसिस पे चला गया है तब थोड़ा सा बड़ा टारगेट फिर एक्सपेक्ट कर सकते हैं, अदरवाइज दिस इज द रेंज एक्सपेक्टिंग। जिस तरह से बुलिस बना हुआ है बाकी ओवरऑल बुलिस ही है। यहाँ से बाइंग वापस आ सकती है, ध्यान रखना क्रूड में, नेचुरल गैस में, इस एरिया से 350 351 के अराउंड। क्लोज हो जाए अगर एक के नीचे एक 350 के नीचे, तब थोड़ा सा बड़ा फॉल हो सकता है, नहीं तो मोस्टली इसी रेंज में रहना चाहिए अब। ठीक है, यहाँ पर हल्का सा अगर नीचे आता है नेचुरल गैस में वापस बाइंग का ही प्लान करते हैं अगर आता है तो. It is bullish completely. साइडवेज लग रहा है अब नेचुरल गैस बिकॉज ऊपर ये रेजिस्टेंस है यहाँ पर अभी ब्रेक नहीं हुआ. नीचे भी और मुझे लग रहा है जाएगा नहीं इतनी इजीली. सपोर्ट रेंज बना दी है नीचे भी. वेरी हाई चांसेस कि यहाँ पर होल्ड करना चाहिए अनटिल अनलेस प्रॉपरली ब्रेक डाउन नहीं कर देता. तो अब यहाँ पर थोड़ा सा पॉज हो सकता है नेचुरल गैस. सपोर्ट और रेजिस्टेंस साथ साथ ही है ऑलमोस्ट. ठीक है, सेलिंग भी मैं बड़ी एक्सपेक्ट नहीं कर रहा हूँ, बाइंग भी नहीं कर रहा हूँ जब तक ऊपर ब्रेकआउट नहीं होता. एक साइड के एसएल तो जाएंगे जरूर अब. या तो यहाँ कहीं निकल जाए प्राइस क्लोजिंग बेसिस पे, या फिर इस लेवल के नीचे कहीं क्लोजिंग बेसिस पे निकले. तब हो सकता है थोड़ा सा कंटिन्यूएशन में किसी एक डायरेक्शन पे जाए.
Market reaction that has continued to be part of the backdrop. As we sit here today and geopolitics are writ large, what we are really feeling is more of a sense of risk off. What we saw at Liberation Day was that even quality assets, the historically risk averse investors, even those sold off. We're starting to see a little bit of that again. And I think the reason is the sentiment, as expressed by the Danish pension plan, is being felt more broadly. Where do you invest when there's such uncertainty? And so that sentiment is really pervading the markets. It hasn't really settled into the markets because I think there's really a sense that perhaps this will all settle down and the markets will go back to pricing in market referencing information, interest rates, fundamentals, earnings, and the geopolitics will sort of fade into the background.
Is this a new dynamic, though? And we've been talking ad nauseum about the death of the 60-40 and how bonds don't offer the same type of counterbalance to stocks, but it feels like something else is afoot with more populist policies, what's happening in Japan. Are you shifting away from some of the developed market sovereign debt just more generally as a result of some of these trends?
Well, I hate to say it, but the word for the day is diversification. And in all truth, that's been something that's been a theme for us that started in 2025 as we are looking for good places to deploy capital. And that means to be thoughtful with regard to risk management and to be really thoughtful with regard to selection of securities. So this is an active managers universe in which active managers, particularly in fixed income, which is our primary space, this is where there's going to be a tremendous differentiation as we start to see more and more or experience more and more of this kind of uncertainty. And so being thoughtful with regard to risk management and being careful with deployment of capital across any number of different sectors is, I think, is going to be benefiting investors.
If you are worried about risk management and you take a look at the policy uncertainty in the United States, does that make you sort of de facto look elsewhere as part of that diversification?
Well, again, I think that the credit fundamentals are pretty good in the U.S. Right now, we have the One Big Beautiful Bill, which will be benefiting the economy in the first half of 2026. We have, believe it or not, a Fed that's relatively thoughtful and, dare I say, more on the easing side relative to history. And we think there's probably a couple more cuts to come in Fed funds, likely later in the year, but that we're still seeing disinflation, although at a slowing pace. And so as a result, I think the fundamentals, or at least for the first half of 2026 in the U.S., are still supportive of credit and equities, but not without volatility and noise caused by headlines like what we're living through right now.
You know, it just feels like there's a bipolar universe here. On one hand, you've got the political uncertainty, you've got concern, you've got the sense of unease that you've got coming out of the rhetoric that we're hearing from national leaders. And then you have companies coming out, going gangbusters, deals galore, looking at growth everywhere, accelerating around the world. At what point do these two stories start to come together a little bit more?
Well, when you're late cycle, as we are, and as a result, we've seen several years of outstanding returns in the U.S. equities markets. We've seen a rather, I'll call it, benign fixed income market with the 10-year trading in a trading range. And even though we're seeing a little sell-off in the 10-year right now, we're still within that trading range, mid-3s to mid-4s. And so as a result, that's not a bad backdrop for corporate America. But when you get late cycle, nervousness starts to
How much do you see outsized elsewhere? Do you see it shaping up to be very similar in 2026?
So in 2025, it was the first year of the Trump administration, and I think the markets and the economy were being impacted by what I would call the Trump administration predominantly domestic policies. The rollout of tax, the bill, immigration, tariffs, which this also touches on international, and deregulation. Here we enter the second year of the Trump administration, and I think we're broadening out to include geopolitics as we start to see the Trump administration move their viewpoint more broadly. And that is unsettling for global trading partners, and it's also unsettling. It creates unsettlement for the global markets. As a result, this sort of realignment, if you will, geopolitically, is going to continue in the year. So I think the focus sort of shifts, and so as a result, I don't think it's a replay of 2025. But again, starting out, fundamentals look supportive of a reasonable market year, although with volatility, which we saw in 2025. I mean, Liberation Day came out of the woods for a lot of investors too, and so I continue to see and expect the unexpected.
Gold has gained some 9% so far this year, just in the first 3 trading weeks of 2026. It's just been a phenomenal run. Is that the ongoing diversifier of last resort that you can keep on counting on?
As we saw sovereign investors move away from U.S. Treasuries, they put their money someplace else. A lot of that in 2025 was in precious metals, in particular gold. That will continue as again, going back to the Danish pension plan, where investors are looking for alternative places to recycle dollars, and they're going to be trying to find stability. And gold has been a tremendous performer and should expect to benefit from this level of uncertainty that's in the marketplace.
How much have you increased your allocation to gold?
We didn't increase it. We put it on in 2024, and we've kept our position for the holding, and we've obviously seen the benefits of that. Silver.
What's your biggest contrarian bet heading into the remainder of 2026?
Wow, that's a good question with regard to contrarian bets. One of the challenges that I have as an investor is risk mitigation, and so I think there's a lot that could happen in the back half of 2027, and tail risk is high. So I can't say I have a contrarian positive bet, although we're going to keep our silver trade on. But at the same time, I'm just going to protect the portfolios against adversity.
Are you more worried about that adversity coming in the form of some sort of economic slowdown or some sort of inflationary surge? So the tailwinds that we've got right now are so strong for the first half of 2026. There's a risk that those evaporate in the second half. But having said that, this is an election year in the U.S. for midterms, and politicians do happen to like to be reelected, and so their interest in keeping some sort of stimulus behavior going is going to be strong and pervasive. And so I anticipate that we probably will see an extension of those tailwinds into the second half. But having said that as well, I would be wary, again, tail risks. Our expectation is that we don't see a recession. It's not in our outlook. It's not in our base case. And a lot would have to happen to see that. But a market sentiment-driven sell-off is quite possible, in which case, historically, since the financial crisis, those big sell-offs don't last long, and the reacceleration, or if you will, the buy-the-dip mentality, emerges very rapidly. So waiting for the dip to buy, that seems to be the trend. Ann Walsh, thank you so much for being with us today. Ann Walsh of Guggenheim Partners. And I'm going to send it back to you, Danny and Matt in New York.
All right, Lisa, thanks very much. Lisa Abramowitz there, and we thank Ann Walsh of Guggenheim for her time. Let's bring back in Evercore ISI Chief Equity Strategist Julian Emanuel. Julian just came out with a list of market surprises, potential market surprises for 2026. And what I love about this list, Julian, is that not only do you highlight what could surprise, but also how to play it. And, of course, we protect the copyright of our guests, so go ahead and look at Evercore ISI website for that. But or subscribe to Julian's research. What would you say has changed over this weekend? I mean, if you were going to write this list again this morning, would it be different than on Friday?
Well, we would have probably bumped up the potential for the U.S. taking control of Greenland from number 7 a little higher in the pecking order, although the prediction markets are only incrementally assigning a higher probability. And, of course, our trade there is to own Euro Stoxx 600 puts, which certainly have done their share of the heavy lifting these last 2 sessions. And then the other one, I think, and this complicates what's going on in Greenland a bit more, is our view that there's a potential for the U.S. 10-year yield to trade above 5% in 2026. Now, 2 things. Obviously, the surge in yields in Japan is difficult for our markets to digest. It plays into this more cautionary narrative around asset volatility with regard to Greenland. But again, it just points out the fact, as it was last year, that part of the underlying strength of the U.S. market is our ability to keep interest rates in check.
So does that mean that the sell-off that we've seen in Japan, how are you weighing it in terms of what has been the driver of the market for today and what that means for the driver of a market going forward? On a down day like this, is it more important to have the geopolitical concerns that maybe Europe is going to be hit with more tariffs, or to have Japanese bond yields hit the highest on record?
Well, on a down day like this, you would prefer to see fixed income acting as a shock absorber, not a shock accelerator. But obviously, again, Japan changed that narrative. It's going to be, in our mind, if we get to that 4.5% level, where, if you think about what happened last year, that was the type of level where the Trump administration started rethinking its approach to tariffs. Do you get that kind of rethink with regard to what's going on in Greenland? You know, today, Trump appears to still be in sort of acceleration mode on the subject, but, you know, things are moving very quickly.
I want to focus in on the U.S. debt market, because Ann Walsh said this fundamentals are strong, and it's almost like a throwaway comment that a Treasury Secretary would make about dollar strength. I mean, are they really strong? Are they stronger than they were a month ago or a year ago, as we have debt to GDP ratios of, 100% plus, 6 to 7% deficit spending outside of a recession, and that with 4 to 5% interest rates? I mean, it doesn't seem that strong.
And the sum total of what you've just said from time to time has certainly been something that's roiled markets. And again, and I go back to the establishment of the Peterson Institute, I think 40 years ago, to deal with the concept of the debt problem. And here we are 40 years later. It's a much larger problem, but again, it's going to not be a problem until it is. From our point of view, creating incrementally more geopolitical instability creates a greater chance that will be a problem, but we do not see that as a discrete problem in the medium term.
Is it an issue, though, that we came into this year with a lot of bullishness, a lot of confidence, whether it came to overall markets, animal spirits, deals are back on? We were talking about this in the break, that Bank of America's latest fund manager survey shows the lowest amount of hedges since 2018 for equities. Cash levels are at record lows. You were talking about this idea, you don't sell, you want to own options, but it's an issue that people aren't doing that they don't seem to be protecting themselves to the downside.
So our surveys team will poll clients, and the first week of the year, the question was, where's the next 10% in the S&P 500? 75% of the respondents said higher. When we've seen that kind of one-sided viewpoint over the course of last year, we've had pullbacks. So in that sense, it's absolutely not a surprise. And again, for us, it's just a question of, particularly at these valuations, because in the 4th year of a bull market, at these elevated valuations, let's call it imperfect news, which we're facing this morning, is going to cause more volatility.
Let's talk about AI for a moment, because you highlight that. Obviously, that's been the driver of these equity markets for a few years now. Is there a risk that the massive funding needs are difficult to meet, especially for a company like OpenAI, which wants to spend over $1 trillion and only has, I don't know, 20 billion in revenue? How do you square that circle?
So we look at the universe in general, and the spending, for the most part, from the hyperscalers is very, very sustainable as regards to the free cash flow. Obviously, at the private level, those numbers are a little murkier, but the deal pipeline continues to suggest that it is not an issue, and I think essentially what it comes down to is how do markets digest news, and I think to the point, earnings season share price reactions, particularly from the hyperscalers, are going to be very, very important. And from our point of view, the mood has soured in technology and AI over the last 6 weeks enough such that the bar is set actually lower for tech companies than it is for the rest of the market.
But is this debt issue a lot like the Treasury debt issue where it doesn't matter until it does? Is it that binary when all of a sudden someone says, oh, this matters? Can we see a total lack of confidence?
Well, look, something like that is possible. But again, go back to December, the company that has clearly taken on, very large levels of debt to finance its plans, it was idiosyncratic. That company's credit default swaps surged higher, but the rest of the credit space and the hyperscalers were largely unaffected. And when you look at the NASDAQ 100, the net result, as we've seen on several occasions during this bull market, is just a sideways churn. And we think that's where we are. Ultimately, we do think all of that's going to resolve higher.
But this gets back to something you put in your list of surprises. And I love how you started this saying, have we as investors lost the capacity to be surprised? It does kind of feel like that, Julian, that you get these momentary bouts of concern about momentary bouts about geopolitics or tariffs, but we end up buying the dip and we end up higher. Have we lost the capacity to be surprised? Do we just now have this Pavlovian urge to buy the dip and nothing matters?
Well, that's why this morning is such a stark reminder, okay? The over-enthusiasm was exactly that, over-enthusiasm. But when you think about the fundamentals of a year where earnings are likely to grow at least high single digits, if not low double digits, where you're going to have lots of stimulus in front of midterm elections, and you're going to have an economy, we just raised our GDP forecast to 2.5%, and even then, the risks potentially tilt to the upside. All of that suggests that things are going to continue moving to the upper right, but this is just a reminder that it doesn't happen in a straight line.
But do you worry that it's a fragile house of cards? I mean, as long as everyone's on board, right, there's no bears, as long as everyone from Ann Walsh to Ed Hyman says it's okay until it's not, like we're going to buy the dip.
Well, and again, days like today don't concern us discreetly. This is a logical reaction to, an unprecedented change in geopolitical configuration. Prospectively, it would be more concerning if the market just laughed this off. Then you would get to, ultimate FOMO, really over-enthusiasm.
Still not a lot of change, Julian. You have the President of the United States essentially threatening military action against NATO to annex a territory, and yields don't move. I mean, more than 5 basis points.
Well, but again, you also have to remember that the interest rate markets has been very, very calm.
Yeah.
There too again, and obviously creeping up in the last week or two, there too again, you're likely to have further upside. Probably episodically, we need to see the next round of data accompanying whatever the ructions are coming from Japan, coming from Davos.
This feels like an awkward question to ask on a very down day when things like small caps are down especially hard. But if this is a year that's going to be led by earnings, that's going to be led by stimulus, is it also a year where leadership broadens out?
So you've seen that these first couple weeks. Right. And our problem with where the market is right now is we believe this can be an everything works year. But if you do the math, everything still needs to be led by technology, AI, et cetera, whether it's the weight of the top 10 at 40% of the index or the weight of the hyperscaler slanted sectors at 55%. But again, like we saw at the end of the internet bull market the last year or so, you had an everything rise. The problem is now is that the first reaction in areas like small caps and cyclicals, where we've seen a lot of buying these first several weeks, is that this narrative of what's going on geopolitically is a bigger threat to the growth trajectory and the pricing in of greater growth than it is in terms of a technological headwind.
By the way, I just want to bring it back quickly to WSL Predict. This is the function on the Bloomberg that I've been looking at so much recently. Rick Reeder's chances of becoming the Fed chair now in the betting markets up to 20% over the weekend from like 5%. Does it matter? Does the Fed matter that much to your outlook for this year, or would it be fine if it just stayed on hold?
A fellow Emory Business School graduate? Great for Rick. Look, this is just another one of these things where the saga is ongoing. We're going to get a name at some point. And, you know, I think the market would be reasonably comfortable with whoever's going to end up crossing the finish line.
Julian, great to spend some time with you this morning. Really appreciate you joining us. Julian Emanuel there from Evercore ISI. Less than 4 minutes until the opening bell as futures are lower. This is...
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? On this episode.
There's a need to update our regulation on the gambling industry. The current situation cannot stay as it is for long. It's unsustainable for the industry as a whole.
Premieres January 23rd, only on Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We're looking at futures that are sharply lower. S&P futures off 1.5%. NASDAQ futures falling a little bit more. Russell 2000 futures off almost 2% this morning on concern about both the comments President Trump has made in regards to Greenland and what he would do to European allies if they don't essentially give it to us, as well as the huge spike that we saw in Japanese yields on concerns about the tax plan and elections being called there. A foundation ringing the bell at the New York Stock Exchange. Of course, yesterday was Martin Luther King's birthday. Martin Luther King would have been 97 this year's birthday on January 15th. It's, to me, shocking that he still would be so young, but he was taken from us at less than 40. He was only 39 years old when he was assassinated in 1968. Down at the NASDAQ market site, you've got Oxford Lane Capital ringing the opening bell there, and not much to say about them compared to Martin Luther King Jr.,
correct.
right?
Anything pales in comparison.
There's no day, there's no holiday for Oxford Lane Capital.
No, and I think that's
someday.
probably rightly so, at least for now. Matt, I'm looking at the sell-off because it is a big market sell-off this morning. Painful, especially if you consider, as we were talking about with Julian, that this market is not hedged. Bank of America's latest survey showed the least amount of equity correlation hedges since 2018. Nvidia, Tesla, Amazon, all of the Mag 7 down hard, down about 2.9 for Tesla, but at least more than 2.5% across the board, Matt.
Yeah, we had some regional bank earnings this morning. Key banks' forecasts underwhelmed, as we've been telling you. U.S. Bancorp's outlook topped estimates, and it was up in the pre-market, down in the cash trade. Fifth Third came in line with expectations. And those shares, although very little changed, bouncing back and forth between gains and losses. Let's get back to Davos, Switzerland, where UK Chancellor Rachel Reeves is at the Bloomberg House with Francine Lacroix. Francine?
Because at the moment there's, wild speculation about whether everything needs negotiating, whether, President Trump goes really hard. I mean, how do you model this?
I would just urge people to keep cool heads.
Cool. Okay.
I mean, that's what we did all through last year, and it actually served us pretty well. And whilst trade barriers are going up around the world at the moment, we can all see that. In the last year, barriers to trade with the UK have fallen. We've secured a comprehensive trade deal with India, which will come into force in the next few months. Just taking legislation through both of our parliaments to secure that. That includes trade in services, support for exports, and also around government procurement. That's a huge deal. The deal with Korea, one of the fastest growing economies as well in the G20, is very important for the UK. But most important probably is the trade with our nearest neighbours and trading partners in the EU, which was damaged after leaving the EU, voting to leave the EU in 2016. We are now fixing that mess by improving trade relations and cooperation with our closest allies and neighbours.
And I want to get back to the EU in a second. Governor Bailey, though, said that he worries about also President Trump's attacks on the Fed, and that could create shockwaves for the UK. Do you agree with that?
I think that people recognise that certainly with this government and with me as Chancellor, there's huge respect for independent economic institutions, whether that is the Bank of England or the Office of Budget Responsibility. One of the reasons why the UK has been, has had challenging economic times the last 2 years is because the previous Conservative government, particularly under Liz Truss, both played fast and loose with the public finances, but also undermined the economic institutions that make Britain, have made Britain, a safe and secure place to invest. We're undoing that damage, working closely with the independent economic institutions, but respecting their independence. And that collaboration and fiscal policy supporting monetary policy has enabled those 6 cuts in interest rates, taking rates down to 3.75%. It's the fastest speed of rate reduction in the UK in 17 years, and that's only possible because of the stability that we've returned to the economy and the decisions we've made on fiscal consolidation. And the IMF say that amongst developed economies, we have got the fastest pace of fiscal consolidation over the next few years. And that gives investors confidence around the stability stability in the UK, our grip on the public finances and our grip on inflation.
So there's no worry about central bank independence that could also impact or inspire maybe some of the opposition in the UK were they to come to power?
Well, look, we won a massive majority just a year and a half ago. We have 3.5 years remaining of in our term in office, and I'm confident that our economic plan to grow the economy with the stability return to the economy, bringing investment in, global investment, as well as unlocking domestic investment, is the right plan. And in the next few months, as inflation returns to target, with lower interest rates, which are benefiting both households and businesses, that we will see the fruits of that in growth and higher living standards.
Chancellor, I don't know whether you're meeting with Scott Bessent, the Treasury Secretary, here, or if you bump into him on promenade.
Well, I was with Scott last week in Washington. I'm seeing Secretary Lutnick later today. Our Prime Minister spoke to President Trump just over the weekend. You know, as you would expect, there are very close relations between our country at all levels.
So here in Davos, you also have an announcement, which is basically helping out with visas. Tell us a little bit about that, and do you worry that it's going to be drowned in everything else that's going on? Just a little bit of news that we have out there.
So I believe in free and fair trade. I believe in the benefits to businesses and also consumers of open economies. Economies that are open to trade, open to investment and open to talent have always been the most successful economies. And I want Britain, even in a world where others are putting up barriers to trade and investment and talent, for Britain to be breaking down those barriers. And we are announcing today further changes in our global talent routes into the UK for 3 particular types of visa. The first is for foreign businesses looking to expand their footprint in the UK, working with them so that they can bring in talent as they expand their footprint. Second, for UK businesses in our industrial strategy sectors, which includes financial services, business services, creative industries, clean energy, advanced manufacturing, defence, etc. For those businesses, if they are bringing in talent from overseas into the UK, their visas will be the fees for those visas will be waived. And then the third announcement today is that for really great talent looking to come to UK universities, again we'll waive those visas, as well as a specific scheme for people, gold medalists in the Maths Olympiad, offering a number of scholarships to UK universities for those people, because we want Britain to be a magnet for global talent in the same way we want it to be the best place in the world to trade from and to invest in.
Chancellor, there's a growing clamour in labour circles, even from some of your own cabinets, for the UK to join a customs union with the EU. Is that on the cards?
No, it was very clear in our manifesto that we wouldn't be rejoining the single market, the customs union, or bringing back free movement of labour. But what we have done already is brought back the Erasmus scheme, which enables young people both from the UK to go and study at European universities, and young people from Europe to come and study at our brilliant universities in the UK. We also have agreements in principle from last May around the UK doing a food and farming deal to reduce barriers to trade at the border, around electricity trading and energy trading, as well as some form of youth mobility within the European Union and the United Kingdom. So we're making progress in all of that, looking to have another summit this year where we can mark ourselves on progress against those ambitions and set new ambitions, because that summit last year was just the start of improving relations between the UK and the EU. And I would just say that, you know, at these sort of times when others are putting up barriers to trade, what Britain is arguing for, and what I believe in strongly, is that those of us who believe in free and fair trade should practice what we preach and reduce barriers between ourselves. That goes to the UK, the EU, Canada, and other allies around the world. And we are determined to lead from the front in that. We've already secured trade deals with countries around the world. We want to do more in the months to come.
But Chancellor, I mean, mathematically, just, if you leave politics to one side, again, rejoining the customs union could be more beneficial. So do you see a future at any point where the UK goes back in?
We can't go back in time. And since we left the EU, we have done trade deals with India, with the US, with Korea. And obviously, you would lose some of the benefits of those trade deals if you were to re-enter a customs union. Things like the benefits of the deal we did with the US for our automotive sector. The deal that we have with India is better than the deal that any other country has with India. So I think you have to consider all of these things in the round. I don't think we need to return to the customs union to seize greater benefits of free and fair trade. And we are working piece by piece, but with a strategic goal in mind, which is to make it easier for British businesses to sell into European markets and for European businesses to sell into British markets. And when the barriers to trade in other markets are going up, we want to create more opportunities for our businesses to trade with other countries around the world.
There is, of course, big news about a new embassy, a Chinese embassy.
That was UK Chancellor Rachel Reeves speaking at Bloomberg House in Davos. You can continue to watch the conversation at LiveGo on your terminal. Yeah. Coming up on this show, Netflix makes another move in the fight for Warner Brothers. More on the streaming giant and their now cash deal. Coming up next, you're watching Bloomberg.
ओके गाइस, यूएस मार्केट इज ऑलरेडी ओपन. कैंडल ध्यान रखना, ओपन इक्वल टू हाई बनी है नेचुरल गैस में. सेलिंग का छोटा सा टारगेट था, वो तो अभी मिल जाएगा. ये बाइंग वाला ट्रेड है, डायरेक्ट एंट्री मत करना. ओपन इक्वल टू हाई में डायरेक्टली बाय नहीं करते हैं, ठीक है. डोंट बाय डायरेक्टली इन नेचुरल गैस, वेट फॉर द कैंडल. अगर ये कैंडल लेवल के नीचे क्लोज करती है तो फिर हम एंट्री नहीं करेंगे. इसको एटलीस्ट 351 के ऊपर क्लोज होना चाहिए, इसके नीचे नहीं जानी चाहिए. 351 के नीचे अगर एक क्लोजिंग बेसिस पे गई, क्लोज हो गई मतलब, तो फिर हम एंट्री करेंगे नहीं. बेस्ट था मार्केट क्लोजिंग दे ऊपर 356 के ऊपर, बट उतना ऊपर भी नहीं जाएगी मुझे नहीं लग रहा. बट या 351 के नीचे क्लोजिंग ना आए, 351 के नीचे क्लोजिंग आई तो फिर बाई मत करना, ठीक है. वेट करेंगे फिर, और अभी तो मत ही करना. कैंडल ओपन इक्वल टू हाई है डायरेक्टली. यहाँ पर रेजिस्टेंस था, सेलिंग आई, सपोर्ट था, फिर बाइंग आई, फिर सेलिंग आई है. नीचे एक और सपोर्ट है, यहाँ पर फाइट होनी चाहिए, देखते हैं. बाकी क्रूड ऑयल को देखोगे, फाइनली वापस ये भी निकला है. मैंने पहले ही बताया इसमें एसएल ब्रेकआउट या लेवल पे मत रखना. एक के ऊपर एक कैंडल क्लोज होती है तभी ब्रेकआउट कंसिडर करना. कैंडल एक तो क्लोज हो चुकी है ऑलरेडी 5495 के ऊपर. अगर ये कैंडल भी क्लोज होती है तो फिर ये ब्रेकआउट ही है. बेस्ट केस सिनेरियो क्लोज ना हो. क्लोज हुई तो फिर ये ऊपर नेक्स्ट रेजिस्टेंस ऊपर है हमारे पास, दैट इज स्टिल अ रेजिस्टेंस. यहाँ से वापस सेल करेंगे. थोड़ी बहुत ही बाइंग एक्सपेक्टेड है। याद रखना ये रेजिस्टेंस भी है, यहाँ पर अभी ब्रेक नहीं हुआ है। सेलिंग वाले निकल जाना, बाकी बाइंग में भी छोटा सा ही टारगेट है। मोस्टली मुझे लग रहा है ये होल्ड नहीं करना चाहिए, थोड़ा बहुत पुल बैक देगा, फिर या तो इसी रेंज में रहना चाहिए या फिर किसी एक साइड पे ब्रेक डाउन करना चाहिए। नीचे आता है तो फिर थोड़ा बड़ा फॉल हो सकता है, अदरवाइज इसी रेंज में रहना चाहिए। तो बाइंग में भी बड़ा टारगेट नहीं है, दिस इज स्टिल अ रेजिस्टेंस। पास में एक रेंज बना के बैठा हुआ है, इसलिए एक रेंज है अभी भी इसमें। क्रूड ऑयल में ऊपर चलेगी ये कैंडल, स्टिल ऊपर और रेजिस्टेंस इंटैक्ट ही है। ऊपर और जाएगा तो वापस एक सेलिंग ही करेंगे, बाइंग के लिए वापस नीचे आना चाहिए। बारह पॉइंट मिले, 5 पॉइंट चले भी गए तो
earnings today. Do you think that there will be a sense, maybe not urgency, but a sense from executives that they need to, or at least very much so desire to, expand their IP catalog?
Because they have had hit after hit, and that's going to likely solidify what is this quarter's earnings, where you're seeing almost 20% revenue growth, call about 18%, and that's because you've had the finale of Stranger Things. You've had people being interested, actually, in the sports side of the equation. Look, you've had Anthony Joshua versus the Paul brother, whichever one you want to pick. But that big fight, everyone wanted in on that. NFL over the Christmas. Maybe they do have to start to get into the live broadcast side of the equation if they're going to get more and more of us signing up. The revenues growth is still strong. US, Europe, Asia, APAC, and Latin America. But are they going to be able to continue getting us to switch across from cable and decide that we're all in on Netflix? To do that, maybe they have to up their sports catalog, but they have to up their catalog more broadly. And Warner Brothers Discovery would really help them do that. What they have, like 450 million people subscribing to the joint of the combined powerhouse that it would be. They do need to show that they're going to get almost double-digit growth revenue this quarter, this year. But what about next year? And people really want to see, look, you are going to be bringing in $50 billion in terms of revenue for the next fiscal year, and that's about 13% growth. It is slightly slower than this quarter and this year just gone.
All right, Caroline, we look forward to your program. Bloomberg Tech kicks off at 11. Caroline Hyde there with Ed Ludlow will take you through that hour. And, of course, there'll be a lot of focus on Netflix, this deal for Warner Brothers, and I hope a little bit of K-pop demon hunters as well. Coming up, President Trump threatens legal action against J.P. Morgan. We look at the battle between Washington and Wall Street next. This is Bloomberg Open Interest.
bringing you up to the minute news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Watch Horizon's Middle East and Africa every trading day at 9 a.m. in Dubai and 5 a.m. in London. Only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
The question is, what you don't want to do is, squeeze out or drain credit from exactly that section of the population that needs it most. So, once again, this will land somewhere, and there'll be an element of adjustment and compromise. We are in constant communication with various policymakers and the like. And the industry too, because it's not just Citi, it is the old street that is, and once again, I think affordability thing is something that has to be dealt with, and we will land somewhere.
That was Citi's global banking head speaking to Bloomberg in Davos House. His comments come as the White House weighs an executive action to enact a cap on credit card interest rates. For more, Herman Chan, senior U.S. bank analyst for Bloomberg Intelligence, joins us. Herman, not only are they weighing it, today was supposed to be this deadline.
It is this deadline, right?
Okay, well, yeah, but is it a legal deadline? That's a little bit more squishy, but it's the Trump-imposed deadline. Have we had any movement at all from banks for them to offer a credit card that caps rates at 10%?
It is a Trump-imposed deadline. We're not sure if that's really a legal deadline, but at this point, it's just status quo for the banks. They're operating like in normal conditions where credit cards are their credit cards. They're not offering a 10% blanket rate, and they're just operating as is.
They are being sued, though, some of them, JP Morgan.
Mm-hmm.
So what do we know about this lawsuit?
Right. I characterize that as heavy as the head that wears the crown, right? JP Morgan's the biggest bank in the United States, most profitable, really strong returns, really strong valuation, and a lot of that really reflects reputation risk during the prior Biden administration, where it was really embedded into the supervisory actions of bank regulators. So banks had to be a bit more cautious with what happened after the Capitol riots. So I think that's just reflective of how banks had to operate back then, and really now we're seeing the repercussions of that under Trump.
It's also interesting for a sector that is supposed to be benefiting from this White House and from deregulation. On that note, you had some of the regional bank earnings today, and it struck me that 2 of the 3 that reported are undergoing their own M&A.
Right.
Fifth Third with Comerica, and then you also have U.S. Bank Corp with BTIG. Is this just easily the theme? Does that kind of overshadow their individual reports, the fact that the regional banks are becoming more like super regional banks?
Yes, so that's happening, and that's actually one of the positives under the Trump administration, where There's much less red tape for M&A, and that's really struck a chord for the large regionals where they're doing more bank M&A deals. We'd expect that to continue, especially with some of these better valued banks. We're potentially seeing some more activity by the likes of PNC and M&T, and some of these deals that have been announced, they'll be digested and really strengthen the earnings power of U.S. banking.
How much does that M&A continue, Herman? Because I remember when we were talking to you every day about SVB, a lot of people were shocked to hear that there were like 5,000 banks in the U.S. It's an incredibly fragmented market once you get past the top 6 or the top 60. Do you expect that number to shrink?
Yeah.
Are we going to see 4,000? Are we going to see 3,000?
We're a little over 4,000 now. We'll see that shrink over time, and that's just ongoing to continue because there's not a lot of new banks that are opening up. There's not a lot of de novo action, but there is going to be more consolidation because banking industry is super fragmented, and there's a need for economies of scale given the fact that banks are investing in compliance, technology, etc. So
and less regulation, right? So I'm just wondering, does this administration supercharge that natural process?
Yeah, it's happening now. So bank deals are getting approved by less than 100 days now. So, and that was something that was unheard of under the Biden administration, where it took upwards of a year or above to do deals. So you're seeing more M&A activity, and that'll continue throughout this term.
All right, Herman, thanks very much. Herman Chan there of Bloomberg Intelligence covers all the banks for us. Go to BIGO on your Bloomberg terminal to find his research. We are almost, 25 minutes into the session here, and you do see losses on the S&P, NASDAQ, and Russell of more than 1%, about 1.33% for the two major indexes there as investors worry a little bit more about geopolitical tensions.
And what's happening in Japan. Yields are easing off after the finance minister told Bloomberg TV, told Hazelinda Amin that he wants markets to be more calm. Scott Besson also saying that he met with his Japanese counterpart, so clearly it is something that they are worried about.
Take
a breath, and we will take a breath and come back with more market action. And Nancy Tangler, that's coming up.
ओके गाइस, ये बाइंग वाले ट्रेड में ना नेचुरल गैस में जाना ही मत, लेट इट गो, जाने दो इसको। पुल बैक नॉर्मली आएगा तो वापस सेल कर सकते हैं, बाइंग वाले में मत जाना। ये बाइंग वाला ट्रेड इतने छोटे से पुल बैक के लिए इतना रिस्क उठाना ज़रूरी नहीं है, ठीक है। ये बाइंग वाला जो ट्रेड है नेचुरल गैस का, डोंट टेक इट। पुल बैक आ सकता है, पुल बैक आएगा तो री एंट्री वापस सेलिंग में कर सकते हैं, बट ये बाइंग के लिए मत जाना इसमें। पुल बैक के लिए डोंट बाई इट फ्रॉम हियर, नॉट वर्थ इट। 5 पॉइंट का एसएल, 9 पॉइंट का टारगेट, ठीक है। पुल बैक आता है तो वापस सेल जरूर कर सकते हैं, स्टिल ऑन रेजिस्टेंस। जो लोग सेलिंग में है अगर बुक करना चाहें तो कर सकते हैं, छोटा सा टारगेट था। पुल बैक आएगा तो वापस सेलिंग बनती है यहाँ पर, ठीक है। सेलिंग वालों का टारगेट हो गया। बाइंग में जो लोग जाना चाह रहे थे मत जाना बाइंग में, पुल बैक के लिए, उतने छोटे से पुल बैक के लिए वापस सेलिंग ही एक्सपेक्टेड है, थोड़ा टारगेट बड़ा रख सकते हैं आप। नीचे के जितने रिटेस्ट छोड़ के गया है वो रिटेस्ट करने आए तो वापस अराउंड 337 तक एक्सपेक्टेड है, जाना चाहिए। इस एरिया के आसपास एक वापस बाइंग एक्सपेक्टेड रहेगी मार्केट पुल बैक के लिए, ठीक है। नेचुरल गैस में री एंट्री कर सकते हैं वापस हल्के से पुल बैक में, बट बाइंग के लिए मत जाना बाइंग में इतने छोटे से लेवल के लिए। 340 पे शायद थोड़ा रुक सकता है. 340, 337. बाइंग का ट्रेड भी था बट वो पुल बैक में मेरे अकॉर्डिंग तो मत लेना. पुल बैक आज जरूर सकता है यहाँ पर नेचुरल गैस में, बट दैट इज वेरी रिस्की एंड SL is almost 5 point, not worth it. So be cautious.
very different than what we're looking at right now.
Yeah, it's a good point. I mean, Nancy, every day it's a headline of something impacting equities. I mean, today it is the self-imposed deadline, not self-imposed, the Trump-imposed deadline for banks to have credit cards capped at 10% interest rates. He was also talking about over the weekend about suing JP Morgan for what he claims is debanking him. How are you thinking about each of these things that comes from the president when it comes to individual companies? You kind of like go through your own, the equities you own and say, okay, Trump, I guess doesn't like Jamie Dimon, maybe I rethink that bank, or do you put it to the side as just noise and get back to some of the fundamentals?
It is noise. I hate it, Danny, because I think it sets a terrible precedent. This is not a country that's run off of state capitalism historically. I hated the NVIDIA deal, the AMD deal. I hated the equity stake that the government took in Intel because the money was lent on a very different premise. They diluted shareholders. Yes, the price has gone up, but I don't like any of it. And I think that's a policy issue. But in terms of investing, I think this creates opportunities. During the tariff tantrum, we were able to pick off some of these very high-quality tech names, which I think will continue to do well, even with higher interest rates. Remember, fortress balance sheets collect more interest income when interest rates go up, and that's what we saw with Microsoft and all of the above during the 2022 rate hikes. We did get a bear market for sure, but it was short-lived. So I think there's a lot to focus on if you look at the fundamentals and you try to tune out these ridiculous declarations that we're getting by the minute.
You make an important point, Nancy. It doesn't really matter how you feel about the policy as an investor. You need to do what's best for those for your clients, right? So how does an investor, I mean, especially if you suffer from acute TDS, how do you deal with this kind of market?
We've told our clients for decades not to invest their politics. I've had clients sell their equities when President Obama was elected. Another one sold them when President Trump was elected. It never works out very well. So you hold your nose. I turn on gratuitous violence when I get home just because the news is just too much for me all day long. But you do pay attention to the fundamentals. And during the tariff tantrum, we were able to buy Palantir at 88 or add to our holdings. NVIDIA at 108. Those look like good trades now, even with recent weakness. Tesla at 240. So you have to make those very difficult decisions in periods of volatility. And if nothing else, the Trump administration creates volatility, and that's an opportunity for long-term investors.
Yeah, it really feels like only today we're finally getting to some of that volatility. Hey, Nancy, such a pleasure to have you on. Thank you for joining us. And what's been a year so far? Nancy Tangler of Laffer Tangler. I just want to bring us some crossing lines coming across the terminal now. The Supreme Court has not ruled on Trump's tariffs today. Today was a potential ruling day. We did not get it. It's the third day we've done this of looking for a ruling. Will it be delayed into the summer? More rulings to come, I believe, later in the week. So we'll see whether we get any of that. In the meantime, here's what your equity market is doing. Still selling off, not as bad as it was, but we're still down 1.5% for both the S&P and the NASDAQ. As bond yields creep higher, the 10-year yield at one point was at its highest since last summer, since August, as Japanese yields hit their highest on record, as a maybe sell America trade starts to creep back in with a Danish pension selling their treasury exposures. Yes, only 100 million, but maybe it's a signal. But Matt, I mentioned this before. With this move, the NASDAQ will completely wipe out so far its year-to-date gains.
Yeah, I mean, it's been a pretty good investment, though, if you've held it over the last 3 years.
Yes.
I mean, it's only January 20th.
It does not feel like that.
So we're not that many trading days into the year. I will point out, though, if you're a bank charging more than 10% interest on your credit cards, after tomorrow, you will be in violation of the law, according to the president.
I was going to say that's an important caveat
of the United States. Let's get a look at some of the single stock stories this hour. Shares of ServiceNow fluctuating after a report that the software company signed a 3-year deal with OpenAI. It doesn't help today, down 1.3%.
And 3M, they delivered a profit outlook that fell short of Wall Street's expectations this year. They're looking to revamp their operation, shares getting crushed, down 5%.
Netflix amending its deal to buy Warner Brothers Discovery to an all-cash agreement now as the takeover battle with Paramount Skydance continues. We're going to give you more on that deal in just a few moments.
Still ahead on the show, we're going to head back to Davos for a conversation with Stripe co-founder John Calizon and the CEO of Google DeepMind. All those conversations coming up. This is Bloomberg.
What some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people. And there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content and never the two shall meet, but there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction might be using models to do so. Stamp tool in Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise.
With some fun along the way.
This is Bloomberg Surveillance.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest. And this is Bloomberg.
This week, live from the Alpine Mountains of Switzerland, is the World Economic Forum annual meeting in Davos. Bloomberg Television brings you unmatched coverage and conversations with world leaders, business executives, and billionaires as they navigate responsible AI deployment, economic expansion, and geopolitical tensions. Tune in for daily coverage all week. Context changes everything.
Let's get now to high interest. Look what's making headlines around the world. Japan's finance minister is urging markets to stay calm after heavy bond selling drove long-term yields to decade highs. She said Japan's fiscal policy remains responsible, citing low debt issuance, rising tax revenue, and the smallest G7 budget deficit. Katayama stressed a planned tax cut would be funded without new bond issuance. And President Trump is escalating tensions with major U.S. allies ahead of Davos, blasting France's Emmanuel Macron online and threatening a 200% tariff on French wine after Macron declined to join Trump's proposed Board of Peace. Macron rallied against the proposed tariffs during a speech at the WEF in Davos.
Without collective governance, cooperation gives way to relentless competition. Competition from the United States of America through trade agreements that undermine our export interests, demand maximum concessions, and openly aim to weaken and subordinate Europe, combined with an endless accumulation of new tariffs that are fundamentally unacceptable, even more so when they are used as leverage against territorial sovereignty.
By the way, that was an indoor speech, so nice shades.
Apparently he had a completely harmless eye condition, by the way, just for the record.
I get it, okay. Treasury Secretary Scott Bessent urged allies to stay calm over President Trump's push to acquire Greenland, calling fears of European retaliation hysteria. Speaking in Davos, Bessent dismissed talks of Europe dumping U.S. treasuries as illogical, urged countries to honor trade deals, and reaffirmed that America's commitment to NATO remains unquestioned despite tensions. So no one is questioning our commitment to NATO.
What an interesting Davos this is shaping up to be. Away from Davos, one of the top stories we're following this morning, Netflix has reached an amended all-cash agreement to buy Warner Brothers studio and streaming business, prepares to announce earnings after the bell today. Joining us now is Geetha Raghunathan, Bloomberg Intelligence media analyst. Geetha, what difference does it make to have, as expected, Netflix now ponying up cash?
Yeah, the difference that it makes, Danny, is that it really kind of assuages investor concerns about the falling Netflix stock value. So remember, after they announced that deal to acquire Warner for over $83 billion, the value of their stock has been consistently falling. And their previous deal was basically a stock and a cash mix. And really what they're trying to do here is not just assuage investors, assuage WBD shareholders, but also kind of speed up a shareholder vote, which should now happen in April. So really kind of getting things here on the fast track for the deal.
We were just showing a one-year chart of Netflix shares, and the interesting thing is not the move from 12 months ago, but the move from the peak. Thank you, Joe. Look at that peak, right? 33% we've fallen on Netflix since the peak in the shares. Obviously, that makes the deal worth less if it includes shares. So does this change, assuage those shareholders who would have gotten this paper? Are they much happier to have cash and therefore go along with the deal?
I think they definitely are, happier to have more cash. There's more certainty. Having said that, though, I mean, at the end of the day, Netflix is all about fundamentals, and of course, there has been, ever since the Warner Brothers deal was announced, Matt, there has kind of been this overhang on the stock because it really kind of muddles the narrative of what was otherwise a really clean story based on just its fundamentals and revenue and subscriber momentum. But coming back to, of course, we're dealing with a couple of different things here. There is regulatory uncertainty from the deal, whether it actually gets approved. And then if, let's say, even if it's approved, there is all the time, the fear of integration risk, execution risk. So there are lots of different things that still have to kind of be ironed out. But I think at the end of the day, if you're really looking at this as a long-term play, Netflix fundamentals are pretty strong. And they're really hoping and banking on the fact that Warner is only going to add to their engagement metrics, to their pricing power.
Doesn't that make this earnings awkward, though, Geetha? If Netflix comes out and says, look how strong we are, look at what our live sports did, look at how popular K-pop Demon Hunters is in the season finale of Stranger Things, can they kind of talk about that strength and at the same time say, it's not a needless spend to buy Warner Brothers Discovery? Don't the two, at least in the mind of shareholders, present a conflict?
Yeah, I mean, that has kind of been, the question. The question has been, is Warner really, has the deal been because of slowing growth? And if they come out and they report these blockbuster numbers, as you were just suggesting, then that actually just says that, no, our growth is absolutely fine. This is just us playing the long game, prepping for the future, prepping for a future when there can be AI disruption, when you do have, the possibility of short-form video from the likes of TikTok and Reels and YouTube kind of take over. We still have a great strategy. We have some of the best content, in the world. And so I think that actually then adds to their whole argument. So, it's a kind of a wait and watch here.
I wonder, if Netflix were to lose out to Paramount Skydance, how much of a competitive threat would the Ellison vehicle then be? I mean, does Paramount Skydance really become relevant in the streaming wars if they get Warner Brothers Discovery?
They definitely become more relevant than they are right now. But I'm not sure it's necessarily enough because they're going to be dealing with a whole lot of other problems, Matt. So, we're looking at leverage that's something like close to about 7 times. You do have the whole problem of integrating the two companies, dealing with different management teams. And then again, you have, Paramount Skydance, which itself is a relatively new company. Remember, they just acquired Skydance. This is a completely brand new management team. So they do have a lot to prove. It definitely puts them in a stronger position, but I don't think it makes their lead necessarily insurmountable.
Geetha, great to get some time with you. Thanks so much for joining us. Geetha Ranganathan there of Bloomberg Intelligence. Now, in Davos, Switzerland, Stripe co-founder John Collison is speaking at Bloomberg House with Emily Chang. You can watch this conversation and a lot more if you have a Bloomberg terminal. You type Live Go to get all of our live coverage from the World Economic Forum. This is Bloomberg.
Site to find something, you might have done a search or something like that. Now there's a different discovery engine. You can have many more targeted conversational searches, like, you know, you're looking for furniture and you're saying, okay, I want something that has kind of this feeling, and also, by the way, it should have these dimensions, fits within this space, and these are the, you know, manufacturers I like already. Like, none of that is stuff you can do with existing keyword-based search, and you're going to see the conversions based on that. And so we think it could be quite a democratizing force, because you could lead to discovery of lesser-known brands.
Now, some merchants are scared of getting sort of cut out of the equations. What kind of conversations are you having about that?
I think if your only value prop is aggregation and discovery within the current paradigms, you're going to have a lot of questions to answer. But if you sell based on the value of the brand and the product, and people have very strong brand affinity, that brand affinity is going to exist regardless of whether people go to your website or whether they, you know, buy it agentically or something like that. Or, you know, Amazon has invested for decades in their logistics and fulfillment footprint, and so they have, you know, phenomenal advantages here to be able to get the product to you very quickly for a low price. And so I think the discovery and aggregation advantages are going to change, but many businesses are differentiating based on different axes.
We've been talking a lot about sovereign AI and sort of the return of digital borders, or a desire, at least for digital borders. Is there such a thing?
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. Welcome to the world of decentralized finance. Bloomberg is covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. It's a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan, the fresh fish uses sashimi, but Peru use fresh fish, make the called the ceviche, cooked with the lemon juice. You never use the soy sauce. First time I eat this, kind of the, wow. So then after this one, my open eye more, my cooking style that change. Combine to Japanese style and another country food, then make novel style.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in Davos, Switzerland, and this is Bloomberg.
Let's get a check on the stock market right now, looking at a drop of more than 1%. And you can see, I guess I'll start on the winning side because it's easier here. Intel right now up more than 5%. So that's adding 1 1/3 points to the index. AMD also a gainer. You can see Micron, SanDisk, GE Vernova. So the usual suspects here are up along with ExxonMobil. On the downside, you've got NVIDIA, and it's off by more than 3% this morning. That's why we see the drop in the S&P, right? The S&P currently is off about 82 points, and NVIDIA makes up 16, 17 of those. Apple, Broadcom, Microsoft, Amazon, and Google. All of the hyperscalers, the whole AI trade, including Meta and Oracle and IBM, falling this morning. So that's a weight. If you go ahead and take a look at the industry groups, you'll see IT and comm services right at the bottom, or IT at the very bottom, and comm services right now down 1.25%, along with real estate and consumer discretion stocks there. On the upside, only energy with the rise in the oil price. That's why you see energy stocks and ExxonMobil up, but everything else is falling this morning as we worry about Greenland, clash with our allies in Europe, and Japanese bond yields. Coming up, we're going to look ahead to United Airlines earnings following a cautious profit forecast from Delta. This is Bloomberg Open Interest.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at front and center of what we're trying to resolve and understand.
Americans need to know they're at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
2026 for us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've been the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now of age. Now, as of right now, we are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Open, for example, and Novian. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth we've started with by empowering our customers across all our segments?
United Airlines set to report earnings after the bell today. The results coming after competitor Delta provided a profit forecast that fell short of estimates, taking a more cautious view for 2026. Joining us now is Sid Phillip, Bloomberg's chief global aviation correspondent. And Yeah, how do you expect today's results to go, and how did you see Delta's?
So analysts will be expecting to see what United forecasts for the year, because I mean United and Delta have both sort of they've sort of focused on premium customers as well as international travel. And so for analysts, they'll be looking to see what sort of signs domestic travel is sort of showing in terms of premium demand, as well as international travel amid all the geopolitical tensions, and what sort of impact those will have on demand as the year goes by. So Delta was sort of, their shares went down after reporting earnings because investors were concerned that they were too cautious, and we will sort of see what United sort of puts out to the market and what their expectations are for the year.
It's a good point about international travel, and wouldn't that be really bad timing if this is where we see an area of pullback? Because hasn't United, Delta, all of them just invested pretty heavily in that exact segment?
It is, and they've sort of, Delta even now talks about how international is sort of the growth opportunity for the future, and there is sort of a lot of demand, especially from Americans going on holiday in Europe and other places. And so whether that trend will continue into 2026 amid all this tension, it's a good question to sort of ask the airline CEOs.
The two things I always focus on, fuel and labor, obviously the biggest cost drivers for these airlines. We see fuel is cheap. How's labor look?
So labor is an interesting point for United, especially because they have they're still pending an agreement with their flight attendants union, which could add to their costs, especially at a time of this sort of uncertainty. I mean, we're not quite sure when they will reach a deal, and so we will be looking to see any updates from the company about what the timeline for that deal and that negotiation is.
So the other thing that's happening, Sid, in your world is this spat, this argument, this brawl that keeps happening between Elon Musk and the Ryanair CEO Michael O'Leary. What is happening there? And Musk, posting, should I buy Ryanair? How much would it cost to buy you? Is any of that, should we take it seriously? Might Musk try to buy a low-budget European airline?
I mean, it's anyone's guess at the moment, but I mean, it wouldn't be easy for Musk, especially as European rules don't allow control of an airline by a non-European entity. At the same time, I mean, Elon Musk is opinionated, and Michael O'Leary is also famously opinionated, and he's sort of got an opinion about most things in aviation and otherwise. And so this is an interesting battle, especially at a time when Ryanair is sort of doubling down on their low-cost business, sort of focusing on the fact that Michael O'Leary said that low-cost carriers, their customers don't expect free Wi-Fi on planes or Wi-Fi on planes. And so that's going to be an interesting situation, and it'll be interesting to see how that plays out.
He's wrong about that. I mean, I don't know about you, but when I'm flying on a plane these days, I expect them to have Wi-Fi.
On Ryanair, even?
At least good enough to check my emails.
I can't even recline my seat. I don't expect Wi-Fi.
I was going to say, Matt's not the customer for Ryanair. I mean, they talk about how their tickets are cheaper than pizzas. And so Ryanair is sort of famously known for charging for every single item, including... By the way,
I don't know if that's true, right? I feel like, well, I mean, it's been a while since I've traveled Ryanair, but like maybe 3 years ago it was not cheaper than a pizza. True.
I mean, they also tend to fly to airports where no other competition exists, and sometimes the airports are not quite where they are.
I'm looking at actually, I'm surprised that Ryanair stock has done better than Tesla stock over the past 5 years. I always look at a 5-year chart because the comp function defaults to 5 years. Ryanair total return 93% in the last 5 years, and Tesla only 50%. Now, okay, Ryanair is a 30 billion euro company, and obviously Tesla is a $1.5 trillion company, so it's a huge difference. But Michael O'Leary's done a pretty good job.
He has, and he's sort of in line for this major bonus package, because he's managed to get the shares up 55% just last year. So for Ryanair, all this thing about buying Tesla, Elon Musk buying out Ryanair is great for the stock because it drives up the share price, and O'Leary is further on track to collect his big bonus.
Not as big as Elon Musk's bonus.
Literally no one's is as big as Elon Musk's bonus. I think that's fair. And any more opportunity here from Michael O'Leary, because he is objectively hilarious. He said, thank you so much for joining us. We'll keep an eye out for those United earnings later today. That's Sid Phillip from the Bloomberg Aviation team. A check on your markets this morning. We continue to sell off, down by more than 1% for all the major indices, but not as bad as we have been. Still down 1.1% for the NASDAQ. What's leading this? Is it a renewal of a Sell America trade with Trump Trump's threats about Greenland growing, leaked texts, concerns in different speeches. Scott Besson emphasizes that, yeah, this is important to us. Or is it the Japanese bond market with JGBs trading at a record high, leading Japanese investors to repatriate and 10-year yields higher by just about 5 basis points, Matt?
Yeah, I mean, we're still so close to record highs, right? 69.85, I think, is the record high.
Sounds
we're
right.
at 6,900.
But no one's hedging this thing, apparently. So the pain trade
but
looks like it's down.
Even the blowout in yields is it's less than 5 basis points right now, right?
Yeah.
The VIX isn't even over 20.
But don't you think we're just like so primed by the lack of volatility that 1% or a 5 basis point move, we're like holding our chairs for life?
I tend to feel like, a lot of journalists are like waiting for this to happen and saying like, we're on the verge of the Sell America trade, but it's not happening.
No, it's not. 1% is not it. Or $100 million worth of treasury sales.
Yeah, exactly. Not yet. Until the Norwegian central bank or sovereign wealth fund starts to sell its equity stakes, I think we're going to be okay. Let's take a look at some of the single stock stories moving this hour. Intel is one that you may have noticed getting a big boost today, up 6.5%. Upgrades from HSBC as well as Seaport, the Hong Kong Shanghai Banking Corporation saying agentic AI is driving upside to server CPU demand. From Intel? Okay.
Guess so. Gold and silver miners, those are rising in today's trade, along with precious metals as safe haven assets surge. Matt?
Some regional bank earnings out this morning. We've been telling you about them. KeyBank. The forecast apparently underwhelmed, but that doesn't matter anymore. Investors are bidding the stock up more than 1%. The same is true with U.S. Bancorp. Their outlook topped estimates. Fifth Third came in line with results, but all of these shares have been moving kind of in lockstep. So they were all down earlier. Now they're all up.
Still ahead, we're going to have more from Davos. That includes conversations with the CEO of Google DeepMind. We head back to Bloomberg House. That's after this break. You're watching Bloomberg Open Interest.
The game here is understanding. These digital assets have the ability to change the payment landscape of the world, and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoins?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need, because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every weeknight. Balance of Power, weeknights at 10 p.m. London time, only on Bloomberg. Technology is embedded in every aspect of our lives
and laying the foundation for the future.
From finance to defense, AI to entertainment,
and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Annabelle Drewlers in Hong Kong.
I'm Sherrian in Tokyo. Watch Bloomberg Tech Asia. New episode Friday, only on Bloomberg Television.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Let's get back to Davos, Switzerland. The CEO of Google DeepMind is speaking at Bloomberg House with Emily Chang. Let's listen in.
Between us, we've invented most of the breakthroughs that the modern AI industry relies on now. Obviously, transformers most famously, but AlphaGo, deep reinforcement learning, these things. And we have these incredible product surfaces, billions of user services that are natural fits for AI, actually, from search to email to Chrome. And but it's just getting all of that together and organized in the right way. And I think we've done that in the last couple of years. And there's still a lot more work to do, but I think we're starting to see the fruits of that.
If you think you have an advantage, how big do you think your advantage is? How long does it last?
Well, I think everything starts with research, in my opinion, and the models, especially being state of the art on all the different benchmarks, and that's what we focused on first when we put Google and DeepMind together. And I think with the Gemini series, we're very happy with how that's going. There's a lot more work to do there, but I think we're the only organization that has the full stack, from the TPUs and the hardware, the data centers, the cloud business, the frontier lab, and all of these amazing products that can, kind of natural fits for AI. So really, structurally, from first principles, we should be doing very well. And I think there's actually a lot more headroom to come from here.
I wonder what a day in the life of a frontier model leading AI CEO is like. Like, I've read that you do most of your thinking between 1 and 4 a.m.
Yes, that's right.
Is it ever not a code red inside? Do you ever feel comfortable?
No, you never feel comfortable. I mean, we try, code reds are for very special circumstances, but it's always, for the last, I would say, 3-4 years, it's been unbelievably intense. And, 100-hour weeks, 50 weeks a year, and that's the norm. And I think that's what you have to do at the forefront of this unbelievably fast-moving technology. It's ferociously competitive out there, maybe the most intense competition there's ever been in technology, and the stakes are incredibly high, AGI and all of that can mean. So commercially, scientifically, and then if you add all the excitement of what we're doing and using it as my passion, as you know, is exploring scientific problems with AI, accelerating scientific discovery itself. This is what I've always dreamed about, and I've worked my whole life on AI towards this moment. So it's sort of hard to sleep because there's so much work to do, but also there's so much exciting things to look into and to push forward.
I know you're very focused on AI driving scientific progress, discovering new materials. Even we've seen now Gemini being integrated into humanoid robots. Is the AlphaFold moment for the physical world and AI here? What is that, and what does that look like?
Yeah, I spent a lot of the last year actually looking very carefully into robotics. I do think we're on the cusp of a kind of breakthrough moment in physical intelligence. I still think we're about 18 months, 2 years away from we need to do more research, but I think the foundation models like Gemini show the way forward. From the beginning, we made Gemini multimodal, so it could understand the physical world for multiple reasons. One was so we could build a universal assistant, maybe that exists on your glasses or your phone, that understands the world around you. But of course, a second use of that would be for robotics.
So what does that moment for the physical world look like?
I think it's having robots, reliably do useful tasks out in the world. And I think there's a few things holding that back still. Part of it is the algorithms are still not quite there. They need a little bit more robustness. They have to work with less data than you get for the LLMs or the models that work on just digital realm. You can sort of create synthetic data. It's a lot harder to make that kind of data. And there's still sort of some problems in the hardware that are not solved, specifically things like the arm and the hand. Actually, when you look into robotics very carefully, you get a newfound appreciation, at least I did, for the human hand and how exquisite evolution has designed that. It's incredible. And it's very hard to match the reliability, the strength, and the dexterity that the human hand has. So there's still quite a lot, in my opinion, pieces that put together, but there's very exciting things. I mean, we just announced a new deep collaboration with Boston Dynamics. They've got some very exciting robots in Hyundai and actually applying it to automotive manufacturing. And we'll see over the next year how that goes in sort of prototype form. And then maybe in a year or two, we'll have some really impressive demonstrations that we can scale up.
A year ago, DeepSeek seemed cataclysmic for the West. Now, a year later, it's quiet. China seems to have been quieter.
Yes.
Has your opinion on competition from China changed?
Not really. I mean, I didn't think it was cataclysmic in the first place. I think it was a massive overreaction. In the West, it was impressive. And I think it shows that the Chinese are very capable, the leading companies. I think companies like ByteDance actually, I would say, are the most capable. And they're maybe only 6 months behind, not 1 or 2 years behind the frontier. So I think that's what DeepSeek showed. Some of the claims were over-exaggerated about, you know, the amount of compute they used and being so minimal and so on, because they relied on some Western models and also fine-tuning on the outputs of some of the leading Western models. So it wasn't sort of de novo. And the other thing I think so far is not, you know, yet to be seen is, can China actually, the Chinese companies innovate beyond the frontier themselves? So they're gaining, they're very good at kind of catching up to where the frontier is and increasingly capable at that. But I think they've yet to show they can innovate beyond the frontier.
You helped define AGI. You have said we have a 50% chance of getting there by 2030. Is that still your timeline?
It is.
And is AGI still a useful target for you?
I think so. I think it's a very, that is still my timeline, and it's a little bit longer than some others that some of my peers that you'll hear. But my bar is quite high. It's the ability to, you know, a system that exhibits all the cognitive capabilities humans have, and I think we're still clearly quite far from that. That means, you know, in things in like scientific creativity, not just solving a conjecture or solving a problem in science, but actually coming up with the hypothesis or the problem in the first place. And as any scientist knows, finding the right question is actually often way harder than finding the answer. So I don't, you know, it's not clear that these systems have that capability yet. In fact, they definitely don't right now. I think they will eventually, but it's not clear what's needed still. And there's things like continual learning, you know, online learning, going beyond what they've been sort of trained for, and then they're static out in the world. They need to learn on the fly. So there's quite a few, in my view, missing capabilities that are quite critical to what I would regard as an AGI system.
Google's a major investor in Anthropic. Dario was here earlier today. Do you agree or disagree with his prediction that AI will wipe away 50% of entry-level white-collar jobs in 5 years?
I think that's also my timelines and my view on that would be a lot longer. I mean, I think we're starting to see maybe the beginnings of that this year in terms of maybe entry-level jobs or internships, those types of things. But I think we would have to solve a lot more of this consistency that AI doesn't have right now. I call it jagged intelligences. We're very good at certain things, and it's very poor, the current systems, at other things. And if you want to offload or delegate an entire task to, say, an agent, rather than having what we have today, which are more like assisted programs, you're going to need a lot more consistency across the board. It's no good for it to be good at 95% of that task. You need it to be good at the whole task for you to be able to actually just sort of fire and forget on it. So I think there's still quite a lot more to be done before we'll see that kind of disruption.
But that kind of disruption will happen.
I think eventually, sure. I mean, in the limit with AGI, you know, if you have systems like that, I think that changes the whole economy, actually. It's way beyond the question of jobs. I think potentially if we build it right, we're in a post-scarcity world where we've solved some of the kind of fundamental root nodes of the world, like energy sources, new, clean, renewable, basically free energy sources. If we solve fusion, something like that, with the help of AI, new materials, I think we'll be, you know, 5-10 years past AGI, we'll be in a radical abundant world. And so what does that mean with, you know, to the economy and how society works, actually?
Before we get to a post-scarcity world, though, if we get there, there is so much anxiety about what happens in between. You know, I'm a mom. I know you have kids. Like, what scares you most for them? What do you talk to them about? What do you tell them that's coming? I mean, you know, I've just heard so many things. Oh my gosh, for college graduates are going to have such a hard time.
Well, I don't know about that. Look, I think it's going to be an age of disruption, just like the Industrial Revolution was. Maybe 10x of that, which is kind of unbelievable to think about, and 10 times faster. So I usually describe it, it's going to be 10 times bigger and 10 times faster than the Industrial Revolution.
To your
so 100x.
Okay.
So 100x of it. No, I say this to everyone, but I think that comes with it huge opportunities. And I also am just a big believer in human ingenuity. We're extremely adaptable because our minds are so general. You know, the human mind is very general. We've adapted. Look at the modern world around us. You know, our hunter-gatherer minds have managed to build modern civilization. So I think we'll adapt again. I think it's a little bit unprecedented because of the speed of it. Usually it takes 1 generation or 2 generations for a transformation like this to happen, and the magnitude of the transformative power of this technology. But I think the kids today, you know, I'd be encouraging them to get incredibly proficient with these new tools and native with them. And they're almost equivalent of giving them superpowers, you know, in the creative arts. That you could probably do the job of, you know, what would have taken 10 people in one. And I think that means, you know, if you're entrepreneurial, if you're creative with game design, films, projects, you can probably get a lot more done and break into those industries a lot more easily than you could in the past as, you know, a new upcoming talent.
Some folks have advocated for a pause to give regulation time to catch up, to give society time to sort of adjust to some of these changes. In a perfect world, if you knew that every other company would pause, if every country would pause, would you advocate for that?
I think so. I mean, I've been on record saying what I'd like to see happen. It was always my dream of the kind of the roadmap, at least I had when I started out DeepMind 15 years ago and started working on AI, you know, 25 years ago now, was that as we got close to this moment, this threshold moment of AGI arriving, we would maybe collaborate, you know, in a scientific way. I sometimes talk about setting up an international CERN equivalent for AI, where all the best minds in the world would collaborate together and do the final steps in a very rigorous scientific way, involving all of society, maybe philosophers and social scientists and economists, as well as technologists, to kind of figure out what we want from this technology and how to utilize it in a way that benefits all of humanity. And I think that's what's at stake.
A very existential conversation down at Bloomberg House. That's the CEO of Google, DeepMind, speaking with Bloomberg's Emily Chang, and you can continue to watch that conversation and more at LiveGo on your terminal. Coming up, we're going to set you up for the trading week, which includes President Trump's speech in Davos tomorrow, the market-moving event of this week. We'll have that coming up next. This is Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Welcome to the world of decentralized finance. Bloomberg is covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays only on Bloomberg.
In case you missed it, on the pulse.
Markets like oil, you got the short, 2 weeks ago it was 230 million barrels short, bigger than what the glut is that's floating out in the South China Sea in these dark fleet ships. So the market going in is record short. Demand is not slowing down, it's picking up, and geopolitical risk is at, I would say, an all-time high. That's a recipe for a spike in prices right now.
Where do you see the next risk?
Basic commodities and affordability, starting to put pressure across the interest rates and everything like that. And the curve is beginning to steepen on the yield curve. And then you got to ask, as the yield curve begins to tip out and you start to see higher interest rates further out on the back end, are people going to be willing to sell these commodities? It starts to become even that much more riskier as your underlying cost structure of the economy changes, and a re-rating of real assets. And it's
like a shock.
It's a shock.
Don't miss the Pulse, live every weekday.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
We want to give you a look at what's ahead for the markets this week. Netflix and United Airlines reporting results, as we've been telling you, after the closing bell today. Tomorrow, President Trump is set to speak in Davos. Plus, we're on watch for a potential Supreme Court ruling on tariffs. And as of tomorrow, it will no longer be legal for banks to charge more than 10% interest on credit card balances. Thursday, we get PCE, jobless claims, and earnings from Intel. And that stock has been one to watch today. Finally, on Friday, a BOJ rate decision. And, it's pretty incredible how much yields have gapped higher, Danny, on JGBs. One of the two things that's obviously we've focused on today, but obviously for us, Greenland is more interesting, I guess, because it's the U.S. kind of turning on its own NATO allies.
Sure.
On the other hand, for financial markets, the JGB yield is equally important.
And maybe even more important, because we have learned that with every Trump threat of tariffs, that you would get hurt if you sold on that. You would miss on eventual gains and rebounds. But with the 30-year yield, you are seeing U.S. bond markets move, and it's impacting stocks. Stocks are still up, still off about 1% so far this morning, both for the S&P, I think even more for the NASDAQ.
All right, coming up tomorrow, Lori Calvasina joins us of RBC Capital Markets. Always a fascinating conversation. She'll be with Nathan Hager on Bloomberg Radio, I imagine, first. David Lefkowitz joins us from UBS, and our Davos coverage continues. We'll bring you President Trump's special address at 8:30 a.m. New York time. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every weeknight. Balance of Power, weeknights at 10 p.m. London time, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Netflix reaches an amended all-cash agreement to buy Warner Brothers Discovery's studio and streaming business, aiming to expedite the sale.
Plus, we bring you some of our top tech conversations from the World Economic Forum, CEOs from G42, Anthropic, DeepMind, and many more.
And VC firms continue piling into defense tech. This as geopolitical tensions escalate between the US and Greenland.
And that takes us to the markets, Ed, because the tussle over Greenland, the concerns around further tariffs on Europe and what Europe's reaction to the United States might be has got volatility higher and risk assets lower. We're selling America again. NASDAQ off by 1.2%, having its worst day in over a month. The S&P 500 wipes out its gains for the year, and you're seeing money move into the havens such as gold. Ed, what are you looking at underneath the hood?
I'm looking at Netflix reaching an amended agreement with Warner Brothers Discovery for an all-cash offer to buy the studios and streaming businesses. And remember, the plan is for them to then spin off the legacy networks. And this was the overhang. Paramount's argument was that its bid was superior because of the stock component that had been in Netflix's initial offer. Bloomberg reported last week that this was going to happen, so it's confirmation. That's where the names involved are trading. There's still a lot more to come, of course. Let's get the reaction and analysis to the new offer with Geetha Ranganathan from Bloomberg Intelligence. And you write two things in your research. The first, that this ramps up the pressure on Paramount, Geetha, but also it raises the stakes for Netflix. Let's start with why you think this ramps up the pressure on Paramount.
Yeah, this really ramps up the pressure on Paramount because really the ball is now in their court. They've been arguing for the longest time that the Netflix offer obviously is not that great because it had that stock component. Now obviously Netflix making it an all-cash deal. And now really what this hinges on is the value of the cable networks business. So remember, Netflix is only buying the studio and streaming assets. There is still that cable networks business from Warner, which they expect to spin out. And if you read a filing that was put out by Warner today, they have those cable networks valued anywhere from about $1.50, depending on how you value it, per share, going up to as high as about $7 a share. So again, I think they believe that they can actually extract more value if they go ahead and they complete that spin out. So now really all of the this is really kind of up the ante for Paramount. They have to raise their bid significantly, I would think, in order to sway Warner's board.
Either you think $32 is the magic number. Why?
I actually think, so 32 we think is, a starting point to get Warner back to the board. Just kind of looking at the value of the networks, looking at possible, termination fees, financing costs. But really, again, we think that, Warner really looks at its cable networks business. Yes, there is no doubt that this is a declining business. It faces a lot of secular pressure from cord cutting. But at the same time, I mean, they do have some great assets. They have international exposure. They can they can possibly sell CNN. So they think they can extract a lot of value, which is why we think Paramount might need to go up to about $34 to fully kind of get on board.
Geetha, again, Netflix adjusting to an all-cash offer in part because its own stock that was part of its initial offer has been under pressure since this all started. We get earnings after the bell. What are you expecting to hear from Netflix, and what do investors need to hear to give them confidence that this is the right path forward?
Yeah, what really investors need to hear is, first of all, I think everybody's looking for really good 4Q numbers, and that should, I think that should absolutely, Netflix would absolutely deliver on that. But I think the major thing that investors are going to focus on, Ed, is going to be guidance for 2026. The magic number that consensus is looking at is 13% revenue growth. Should Netflix guide to anything lower than that, I think they are going to be in trouble.
Geeta Ranganathan, it's always great to get your take and your analysis, which is so instant when we have this breaking news. We appreciate it from Bloomberg Intelligence. Let's stay with the context of earnings, with where Mag 7 names are, whether they're set, of course, to begin reporting next week, as the big ones like Microsoft, Tesla, Meta kicking things off on Wednesday. But, of course, Netflix is tonight. Tiffany Wade, Columbia Threadneedle, Senior Portfolio Manager, joins us as we are on the cusp of earnings and as geopolitical headwinds seem to just shift the narrative entirely. When you see down days like today, should people making the most of it, buying into weakness?
I think that's the case. The backdrop for stocks still looks very good. Obviously, the headlines over the weekend are creating some volatility, and I'm not surprised to see some selling, just given stocks have been very resilient. But the backdrop for the economy, and I think the market is still very strong. So, yeah, I think this should be an opportunity. And then, earnings coming up will bring the focus back to fundamentals.
Are the fundamentals good?
I think they should be pretty good. Demand, especially, you mentioned the Mag 7 and the hyperscalers. I think we're going to see great numbers out of those companies. Importantly, I think we'll probably continue to see very strong CapEx numbers, which is important for a lot of the tech sector. So I think those should be good indicators for the rest of the market.
The reality right now, Tiffany, is that tech's the big underperformer in the session, right? It's a moment in time, but the S&P 500 has wiped out its gains from 2026. This is escalating, not de-escalating. Where do you expect markets to go from here based on the headlines that have come out from President Trump and what's happening with Greenland?
Yeah, I think we could see some more consolidation, maybe a few points lower in the market. Certainly volatility might lead to additional selling. But again, I think this is a good opportunity. And as we get farther into earnings, I think things will stabilize.
The biggest declines are in the biggest names, some of the Mag 7 names. Is that just general sort of anxiety, geopolitical anxiety, as opposed to some direct read-through where if this tariff threat is enacted, it is those names that are hardest hit?
I think that's fair for today. I think it's just a general selling of the market. We're not seeing additional selling in names that might be hardest hit by the tariffs. We don't have a ton of additional details on what these tariffs might look like. So I think this is just a reflection of broader selling in the market that's hitting the largest names the most today.
Some are getting love. Intel is actually getting love at the start of the year more broadly. We seem to be betting once again, not just on the GPU furor, but also CPU furor and everything around AI. And they still going to be a winners, and how nuanced do you need to get on name by name?
Yeah, I think we're definitely seeing people try to pick spots outside of the main winners so far. So outside of the NVIDIAs and the Broadcoms, trying to look for other ways to play the AI trade. Intel's been a case of that. We've seen the semiconductor equipment stocks have done well so far to start the year. The memory stocks are also ways that people have tried to play this sort of broadening AI exposure. Intel, I think, is a trickier one because they do still have trouble with their foundry business. But I think there's definitely some other opportunities where investors are looking for other ways to play the AI trade.
Are you looking at other ways to play the AI trade? Like NVIDIA is such an important part of some of the portfolios you run. Should people be expanding, or are the still previous winners going to keep on giving in 2026?
Yeah, I think the fundamentals for NVIDIA are still very good, but I think it makes sense that people are looking for what the next leg of the value trade may be for AI. So we're certainly looking at other parts of tech like the semi-cap equipment companies, but also companies that are involved in the infrastructure build-out for AI, so things like electrical equipment.
Tying that all together, please, Tiffany, then, next week is huge. What are the data points that you look for when those biggest technology names have earnings? Of course, we've studied capital expenditure closely, but we're trying to gauge this time, like, when does it transition to you guys saying we need to see really big top or bottom line growth to feel confident that this AI thing is real?
Yeah, I think especially for the largest hyperscaler names, we need to see continued acceleration and growth of the cloud businesses. And then we also need to see the CapEx numbers remain stable or higher for the year. And I think those are kind of the two large indicators that we'll be looking at from those companies in particular.
Which of the world's technology companies are you going to be paying most attention to, Tiffany?
I think in the near term, it's the Mag 7 and especially Amazon, Microsoft, Google, and then Meta also, which had a big CapEx announcement last quarter.
That's
so
all
interesting to see what they have to say. Yeah,
I mean, we had nice tea leaves already if you're looking at earnings from TSMC, and that's something that you've been looking at, semiconductor equipment manufacturing. How much resilience did you hear from that company, and how much do you just put AI bubble worries to one side?
Yeah, I mean, they commented that they don't think that there's a bubble in AI, that they're seeing a ton of good demand from their customers. And I think that's reflective of the entire ecosystem for AI right now. And that's a great indicator for, again, like you mentioned, the semi-cap equipment names, and also a good indicator of demand we're seeing from memory companies, which are part of the value chain as well.
Tiffany, one of the things that's come back out of Davos is the idea of whether America should or should not allow technology to be exported to China. You know, when you're coming up through the ranks of Bloomberg Television, you kind of learn about China as the engine room of the world economy. And I've always been curious to ask you how much you worry about that, the balance between need to accessing that market and the competitive risks in exporting technology and national security risks to a market like China.
Yeah, I think this is a very tricky one, right? Because we want to keep our dominance in AI and technology and development of new technology, but we also don't want to force China's hand to sort of replicate some of our technologies or develop their own technologies. So keeping them, to some extent dependent on our companies is also an interesting balance to strike. So honestly, this is a very tricky one to figure out.
Tiffany Wade of Columbia Threadneedle, great to have you on Bloomberg Tech. Thank you very much. Now, Bloomberg is in Davos this week, speaking to leaders across finance and tech at the World Economic Forum. Coinbase CEO Brian Armstrong is speaking with Bloomberg's Emily Chang. Listen to this.
About the flight risk concern.
Yeah, so that's certainly one of the core parts of the debate. I think that some of the bank CEOs I've spoken with have kind of said, hey, we have this really high regulatory burden for being a bank, and what you're doing kind of looks like a bank, and so we think it's super unfair. You should have to have a bank license too. And what I tell them is, well, we're not doing something very important that you do. We do not do fractional reserve lending, which means, for those who don't know, at a bank you deposit your funds. They're not keeping your money there. They're actually lending it out and earning interest on that, and then they pay you a very small percentage of that. Like the average savings account makes like 14 basis points or something. And that's called net interest margin, and that's the whole bank business model. And so that's why they have such high regulatory burden, because there can be a run on the bank. Like your money is not all there. In a crypto world, there's a 100% reserve. So all your money is there. It eliminates this entire category of risk around a bank run. No such thing is possible if there's 100% of the money there. And so we don't need a bank license. We're regulated by the SEC, the CFTC. We have a national trust charter. Like there's different entities, and stablecoin issuers can operate under these models as well. And so we've kind of said, we don't need a bank license. That's what currently already exists in the law. The Genius Act even enshrined that further. And so there has to be some other solution here. How do we flip the banks from thinking of this as a threat to an opportunity where we can all go win?
Let's talk about the opportunity. We started off talking about how crypto has had a lot of momentum lately. A lot of that was when crypto was on a tear. The markets have definitely pulled back over the last couple of months. So here, I know this is always your favorite question, but is winter coming?
Well, there's always short-term fluctuations in crypto, but I think, if you look over the last 2 years, Bitcoin's up like 100%. Pretty great outcome for anybody who invested. I've said publicly I think that Bitcoin could hit $1 million by 2030. I still think that's true. So whatever happens in any given week or month, we try not to track it too much. It's the longer-term trend that I think is interesting.
So Bitcoin hit an all-time high last year, 125,000. What about 2026? Let's do a shorter-term horizon. Where is it going in 2026?
Well, I don't like to make short-term predictions because who knows? It's the market. Short-term voting machine, long-term weighing machine, or whatever. So, I don't think people should be like day trading, unless you really want to do that. I'm more of a buy and hold kind of guy for the long term. And I think that the cool thing about Bitcoin is that it doesn't, unlike fiat currency, there's no money printer. Right? So the supply of it is fixed. It's finite.
Coinbase CEO Brian Armstrong there, along with Bloomberg's Emily Chang. You can watch the full Fireside Chat. Just go to Live Go on your Bloomberg terminal. Meanwhile, coming up, we'll bring you our exclusive conversation with Peng Shao. He's the CEO of G42. We could discuss the UAE's role in global AI development. That's next. This is Bloomberg Tech.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
One of the metrics, one of the temperature databases went above 1.5, but there are about 4 or 5 others that still are below 1.5 for now. The IPCC has sort of projected that by early 2030s or thereabouts, all the other databases will consistently be above 1.5 for the entire year. So we still have that little bit of wiggle room, but I think some of the messaging is a bit mistaken. It's not that we passed 1.5, we're dead in the water. No. The assessment of the science has shown that if we go to net zero by 2050, there is still a chance of us peaking and coming back down to 1.5 or below by the end of the century. There is still hope to actually get back down to something of a livable world if we get our act together.
Bringing you up-to-the-minute aerospace news whenever and wherever it happens. I'm Guy Johnson at the Dubai Air Show, and this is Bloomberg.
Back to Davos now, where Bloomberg's Germano Versace sat down with Peng Zhao. He's the CEO of G42. They discussed building AI infrastructure and the UAE's role in the global AI development. They spoke on the sidelines of the World Economic Forum, of course, starting with the chip imports amid existing restrictions. Just take a listen.
In this complex world of AI, nothing is straightforward. But I must say that through the past half a year, since the May summit in Abu Dhabi, we've made tremendous progress.
Yeah.
I'm happy to share with you that the first batch of the most advanced AI chips will be shipped to the UAE probably in the next couple months.
And those are mostly NVIDIA chips?
They are mostly NVIDIA, but we also received the export license for Cerebus chip, which is a company we backed, a startup in California, and also AMD.
Yeah. Did you have to give security assurances to the U.S.?
Absolutely. In fact, it was not just a theoretical pledge. It's something we had to practice for the past 3 years now to physically demonstrate we have the ability to ensure the safety and security of this advanced technologies from the U.S.
I.e. that there's no possibility for that technology to be passed on elsewhere.
Cannot be transshipped.
Yeah.
There's no backdoor for remote access by unapproved parties, so on and so forth.
Yeah.
Yes.
Let me ask you a big picture question, which is the fact that obviously 2025 was a big year for AI just in terms of the mainstream discussion around it. And I think there are pockets of the market where people started to speak up and say...
Still, and just to be clear, that we have Europe buying Russian oil still 4 years later, they are financing the war against themselves. And just to be clear, that we have Europe buying Russian oil still.
As we discussed earlier, AI has entered our societies. AI is demonstrating it potentially can do many things humans are doing today. So job security is one concern. That's number one. Number two, as we have seen, AI does require so much electricity. Especially in the U.S., there are such debates already. Can these data centers eventually take power away from people who need it, to be left in the cold and have AI consume all the power? This is power concern, number two. Number three really is a concern about a global race? Can we be actually left behind? And what this means for government, for national security. I think all these are factors to cause certain pockets in the U.S. and elsewhere. People are confused, concerned, and asking for a pause. But I think it's a mistake. Because if we pause, say, in the U.S. or the U.S. ecosystem or U.S. allies, many other nations.
That was Peng Shao, CEO of G42, along with Bloomberg's Jemana Besetchi. Staying at Davos, Anthropic's CEO Dario Amodei is warning the Trump administration against exporting advanced chips to China, calling it a mistake with serious national security risks. He sat down with Bloomberg editor-in-chief John Micklethwait at Bloomberg House, where the discussion started on the state of China's AI models. Listen to this.
I think they never really caught up that much. So, of course, there was this huge excitement around DeepSeek, right? But, the truth was a couple things. One, those models are very optimized for the benchmarks. It's actually very easy to optimize a model for a finite list of benchmarks. When we go out into the world, right, when we're competing against other companies for enterprise contracts, we see, just honestly and candidly, we see Google and we see OpenAI. Every once in a while, we see a couple other U.S. players. I have almost never lost a deal, lost a contract to a Chinese model.
But now you have the Trump administration, and I think you've already protested about this, giving high-speed chips, NVIDIA chips, to the Chinese?
That's right. That's right. The thing that is holding them back, and they've said it themselves, the CEOs of these companies say it's the embargo on chips that's holding us back. They explicitly say this. And now, indeed, there are some policies, and I hope they change their mind, to explicitly send not quite our latest generation of chips, although it was reported that even that was being considered, but the generation of chips that's just one back, that's still extremely powerful. And we are many years ahead of China in terms of our ability to make chips. So I think it would be a big mistake to ship these chips. The analogy I thought of, if you think about the incredible national security implications of building models that are essentially cognition, that are essentially intelligence, right? I've called where we're going with this a country of geniuses in a data center, right? So imagine 100 million people smarter than any Nobel Prize winner, and it's going to be under the control of one country or another. So I think this is crazy. I think it's a bit like I don't know, like selling nuclear weapons to North Korea.
Anthropic CEO Dario Amodei there speaking with Bloomberg editor-in-chief John Micklethwait. Coming up, just check out this list of investors backing the new startup Humans And. We'll find out what's driving the excitement and the huge funding round for a company fresh off the blocks. This is Bloomberg Tech.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
2026 for us is the year that everything just comes together, right? We don't just move your money. The last decade, literally, we've been doing the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now of age. Now, as of right now, we are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Open, for example, and Nuvia. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth further with by empowering our customers across all our segments?
be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Humans and a new startup building a frontier AI lab has raised a $480 million seed funding round at a $4.48 billion valuation, an unusually large haul for a young startup. Bloomberg's VC reporter Natasha Mascarenhas joins us now. What is the news here? I mean, is it the seed round or the valuation? What do we need to know?
Yeah, I mean, this is one of the largest seed rounds in private market history. I also like to say this is the new normal for frontier labs. This is 5 top researchers and technologists leaving Anthropic, XAI, Google, coming together and launching, honestly, a competitor to their previous employers in a new way. So to me, the news is that the AI bubble talk is at least, a step back for now, because we are seeing investors back these early companies at very high valuations.
And strategic investors like NVIDIA, for example, what new do we need in a frontier lab right now?
Yeah, so the real question that we have is, what does Humans and really going to launch with? We don't have a really strong idea of what their first product is going to look like, but to me, it's really being set up as the opposite of the set it and forget it agents. It's going to be more collaborative. When I spoke to the company, they said that it's going to be more focused on long-term outcomes for communities and individuals. And to me, that says, maybe there will be a chat interface down the road, but it won't be instant. It might be more focused on memory or collaboration. So what I'm watching is really to see if that's going to be the follow-on that they promised.
We just have 20 seconds, but I guess is the clue in the investors themselves?
I would say NVIDIA coming out as an early investor is all you need to know about how serious they're taking the compute needs of what they're going to do. So that's what I would watch.
Bloomberg's Natasha Mascarenhas. It's a great write-up. Thanks for coming and explaining it today. Meanwhile, coming up, Replit investor. Well, we know about their funding round of late. Well, Georgian is the key investor in that. Margaret Wu joins us now to talk about her new portfolio company, that's Dominion Dynamics, and why she's getting into defense tech. This is Bloomberg Tech.
Tariffs, I think, are probably the first time in my career I've had to deal with a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
bringing you up-to-the-minute news,
geopolitical news,
economic news,
up-to-the-minute global news,
Whenever, and wherever it happens.
in Washington, Buenos Aires, Argentina,
Sintra, Portugal,
Ottawa, Canada,
Bangkok,
Tehran,
Jackson Hole, Wyoming,
Windsor Castle, England,
the Circuit de la Sarthe in Le Mans.
and this is Bloomberg.
In case you missed it, on the Pulse.
Markets like oil, you got the short, 2 weeks ago it was 230 million barrels short, bigger than what the glut is that's floating out in the South China Sea in these dark fleet ships. So the market going in is record short. Demand is not slowing down, it's picking up, and geopolitical risk is at, I would say, an all-time high. That's a recipe for a spike in prices right now.
Where do you see the next risk?
Basic commodities and affordability, starting to put pressure across the interest rates and everything like that. And the curve is beginning to steepen on the yield curve. And then you got to ask, as the yield curve begins to tip out and you start to see higher interest rates further out on the back end, are people going to be willing to sell these commodities? It starts to become even that much more riskier as your underlying cost structure of the economy changes, and a re-rating of real assets. And it's like a shock. It's a shock.
Don't miss the Pulse, live every weekday.
Welcome back to Bloomberg Tech. A check-in on these markets that are under pressure. Worst day that we've seen in, well, at least a month. For the Nasdaq 100, we're off by a percentage point. S&P 500 erases all of its annual gains. We are selling off risk assets, whether it's bonds, whether it's the dollar, whether it's Bitcoin as well. We're off by more than 2.6%. Your flight to safety is in gold and metals. Why? Because of geopolitics. Worries about Greenland. Worries about a dial-up in tariff threats going towards Europe and what their response might be. You keep your eyes peeled on what's happening from the focus of geopolitics and President Trump. But move on to some of the individual names that are underneath the hood. Look, it doesn't help the Nasdaq 100 if you're wiping out $150 billion in market capitalization of Nvidia, having its worst day again in more than a month. But I'm also looking at some companies that still see love. Intel, Wedbush says we think that overall we're going to see earnings better than expected. We're seeing HSBC, Seaport, both saying the CPU side of the equation, the ideas of PCs, also the ramp up in Foundry are looking good. We are up more than 30% year to date for Intel. But I'm looking also at strategy that sells off the worst in a month, because Bitcoin's down, crypto's lower, and we're worried about the Banking Senate Committee looking at that market structure deal at the moment. Ed, what are you keeping an eye on?
Well, there's a lot of action in private markets as well. Toronto-based venture firm Georgian has led a $15 million